in the last few events that we've had. Do check your meeting requests. There are already several hundred meetings have been arranged for today. It's worked very well for many of our delegates, as I said, in recent events, and it's resulted in new connections, reconnections, new deals, new partnerships, new investments, resulting in significant value, actually, for the people who are involved. And it's a great way of getting the most out of today and in the most efficient way. Download the app from the App Store or Google Play and use the very easy to remember code of 2AD1SC. It's great technology, but they haven't worked out how to give you a decent password, but 2AD1SC. For those of you who aren't sure about what we do at FinTech Global, I don't believe you, but I'm going to tell you anyway. We provide market-leading RegTech intelligence to financial institutions. Actually, we provide it across all FinTech sectors. We do that through providing, I think, more news and research than anybody in the FinTech industry. We cover innovation, technology, industry trends, partnerships, who's doing what, who's buying what, who's selling what. We have advanced research capabilities in terms of databases, customized research, and we actually profile more RegTech companies in more depth by direct interaction with the company CEOs and business leaders than anybody else. So if you want more information, please do visit our websites, www.fintech.global or regtechanalyst.com. You will be surprised as to how much activity is happening in this industry, and amazed at what people are actually up to. So to keep in the loop outside of these events, please do switch on to those websites or sign up to the newsletters. In addition to the RegTech intelligence and the FinTech intelligence, we actually manage the world's biggest professional FinTech and RegTech networks. We've now got about over 300,000 relevant professionals in our network, and around 10% of those are relevant to the decision on buying RegTech solutions. So that actually means we've effectively got a distribution channel to over 30,000 potential clients and partners if you are a RegTech provider of solutions, services or products. And that enables us actually to work with quite a lot of RegTech companies and advisors by getting them on the radar screen of the right financial institutions. And that's worked very effectively. We actually call it an impact marketing solution whereby we can help you target the people that matter to you. The feedback we've had is phenomenal for quite a number of clients. We've had a 100% increase in inbound leads. It's resulted in multi-million-dollar sales, and all of them have actually talked about a multiple return on investment. So if you are a RegTech company or service provider, do have a chat with any of my colleagues at FinTech Global or RegTech Analyst, and we can talk to you, about how to make sure, if you are providing an innovative service, how to make sure that the right people know about it. We also actually run the world's lean online RegTech training course, which I'm surprised not a lot of people know about, since we've actually got users who've completed the course from over 100 of the biggest institutions. Unlike the academic courses that are appearing everywhere, it's industry focused. It's taught by professionals in the industry, so we've got leading presenters and experts, many of whom are actually here today, I'm pleased to say. It's up to the minute, so it's totally relevant to anyone in the industry. Yes, it's invaluable for anyone in compliance who needs to understand how their industry is changing, who needs to understand what the regulators want and how their competitors are potentially improving their performances. It's obviously relevant to people involved in the strategy function in financial institutions and those involved in innovation or digital transformation. But it's also highly beneficial, we found, to RegTech companies. It's a brilliant way of onboarding your staff to make sure they actually understand what's happening in the industry, to give them more credibility with their clients. If you'd like to know more, please either go to Google Professional RegTech Certificate. We'll send you a code so that those of you attending today can get a discount. But it's something I'd recommend, if not for you, certainly for your colleagues or your teams, to make sure the level of knowledge that you need is to the level where you want it. Bit of background just to set the scene today. RegTech is going through the roof. Whilst the rest of the world seemed to have slumbered over the last couple of years, RegTech has hit record levels. It doesn't go back to 2017, but actually if you include 2017, the last 5 years saw $33 billion invested in RegTech. Well, that's just third-party RegTech companies. There's obviously just as much, again, probably being invested internally within financial institutions and being provided by the big tech companies who do more than just a RegTech product. Last year, we saw an increase of about 140% in dollar terms, from 7.8 billion to 18.9 billion. And this year looks like we are going to be at around the same levels. In fact, the Q1 level of 4.2 billion is actually higher than last year. So this industry is motoring ahead, regardless of what else is happening. And a lot has happened in 2 years, and that's what we're going to cover today. Before we start, I'd like to get in your diaries our future events. For those of you that work on the broader end of regulation, whether that's related to governance or social impact or sustainability, then please do join us at our ESG FinTech Summit in a month's time. We're off to New York. We had a big event planned a couple of years ago. Unfortunately, that was pulled by COVID, but the demand there is bigger than ever. So please do join us at the RegTech Forum in September. And of course, on an ongoing basis, there is the RegTech certificate that I recommend you have a look at. We do actually have quite a lot more in the pipeline, but we will let you know about them nearer the time. And that brings us to today. To start off our amazing agenda, I can think of a better way of starting than to talk about the compliance leader's perspective. The panel discussion is called Reviewing the Regulatory Landscape and the Outlook for RegTech. I think we had a bit of a delay with some of our speakers having difficulties, and I think thank you for Jerome, who I think has just stepped in at the last minute, because I think Felix had an accident this morning, but thankfully I understand he's okay. It's my pleasure now to introduce the chair of the panel, Astrid Freyer, who is Head of FinTech at PPI AG, which is a payments, software and consulting business. Astrid has an amazing amount of experience in this industry. She's a FinTech investor at Early FinTech Ventures, CEO and co-founder of RegTech Berlin, head of the SAP Foundry, which works with startups, and over 16 years at Deutsche Bank as head of regulatory management group, amongst other things. So Astrid, it's my pleasure to welcome you to the stage. If you'd like to welcome your guests and take us through the first session. Thank you.
Yeah, many thanks, Richard. It's really a pleasure to be here again. I remember very well that I was here in 2019 when the Global RegTech Summit was kicked off. And of course, it was an in-person event at that point in time. Since then, a lot has changed. We already touched about it. On the one hand side, we have, of course, the big geographical and geopolitical changes. We have, of course, due to COVID, also a lot of acceleration. We see, especially with regards to RegTech. And we also see that with regards to, you could say, the spin-offs of these areas, there is a lot of things happening. And that's why I'm really privileged and honored to be here in order to kick off the first panel. I have fantastic panelists with me, as every year when Richard is doing these events, he gathers the industry leaders. And to dive right into it, I would ask our panelists to introduce themselves. Before we will go into the topic, I would also encourage you to ask questions. We will share some views in the first, let's say, part of the session, but then make use of the fact that it is a live event. It's for me already one of the third, fourth events here, and I see that it's picking up, so make use of this for your best interests. And to start with, I would ask Sabine to introduce herself.
Sure. So I'm very happy to be here again. It's my second time at the RegTech Forum. I'm Sabine Dittrich. Up until April, I used to work for UBS. I am a German lawyer, used to work for Freshfields, and then went into UBS and public policy, as well as governmental affairs and regulatory intelligence. So really have a quite broad regulatory background globally.
can move on to you, Jim.
All right, good morning. Good morning. My name is Jerome. I work for NICE Actimize. I look after the financial market compliance business for NICE Actimize in EMEA. I've spent the past 10 years of my life in Singapore. I'm French, obviously. It's easy for you to guess, I'm sure. And yes, I'm very pleased to be here today to talk about technology and compliance. This is what we do.
And we have Arindam with us.
Hi, thank you. Thank you, Astrid. Hi, I'm Arindam Gangopadhyay. Nice to see all of you, not the masks. It's been a long time we have seen people without masks. So I look after HCL's BFSI P&L here locally, and as well as globally. My team works with banking and financial services customers, delivering RegTech, of course, and other solutions as well. Very happy to be here, share my experiences, and also learn with you all. Thank you.
Hi, good morning, everyone. I'm David Cast. I'm the Chief Compliance Officer for HSBC's insurance and retail business. I've been at HSBC for coming up for 10 years. Before that, I did 19 years at Citigroup. So I don't look that old, right? I'm surprised. I walked in and everyone was wearing a suit, and I'm wearing my jeans. I left the suit at Canary Wharf this morning, so forgive me, panelists, for my dress down. But it's great to be here. Thank you.
Okay, I hope you can hear me well, since I have noise here. As you see, we have a variety of things we can discuss together, given the expertise here around the table. And to kick it off, I would like to ask you, what issues do you see in your respective roles on the top of the agenda? Okay, now that sounds better now. I would like to ask you to kick it off as a first question. What are the issues you see on the top of the agenda for compliance and RegTech leaders at the major financial institutions? And maybe we give it a start with Sabine.
Yeah, so when you look at the regulatory agenda in the EU and in the UK, probably was quite a significant change since the financial crisis. It's really at the moment about, I would say, ESG and digitization. So it's about innovation. It's about changing things and making things differently. So you see a whirlwind still of regulation on sustainable finance side. You see that the UK is trying to find its own way, basically, after leaving the EU. Digitization is a huge topic, also from a regulatory side, became even bigger during the pandemic for obvious reasons. And then you have still risk-related elements on the one side. So again, the review of what happened under COVID-19 and the market turmoil in March 2020. So you have these follow-ups by banking regulators in particular. And then you probably have a sort of competition here in Europe going on in terms of who's becoming the most competitive capital market. Actually, is it the EU? Is it still the UK? And how can you make it attractive actually in both instances? And of course, this is all like channeling ultimately into regulatory change that could be sort of important for RegTech solutions.
Of course, and I think, David, you will also have your views on that with regards to your role.
Yeah, Sabine, I think ESG is probably right up there. I mean, it's just every day there's more and more regulation. We're building frameworks at HSBC right now to manage that risk. We're upskilling our teams. There's an enormous effort underway to get people with the right training. And there are issues now. We see the thing that I'm communicating to my executives, there are issues, as we know, right? You read the papers, there are issues at other banks with regards to product greenwashing and the like. So I think that issue is definitely front of mind. I think COVID-19 and pandemic and obviously I work for a bank which is very Asia focused, so this is very much still an issue. So but as we went through the pandemic, there was a real innovation change in terms of, okay, how are we going to get to those customers? So we changed our risk appetite in terms of cross-border marketing, etc. So that was a really important focus area. I think I'll just add one to the sort of, if you're asking the question, what's front of mind, it's impossible not to talk about sanctions with what's going on with regards to the war at the moment. That's a very intense piece of work. I mean, I'm sure people in the room here are involved in that in your companies, but that's very intense, and it's different from what it was previously with regards to EU securities requirements, etc. So the game has changed a bit on that front, and that's very, very intense for us at the moment.
And Random, when we talked, you also mentioned some more areas.
Yeah. So what I would I've done IT all my life, so I'll take an IT practitioner's view here. Previously, all these compliances, it was more about being reactive to these, continuous compliance approaches across the banks. Of late, these are more around, predicting, preventing, doing more research, what's upcoming, be it in the ESG area, be it in other areas as well, and also reacting to, the sanctions. David, you talked about how quickly you turn around and make sure you cannot, you can sanction a set of organizations. You cannot sanction people. Now, who are the people getting deep into those layers of the connectivities, right? So how do we use data to make sure that those outcomes are there, the right outcomes come? Sometimes these wrong outcomes create bigger wars, right? So that's what I'm saying. The only thing I wanted to summarize here is probably the approach has become more proactive, and that's where RegTech plays a much bigger role, to predict, preempt, and prevent. And that's where I'll leave it for now.
Jerome, anything you would like to add with regards to the areas of priorities you see from your practice?
Sure. So, as a technology provider, obviously we can only echo what we hear from our clients, and your priorities are our priorities. And I guess we can summarize 3 priorities. The first one will be about innovation and efficiency. I guess all the compliance programs that we've been implementing and supporting for many years are reaching a stage where the compliance functions needs to be more efficient, more effective, and everybody wants to use innovation to reach that. Machine learning, AI, all these key buzzwords. And I guess it keeps the compliance functions very busy to try to adopt these new technologies in order to be more efficient. So this one area, I guess, which keeps the compliance functions busy. The second area, it is indeed about ESG. I didn't know that, okay? 3, 4, 5 years ago, when you're a technology vendor, you didn't really care about ESG, and it is your priority. So we have to think about, as a technology vendor, how can we help? We provide technology in the cloud. Yes, we can be more green, we can be greener on how we run stuff. But maybe also we can contribute to the ESG transformation of our clients by bringing more data points, because at the end of the day, you're going to need data in order to build the compliance program. So we are thinking about where we can help our clients to capture data in order to feed an ESG program, because it's the priority of some clients, clearly. And the third one is about complying. You still need to comply as a compliance functions, and as you said, new requirements keep coming, and what keeps our clients busy these days, it is the consumer duty. So it's very true it's very UK focused for now, but how do we make sure that we are selling the right product to the right customers, and putting the customer at the center of what you do seems to be a priority for some of our clients as well. So these are the 3 areas that we've seen, I guess.
Can I just add a couple more? So in terms of my business, so a global retail business, it's digitizing at scale. So so as a compliance function, how do we interface into that? How do we upskill the compliance function to work in agile delivery? This is really difficult because we're quite used to the waterfall approach to product governance and whatnot. So that is changing really fast, and the chief executive of the wealth and personal banking has made it an absolute priority that we will we will be an agile company in terms of how we change the bank. So, and the other point I would raise is just the growth in digital assets and DAX, digital assets and currencies. I think that is something we're just really trying to get our arms around. So that's something that, if there are questions on that from the audience, that will be interesting to hear.
Many thanks also for providing the ground for the topic which Jerome brought up about the innovative aspects of RegTech. And I think this is worth another round where I would love to have your views on which role can RegTech play here. I mean, Arinda mentioned it will play a big role, but now having set the scene with the topics which are on top of your agenda, what is your view with regards to the RegTech part to solve the issues mentioned here at the beginning of the talk? Arinda, you want to start?
So I'll go first. What I see from RegTechs is that gone are the days when you can actually pick up large, exhaustive, multi-country, multi-year programs, right, to do catch up to regulations. Now, what RegTech brings in is pure pointed solutions to real problems that you face. And as I said earlier, it's also to preempt and predict and prevent. These are all pointed solutions. So it also covers your ESG charter quite a bit. You don't need huge infrastructure-based solutions. It makes you greener as well. So these things combinedly, and probably the RegTechs are not spread across the domain. They're purely focused on specific issues to be solved and specific compliances to be catered to. So the specificity, the velocity, and also the green aspect of being nimble. So I think I'll summarize with those 3 points here as how they contribute.
And Jerome, you mentioned data as one area. Would you like to elaborate a little bit on that?
Yeah, sure. So RegTech, RegTech and data. RegTech is interesting because we are a traditional vendor, right? We've been here 20 years ago, so way before RegTech, way before big data, and a little bit before cloud. And I guess the RegTech forced the industry, our clients, and the existing vendors to innovate. I guess we had no choice. We had to accelerate the adoption of new technologies on the data side, for instance, or on the analytical side, because what I guess also what the industry is expecting, it is to benefit from these innovations, but because you need to benefit at scale, you need to also be careful on how you are partnering, because you can try plenty of technologies, plenty of new initiatives, but will you be able to deliver a compliance program at scale? That's maybe an area where RegTech has to think about, because being able to support a large organization at scale, that could be challenging for a small RegTech firm, and it's exciting because everybody wants to be part of it. So I don't know any compliance leader who doesn't want a RegTech branded program on his resume or on his LinkedIn profile, and it's exciting because it's real. You can try stuff. You can hire a couple of data analysts and start running some interesting machine learning algorithm to detect issues, or you can venture with a fintech company and deliver again an innovative program to support your onboarding or your compliance activities. So there are plenty of things to do, and I guess the RegTech brings a lot to the industry in general. Yeah.
Sabine and David, RegTech at scale, that was the word I would like to pick up. How do you perceive this from the perspective of especially your rather institutional roles?
Shall I go?
At scale, maybe you start.
Yeah, so the compliance department at HSBC is quite big. So, and it is absolutely focused on being data-driven and looking at technology to Jerome, you mentioned it. There's obviously a cost element to that as well, right? In terms of efficiency, we saw a massive growth post-financial crisis in the cost of compliance. So this is one solution to that, but it's more than that. So there's a couple of things which I think HSBC's done really well in most recently. In the financial crime space, it's sort of It's piloting the intelligence-led financial crime risk management, which some of you may have read about. There's been a couple of articles on it, but it's really game-changing, I think. I wouldn't say I'm an absolute specialist in that area, but it is game-changing. It's using AI, it's machine learning, it's using data in a way which hasn't been used before. So when I was walking in, I was thinking, is that relevant to the audience? And the opening comments actually did make me feel comfortable, because RegTech is not just about engaging with third parties, it's about what are we doing within the company. So we're doing loads of great work there on the financial crime side, and on the back of that, on the regulatory conduct side, we're also building conduct analytics capabilities. So again, Jerome mentioned it, it's detective, it's finding things that you can't find in without using data in that way and using machine learning. So that's really exciting as well. So yeah, there's a lot going on. I think one of the other challenges is, well, maybe we'll get on to challenges. I'll hold that thought.
But please, I mean, it's fair to mention the challenges.
Well,
as well.
challenges is obviously costs. You know, there's and you've got to. I think you need to focus your investment with the strategic priorities of the department and the businesses that you're stewarding, because you can just try and fix everything, and that's
Exactly.
not possible, right? We have to be selective.
Sabine.
Yeah, I guess when it comes to regulation, you probably have two different groups. You have regulation that's already there and that's producing data, like in big volumes, such as on the market and trading side, for example. So with all of the post-trade, pre-trade reporting requirements, you have this data out, and of course, pretty much from the beginning, like 5 years ago. So the question was already, what can we do with this data? What can regulators do? What can the firms do with the data to enhance our knowledge really about the market? And then the other group is, and you mentioned ESG as one of the big growth areas, basically. So on ESG, you have a lot of elements that are qualitative. Like you describe how you integrate ESG risk into products, into your processes. You need to think about how you shape your internal governance around ESG as a firm, basically. So a lot is qualitative description, but you need the quantitative side, of course. The quantitative side makes it really comparable, like more easily comparable, and it makes it more reliable at the same time. Now, when it comes to the data that's needed for that, first of all, you need to know what are the criteria for the data, basically. So you have things like the task force for nature-related disclosures, so TNFD. Now TNFD as a successor, if you want, or the second version of TCFD. Looking into what are the data points actually for that sort of risk. So not only climate risk, basically. So you need to think about how can you quantitatively measure basically that risk. And then once you sort of have this data, the data needs to be produced. So regulators are actually looking into, do we not need to regulate the data providers? Because it's really like that channel point, really. It's so powerful. These data providers are so powerful. Everyone needs the data. There are not so many out there, so they have a really market-dominating role most of the times. And then it's the data of quality, really, that they have, and what is behind it, and so on. So that's one thing from a regulatory side. And then the innovative side probably comes from, RegTech, so what do you actually do with the data? So if the data is reliable, how do you interpret it? How do you connect the data points that you have? And I guess that's a field, and really also for, RegTech or fintech solutions, really, on how to deal with the data.
Yeah, very true. You talked about the disclosure and the channels, and I can't keep thinking about how do we generate the data, and when you are interacting with your financial advisor or with your bank, you will use new channels that we didn't use 3, 4, 5 years ago. And these are data points. These are new data points that didn't exist like 3, 4, 5 years ago. And maybe because I've spent 10 years in Singapore, but you can get a mortgage using WhatsApp or WeChat. That was just normal. But how do we? There are plenty of interesting data points within a WhatsApp or WeChat message, right? Or within a Microsoft Teams conversation. So before analyzing the data, we have seen also over the past few years a lot of focus on generating more data points through these new communication channels where business is happening or disclosure is happening or transactions are happening also through these new channels. And that's kind of the foundation or the entry point of the rest of the activities that you're going to have to do later on. So capturing all these new channels and all these new data points within the communications, it's something that that was just huge over the past 2.5 years.
Can I just build on one point? Just the use of data and the ethics of using data. That's a big conversation within the bank. I was fortunate pre-pandemic I was in China in Shenzhen, and I won't name the company, but how they use data in that part of the world and how they interface with customers. I mean, they were basically that you would take a picture of, not a picture, you'd be videoing their face, and if the algorithms can tell if your eye starts flickering, you're not telling the truth. The ethics of using that is, and it's different in different parts of the world. It's just a whole minefield.
That brings me to two questions which came in from the audience. You mentioned data, you mentioned the challenges, you mentioned the channels, and all this creates, of course, a lot of questions in the end. And the question we have here is, how can RegTech avoid common mistakes which you are seeing? And this is very nicely connected to the questions, how can RegTech help cut through the doubts some firms have to digitizing their solutions? Any views on that?
Shall I go again?
Yeah.
So see, my learnings that I have had was the mistakes are not essentially mistakes. Those are part of iterations that you do, right? So there's nothing called mistakes in a compliance world. People might disagree, but I've seen this. These are all programs with good intent, programs to make sure that the organization is compliant. What happens is often your input criteria that she talked about is not jotted down properly. That's one. Secondly, that the data you are getting, there are multiple sources, jumbled up sources. It's not honest at the source. So it's all muddled up. So those are the things which impact. I also wanted to add one other thing. You talked about the channels. Now, there's a new age compliance scenario that we had 2.5 years till 2.5 years later, and now you have a new age ways of complying to regulations. In today's world, now we have whatever we couldn't even consider that a bank can do outside its premises and outside its network are all done in the bedroom or in your sitting room or on the dining table, right? So the processes itself has embraced a lot of change in terms of how they need to be resilient, how the accesses are still monitored, and all of these are happening because of first of all good turnaround and how we took the impact of the pandemic. But in addition to that, some great ideas that these RegTechs came up with, right? So these ideas were again solutions to a real problem that hit us, and we didn't have enough time, So this is a good thing that has happened. So the channels piece as well, the processes, how they are currently heavily resilient despite being remotely managed, is a good win. And I wanted to point that out here for the audience as well.
And you encourage people, of course, to go on that road, right, and not to feel disappointed if that doesn't turn out right initially.
I was just going to comment on one point, just on channels, and just the surveillance of those channels is a challenge, right? So as we start to, Jerome mentioned, getting a mortgage on whatever it's WeChat or WhatsApp or whatever in those parts of the world, but it's a real current issue that we're looking at. How are we surveilling as tightly as we need to, as the regulators would expect us to? And so that whole surveillance subject is still very relevant.
Yeah, we'll talk about surveillance a bit later, I guess. But definitely, and I remember in Australia, right at the beginning of the lockdown in March, very quickly the regulator issued a letter saying, no matter if you are working from home, you still have to do the same, right? In terms of recording, in terms of monitoring, in terms of surveillance, there is no excuse, or there is no mercy. It's not because you are working from home that we're going to lower the expectations that we have in terms of surveillance and monitoring. And a couple of years later, we've seen fines, right? In the US, big names, big banks, big fines because people were using WhatsApp to do business. So how do you react? Technologies or processes, you put in place some restrictions saying like you can't use these channels, but it comes with some limitations as well because people want to use it. So it's just normal to use these channels, and maybe the relationship managers, the bankers, they will ask for these digital tools to do more business. So if you just prevent them using these modalities, maybe they're going to work for another bank where it's easier to do business. So so clearly it is a challenge. Yes, I do agree.
On a humorous note, in the UK, if you suddenly get a mortgage approved in WhatsApp, it's still scary, right? It's very difficult. So there's a lot of user change management needed as well in terms of mentality and mindset. So that's what also we need to adopt to.
So the doubts, you would say, come from multiple angles.
Multiple
right?
angles.
And
it's not only, it's not one-sided. It's both sides.
I would like to draw the attention to ESG, which you also mentioned in the beginning as one of the major drivers. And so the question we see here is, are banks preparing for a rise in ESG compliance, and will this see them reduce their own investments in non-sustainable areas such as oil and gas, or just follow regulations as needed? This is also one question which came from the audience here.
That's a big question.
David,
a big question.
Yeah, you're a banker yourself, so go for it first.
I mean, I guess it's really like a strategic decision, right? Do you just follow the regulation, or do you go beyond it? I guess it depends on what you believe in. So if you want to be like a differentiator in how to be particularly green, particularly sustainable, known for it because you think this is the future, and that, I don't know, the younger generation will turn away from anything that's not sort of cutting edge sustainable, then of course you need to make it in the center and the front really of everything that you do, and you need to go beyond the pure letter of the regulation. If you I don't know, have a broader business model, you have a diverse customer base, you need to offer several different things, then you have a more diverse maybe like strategy in this respect. But I think ultimately what you probably still want to do in every case is, if you do sustainable, if you have sustainable products, you want to make them stand out somehow. So compared to the mass of the rest of the offer that's there in the market. So the competition on how to do sustainability, of course, has become much bigger with the regulation.
Yeah, I think we're already just at the start of this. I think. I mean, it's such a huge subject, and obviously, a bank like HSBC will still be financing fossil fuel companies. It's a part of the transition, right? You're not just going to switch that off. But there is an enormous amount of work to create green mortgage, green deposits, green loans, and just on my side, on the retail side. It's going to take time. We're building the frameworks. I think I already made the point. It's not a level playing field globally either. It's the huge differences between, EU's clearly leading with SFDR and that regulation and others, but we're trying to build that we're trying to create something which is a level playing field across the bank, as you'd expect for a global organisation like HSBC. But it's Yeah, it's such. We could talk for ages on this subject.
It's a topic in itself,
Yeah.
right?
Yeah.
But Arindam and Jerome, are there aspects where you see technology providers moving already fast in this regard? I imagine you do, right?
Yeah. I'll go first.
Go ahead, yes.
So see, it's so inherent in today's world that even customers, when we are getting to discuss about contracts, the customers, they don't want to lose any footprint on the ESG side. They're talking to us about contracts from where, so we are a large outsourcing firm, right? We deliver from different parts of the world. And there are specific regulations that are coming through EBA and REMS2 rulings. In addition to those, on the outsourcing framework part, the customers, essentially the banking organizations, were heavily invested in ESG. They're asking us that deliver it out of green delivery centers. And they don't want to get the service delivered out of non-green delivery centers. So those clauses are coming in, which is a great thing. That this was not there till 4 years back, 3 years back, or maybe before the pandemic as well. So that's an amazing step. One other thing I wanted to point out was that sometimes ESG is made very broad-based. It's not. It's probably a day-to-day thing as well within the bank. So as the banks have started investing, I'll give you an example of the length and breadth of these investments that I see. Till last year, my teams were working with one of your competitors, a large bank, on their large auto leasing platform revamp. And the discussions were the kind of investments they are making on the ESG front with all these EV adoption, electric vehicle adoption. They are creating an ecosystem with all the energy providers, all the fuel suppliers network across UK. This is across UK. And how would you, as a consumer, get a one-stop shop for everything around an EV ownership? Be it the insurance, how it will be beneficial to have an insurance from the exact same bank where you have the lease from. So that whole ecosystem is not for next 2 years, it's for next 12, 15 years. So the investments are not real short-term. There are short-term benefits that definitely everybody has to look for and comply to. But these are also very long-term views that the banks have taken.
I guess for us, as providers, right, like outsourcing providers, technology providers, it's having a strategy around ESG is just a matter of surviving, because at some point, procurement departments, they will have to deal with ESG providers, or ESG branded providers, or companies which are having a good ESG score. So for us, it's a matter of staying in business, right? We have no choice. It's good, but we have no choice. So we have to do our part, and as I said earlier, our part can come from different areas on how we do our business, so how we are running our data centers, or how we are, making sure that our people are using, public transport or alternative way, like to get an ESG score as a firm, because banks will be dealing with firms that are having a good ESG score as well. So as a provider, we have a tiny, but still a responsibility to act and to do what we have to do at our level. Yeah.
And that brings me back to the question you already alluded to it, David. It's a matter of strategic priorities, right? And it's a very difficult time to make the right choices, given there is limitations with regards to the amount of money you can spend. So where do you see the key barriers to innovation and adoption of RegTech then, if you put this into perspective?
From my perspective, it's a bit like sort of driving the car, trying to change the wheel at the same time. You've got the people the challenge I find personally is that I know that's the future, but I've got the issues of today, right? My agenda is, changed in February. It became very, very sanctions focused overnight. And that's the challenge for everyone in compliance, in compliance leadership roles. It's to try and change the way we operate, but managing the issues of the moment. And it's such a packed agenda. So it's time and funding.
Sabine, you want to add from your experience?
My experience really is about let's say, new regulation and regulatory change. And I think, this is reviving itself every year, every legislative term, and so as long as you have new risks arising or new kind of business ideas being created that bring regulators on the plan, as long as regulation didn't work in the past and hence it needs to be reviewed to become better, that long you need RegTech, like you need solutions that help you navigating this in basically all of these cases. Because it's usually related to creating data or using data and hence making an assessment around this data. And that's then technology, that can help you.
So regulation being rather accelerator than a barrier, I take away from that.
For RegTech companies, I would probably say.
So no barriers?
Go ahead if you want to.
Jerome, Arinda?
See, barriers are not there, but as I said, the adoption itself needs to be recalibrated, right, for the new age and the new age as well. Often what happens is the mindset of the consumer of that specific service or that specific problem solver does not allow you to, get to the full solution. It's always looked upon with a bit of doubt. And RegTechs are new age farms, right? They're new. So often, I have seen in some cases, the customers, we work with a large ecosystem of such RegTechs, right? And we try to build the ecosystem for the customer itself rather than putting ourselves first on the service front. We have seen often we being questioned that, okay, this specific RegTech X has only 3 customers and they're in Australia and they're in maybe Singapore and they're only in somewhere in US. How does it fit into my problem, which is very Denmark specific? Right? So, if the problem is a compliance thing and most of the Danish FSA is no different to FCA or, some other of those central agencies. Their requirements remain same. There might be some local requirements, but globally the requirements are same. So, the adoption is not a challenge. The suspicion is a challenge and the doubt is a challenge. So I think often, these RegTechs are formed out of great ideas. And they need to be given a run. The iteration needs to happen to see whether it fails. Maybe at a much smaller scale, you don't want to waste your money as well. Large banks always have a budget-based view sometimes. Sometimes it's an outcome-based view. So I think most of the times outcome-based view helps rather than the budget-based view.
I want to come back to the point Sabina made on new regulation because we have a question here with regards to cryptocurrencies. So should advice take a more active role with cryptocurrencies or wait for regulators to put more protections in place?
I mean, I guess we have like some basic protection already in place, and that's, around AML, basically. So there was this review of the AML directive, and hence now you need to have these controls in place and registration requirements. I do think, it really depends like what your business is. So if your business is very risk friendly, then obviously you can embrace cryptocurrencies and crypto assets like very easily. I do think, however, that indeed, like for more mainstream firms, incoming regulation and regulation that's in the discussion at the moment, it will surely take a few more years, basically, to come into play really properly. But that this regulation is going to help navigating the risks and makes it more open, basically, also for, let's say, retail investors, less educated investors, like more mainstream firms that do not want to be connected with taking too much risk, basically, for their clients. So I do think that actually regulation is a driver for cryptocurrencies to make them to bring them into the sort of broader market even. The challenge with it is that anything that's connected with, blockchain and crypto is of course moving so fast. Every innovation that regulation will always like be behind basically, and you need to be careful that regulation is not going to be a stumbling block and a narrowing field basically for that sort of innovation and still tackling the risks, however. So that's a very difficult balance really to strike. Yeah.
I think that balance is, we're sort of it's heading for a bit of a collision between what companies, what individuals want to do, and how regulators want to regulate, and it's such a diverse area. I mean, you've got central bank digital currencies being built, you've got stable coins, other virtual. I mean, it's and the risk range is very significant as well. So at HSBC, very conservative approach from a financial crime perspective, very conservative on how we're protecting our customers. So probably HSBC, if you really want to be active in this area, maybe that's not the bank for you, because that we see there's so many risks. I think Jamie Dimon at JP Morgan said, he just doesn't believe in it, right? So I mean that was pretty clear. So but the big point is this is a growing market, right? So we are going to have to, and we are putting our arms around it in terms of how are we going to manage these risks from both a regulatory and a financial crime perspective. But until that becomes a little bit clearer, it's a very conservative approach.
Yeah, we have seen. I fully agree, because we've been busy over the past few years, not with traditional banks like HSBC, but with either pure players like crypto exchanges, for instance, right? So you have plenty of crypto exchanges that are existing. Some of them are incorporated in Europe or in the US, and it's part of their incorporation program to have a proper market surveillance program in place. They need to make sure that nobody is using their platform not only to launder money, but also trying to manipulate the market. So these pure players are already, fully equipped in terms of anti-money laundering, market abuse detection and prevention, because they are pure players, pure exchanges. So that was really the first phase that kept us busy 3, 4, 5 years ago already. And then we started to see, and this is what's happening now, the retail brokers, these platforms that are providing CFDs, for instance, where the crypto assets may be the underlying, and they start applying the same level of controls in terms of market manipulation or KYC or money laundering verifications than if it is a traditional stock that may be purchased through the platform. So this is kind of the phase 2. And I'm sure in a few years' time, we're going to get the same requirements coming from the, I would say, traditional players, because retail investors like myself may be able to buy, Bitcoin through my HSBC account, maybe. And therefore, the same level of controls in terms of market manipulation and KYC will be applicable. But the first 2 layers are already there, clearly.
We come to an end, so I would suggest one final round for each of you on the ESG topic, because that seems to be one which is of utmost interest for the audience here. So, and I would rephrase the question I have here a little bit. What do you think you need to do right in order to be leading in the ESG world from the perspective of a financial institution?
For me, it's just we need to build the frameworks so that we know that when we say a product is green, it's green, right? So the sensitivity from the regulators we've seen, and I personally have been involved in some of the discussions, unfortunately, but the media scrutiny around getting it wrong is just, we cannot get that. So I think for me, it's about building products in the right way and communicating them the right way. I mean, there's some complexity to that question because of the different standards across the globe. But for me, that's where we're focused at this moment in time.
So see, I would add to that in terms of that, first of all, organizations, they need to know what outcomes they're lacking, the gap. So the gap minding is very important because that's where you make or break the game for yourselves. And based on that, you start investing and planning ahead. The requirements are also changing, so you have to be, have a double velocity in terms of what you adopt and how you adapt to that, right? So probably planning ahead, understanding your outcomes and the gaps that you have in an organization, and what you need to do to achieve the outcomes is significant. Invest in those.
I think you need to be credible, and I probably would put that into three sort of categories. So you need to be credible, like from your own organization. So you need to be reflecting sustainability from your organization, and that's governance and social, of course, as well. And for banks, of the tiny things around environmental maybe, but social and governance in that. Then you shouldn't greenwash. You need to be careful on that side. So your products need to be credible. And then I think stewardship is actually like a really important thing when it comes to institutional firms. So you need to be seen as somebody who's at the front really of as an investor, like talking to companies about what they want to see in terms of sustainability in the energy sector and in technology sector, etc. So I think stewardship is actually quite important as well, and gets a lot of attention also recently.
I would conclude maybe on data then. So I guess any of these large ESG preoccupation and challenges will involve data at some point. So capturing the data, analyzing the data in order to fuel a proper ESG program. I guess this is something that will keep everybody's busy in the coming years, I guess.
Okay, so with this I say many thanks for spending these 45 minutes with us and sharing your insights.
Thank you.
Thank you very much indeed for chairing a fantastic panel discussion. It was a great way to start the day. We could have gone on for hours, I'm sure. And thank you for covering such a wide range of topics. Obviously, you'll get a chance to connect with our panelists, David, Sabine, Arundam, and Jerome, during the networking sessions. So now it's time to move on to our keynote presentation of the morning. It's entitled Manage Risk by Observing Regulatory Controls Across Your Business Processes. And we're delighted to have two industry experts with us. Arundam, who you've already met, has introduced himself. He'll be joined by his colleague, Ian Phillips. Ian's got over 20 years of IT and business operations experience. He's currently Global Business Development Head of Dry Ice iControl, which is part of HCL Technologies, formerly CEO Alpha Insight, and has lots of program and project management roles at senior levels with Deutsche Bank, Barclays, JP Morgan, and CSC. So I'm delighted to welcome both of you to the stage to give us our keynote presentation. Welcome.
Do you want to take a... I'll call him when it's much easier to understand.
That would be good.
So, hello everyone, my name's Ian Phillips, and it's a pleasure to be here today and to be able to give me this opportunity to be able to talk to you. Today I'm going to be talking about our common challenges we see across a multitude of clients and how Dry Ice iControl can help deliver proactive compliance. I think we've heard a lot about that in the panel discussion, and hopefully we can shed a little bit of light about how our Dry Ice iControl is our enterprise control center, and we can help enable observability of the process flows and the controls with real-time alerts. Towards the end, you've just heard from Arun. He's going to come and provide some spotlight on the HCL services offerings we have with clients within risk areas. So, firstly, you may well be familiar with HCL Services. It's a massive company, but what specifically is Dry Ice? So, just to give you some context, so HCL Technology has an integrated portfolio of IT and business services, which you probably would have heard about or interacted in your companies at some point. We have an engineering and R&D services, and then we have products and platforms. Dry ice is actually a division of our products and platforms business segment. And to give you some scale just in that segment, we do over 1.4 billion just in software sales with over 17,000 clients. We have very deep partnerships in R&D software development, and which allows us to be able to offer the best of breed to clients. Dry ice specifically is our dedicated organic service software division. It's our foray into the emerging world of artificial intelligence, automation, and business flow observability. I specialize in the AI side myself, and hopefully we'll be shedding a little bit of light on that as we go through. As a product company, I don't want to stand here today and try and explain any regulation. I think that's the right slide. You're probably all far more well qualified on the specific regulations. But what I do know is that we have a very wide view across many customers concerning every layer of functions in risk. We see firsthand the challenges you face on a daily basis. You've heard from the panel discussions, the new regulations are going to continue. It's going to increase in complexity, and the need for real-time reporting is just going to get faster. For your growth businesses, you need to ensure that you can grow in an aggressive manner, digitally transform, and not overreach and compromise risk, and keep within the management and reporting standards. Now, that's not so easy to do. We know this feels like an uphill battle. But don't worry, you're not alone here. We've taken a step back. And in the last 7 years, we've been looking at the problem and building software to be able to help you manage and report correctly. Our belief, the key success for global compliance is a proactive compliance culture that covers your controls in business flow context using standards and a repeatable approach. Too often I hear the words, all hands on deck, when a regulatory submission is fast approaching. And you find that some components of the submission are still outstanding. You can't explain it. It's a tough task. You go back into the history. You dig into that data. You try and find out what's happened. You have a look when the breach took place, who was affected, what was affected, and the areas of responsibility need to be accounted for. And then you've got to be able to prove to the regulator that you have the new controls or the correct controls in place. This reactive scramble nature often leads to late submissions and even regulatory fines. Now, there are many point solutions out there that exist today, covering financial risk, regulatory risk, operational risk. And they all have very good ways of managing risk and reporting on the controls. And it's not only the regulatory controls, but your day-to-day business controls, which all need to be linked and understood in context for you to be able to effectively deliver to the regulators and other stakeholders. So how do you get a view of your controls across your business areas? Do you understand when one control breaks, what the effect is downstream, upstream, and which client is affected, so you can actually get ahead of the game? Typically, this is how companies have tried to solve the problem. You create many custom pinpoint dashboards using your IT teams to collate the data. You've probably got screens like this up in your organizations. The translation from business compliance to IT compliance is challenging. Your technical teams generally don't understand regulation or interact with the customer or the regulator. A lot of data is required and is not available in every one of your pinpoint solutions, so you end up with a multitude of reports. There's too many views, not joined up, not in real time. Digitally, you need to be able to scale. And you have this lack of trust and understanding of the controls in context. Plus, the way each control is measured differs from department to country, depending on which team you've worked with. In a regulated market, you're going to need your global teams identifying a problem before it's happening or as it's happening to be able to ensure operational resilience. So how do we bring all of this together and give context and transparency? When teams understand context of when the control breaches, they can serve the customer better. And that's ultimately who's paying the money is the customer. But they can also meet the regulation and then provide better returns for your shareholder value. We understand your business is complicated. So let me not stand here and try and say we don't understand that. Yeah. IT teams will only see parts of the puzzle where they're actually involved. And actually a number of business people actually only see parts of the puzzle as well. Your business consists of many interconnected processes. Each process is made up of several functions or functional steps required to deliver that product to the end customer. Each process step covers people and technology and does not necessarily have a unique ID to join things up from one side to the other. In addition, you have multiple products flowing through each part of the flow at different times throughout the day. Our iControl objective is for you to be able to see business impacting events before they go wrong. We want to warm that fog that you're looking into all the time, telling you you're not going to hit something at the current rating using machine learning and dependencies so that you can get an understanding of the correlating downstream impact to the upstream event. This means you can actually resolve the root cause faster and mitigate the impact. Now, I know I may have made that sound rather easy for a lot of you here that are tackling the problem. But we spent the last 7 years building iControl with features to make it easy for you to digitize the business process, connect your controls, and this is the key to achieving proactive global compliance. So you can analyze, predict, make decisions with a common view for all your users across different levels. We want to remove the need for you to customize hundreds of different dashboards at every single turn. You get into this analysis paralysis situation with all these dashboards and not understanding the context between them. Dry iControl's Enterprise Control Center gives you the ability to aggregate your controls using custom dimensions. You have the freedom to roll up, weight the controls in the way that works for your organization, giving you that bird's eye view of the global compliance, or as an individual stakeholder, you can view his or her controls to see the information that is pertinent to them and share common views between personas. You can do this by country level, you can do this by regional level, you can do this by department. Now, this doesn't have to be expensive. Yeah. Please don't misunderstand me. I'm not standing here today to say you need to go and spend millions and millions of pounds and replace all the technology you've already invested in. You've chosen those certain tools in those certain departments for very specific reasons, and they do a very, very good job in those different areas. But as a global business, you have many of these point solutions spread across your different organizations and across different countries as well. And that's where we believe, as Dry iControl, stepping back, looking at it, figuring out how we can roll things up correctly so that you can report easily and get to the data points in a much more functional way. So we've designed this thin layer that sits across all the existing tools. It holds your business process, which is the key piece. It links the controls to the process step, and these controls can be in any of the point solutions. We work with your existing investment in technology and data collection. An example where we've covered is, you can see payments, securities, we've been in there, we've done SEPA, we've done low value, high value, we've done month-end processing, swaps reporting, BCS 239 controls, trade and compliance transparency, product assurance, all the back office functions. And then lastly, something new we're working on. Some of you may be aware of the new regulations that are coming around AI governance. You now have to be able to report to the regulator, or you shortly will be reporting to the regulator, that you have responsible AI running in your organization. Oh, sorry, I just dropped myself off there. And this is going to cover a number of different areas for the responsible AI. It's going to be ethics. It's going to be model quality. You're going to have to cover all the different controls around each of the different factors. And we're also then working on, with a startup company, around digitizing human decisions. A lot of the areas you heard within the panel discussion was about cost. Well, we're on the forefront of AI, and we're looking about how you can digitize a person's decision using AI models, replicating that human decision in the AI so that you can scale the people within your organization instead of just keep hiring more and more bigger teams. Now, finally, before I hand over to Anandram, I just want to summarize some of the key outcomes and how this aligns with your business drivers. We've talked about how this improves the visibility and how you can faster respond to issues. Having this improved visibility allows you to demonstrate to the regulators that you have full control and you can build trust with them. You can show them where the controls are in context of your business. It then allows you to drive efficiencies and focus on the customer journey. If you understand where the breaks are happening, you can then spend your dollars wisely. And this all then feeds into your broader initiatives around process improvements and implementing new AI in a targeted manner, which will get you even further benefits. So we're going to be showcasing a 10 minutes demo of iControl at 10:55, I believe, on the demo stage. I think that's somewhere around here, or maybe it's in one of the other rooms. And we have a booth outside where we've got a team of people. I've got our product managers out there as well, so you can come and ask any questions. And if I let Anand just come over and have a little, I think if I go on to that slide, talk about our services.
Thank you, Jan. Thanks a lot. So thanks for tolerating me again. I'll not take much time, but I just wanted to point you towards at HCL what Ian talked about, dry ice. It's basically the tip of the iceberg. We also have a completely domain-focused, practice which caters to these regulatory services and compliance services. And I represent the banking and financial services part of it. In my role, I complement Ian's teams and other teams in HCL in bringing the domain solutions to the customers. And I lead the P&L for that, as I told you earlier. Now, I'll talk about the exact coverage that we currently do in terms of services across our customers. These are pretty large banks. We have certain fintechs whom we help as well with our services in shaping their journey towards what they want to bring to the market. Our portfolio currently covers largely these three aspects: the risk measurement and monitoring. This is across the gamut of banking, be it trading, be it consumer banking, retail banking, be it we forgot to add, it should be insurance as well. We cover that as well. Regulatory reporting. Reporting is very important. So a lot of the good screens you saw in dry ice, similar screens, we as an engineering services firm build on top of any of the platforms, any of the RegTechs that you can think of. And we have exact replicas of certain platforms itself, which are heavily customized for the customers. So we do those services. And then FinCrime compliance, that's the key word in today's world, and we have lots of services around that as well. It's a 1,300 member team, still growing, out of which close to around 350 are purely on the center of excellence. These are ex-bankers, ex-compliance folks who essentially shape up research and bring the solutions to bear. The other sets of people are working for the different customers in their programs, all right? And the 350 odd folks we talked about support these programs from the center of excellence. In addition to that, I wanted to point out one other thing, be it directly from the business process management to the end compliance charter. We provide services across the whole journey itself. So we work on the business process, harmonizations, mapping your business processes to new requirements. In addition to that, researching about what is coming out in the next 2 quarters, in the next 4 quarters, making sure your processes are ready for that, and making sure that the outcomes that you need to have within those deadlines are well charted out in your journey. So those kind of programs and consulting we do. In addition to that, the standard services that we provide are application development and maintenance. Any specific platform you want to build grounds up, which is not the norm anymore. We use an ecosystem of RegTechs that we bring to the table, but we can also develop platforms for yourselves and the customers. Then we implement all these RegTechs and programs and platforms. We also have, as I talked about, domain-based advisory and a complete managed BPO services for regulatory compliances as well. So we have a FinCrime practice that basically talks the customer's language in terms of FinCrime processes to be taken over in a managed service mode. So these are the services we have. We have given a set of relationships here. To be honest, these were approved by the customers, and then only those logos were put forward. So this is a forum. It was not purely a marketing gimmick, so just be aware of that. We have taken approvals and we have put them on. The partnerships there, we have just named a few. We have currently purely on the regulatory and compliance side, we have close to around 80 partnerships alive as we speak. These are basically range from 20 odd people, companies who are specifically work on a specific report, to the likes of Nice Actimize, the likes of Finergo, which are established brands within this space. Then I'll go to the next slide. Okay, it took a bit of time. See, I'm not here again, as Ian mentioned, I'm not here to tell you, what you do best. I'm just trying to explain that as a service provider, we are seeing certain challenges across different banks. So the bank A may have a challenge on X, whereas bank B has a challenge on Y. Now, we as an enabler, we learn from both of these problems and make sure the solutions are given back to the banks, which are equally holistic in terms of compliances to the regulatory authorities. So essentially, what I'm trying to explain here is we learn from different problems, not exactly repeating those problems for the same bank or the other bank, but we advise based on what we've seen from the market, and our domain experts actually build those solutions for the customers. This helps in, first of all, reducing your journey times to that outcome, reducing your total cost of ownership of that outcome that you are planning for, and also we undersign the outcome itself in the contract. So making sure that your compliances are well delivered on deadline. That's the other important thing. This is probably a list of transformation levers that we have recently seen, across different programs. These programs, it's nothing new. You guys have been delivering this across your businesses. We essentially make sure, as I told, the three specific outcomes that we talk about. The journey itself, making sure it's well, the knowledge is there within the journey, lowering the total cost of ownership, and understanding the outcomes. I rolled through it. If there's any questions, I didn't want to make it a long, boring discussion itself. So if there's any questions, I'm here to take that. So good. I guess I said it well, and all of you would remember me. Cheers. Thank you.
Yes, Aaron, you said it very well. So perhaps it's easy for people to follow up with questions in the networking break. So thank you both, gentlemen, for a discussion of an essential topic in terms of proactive compliance, and showing us how you are actually at the centre of the industry. It's now time for our next keynote, and I'm delighted to welcome back Jerome, who filled in earlier for one of his colleagues, who'll be talking about transforming a compliance program, staying ahead of the curve. Jerome, welcome back.
I keep the mic. All right, so good morning again. We're gonna talk about what I like talking about, which is compliance and technology. So if you have any question, feel free, right? Don't hesitate. You can raise your hand. I can take questions anytime you want. No problem for me. Again, I introduce myself for people who came late. Maybe it's what we do. So my name is Jerome. I'm French, obviously, and I've been working for Actimize for about 4 years. And I look after the financial market compliance business for Nice Actimize in EMEA. And then I was saying earlier, part of my personal life, so I've spent the past 10 years of my life in Singapore, and I had a good time there, and I decided to come back to Europe about 8 months ago. And people ask me, why are you coming back, right? COVID and Brexit. I said, still, I want to come back. So I'm happy to be here, very happy to be here. Over the past 2, 3, 5 years, whatever, we've seen a lot of technology disruption, I guess, in 2 areas. So, and we're going to be a little bit specific because we're here to talk about what we do as a firm, what we do as a technology provider. So we've seen two very important forces shaping our business, and obviously also shaping the activities of our clients. So the cloud adoption. Yes, in Switzerland, people are using cloud. Yes, in Singapore, people are using cloud. But we had to fight a lot to make sure that we help our clients to adopt cloud within their sensitive processes. Our business is compliance, financial crime, compliance, communication, recording. So we are in a business where we are dealing with sensitive data, personal data, customer data, but still, cloud has been largely adopted by our clients in different areas and in different parts of the world. But that was an important driver for the industry because it forced our clients to kind of rejuvenate the way they are delivering their compliance program with traditional on-premise infrastructure, and it forced them to adopt cloud, review their security processes quickly, in order to benefit from what vendors can bring into the cloud. On the other side, we had these beautiful tools, right? Microsoft Teams. I didn't use it 3 years ago. I was using Skype to call my parents, that's it. And now we are using Microsoft Teams every day. Some people are using Zoom, some people are using Blue Jeans. I'm not here to promote any kind of unified communication vendors, but the idea is to say that we have used these tools over the past 24 years like never before. And we discussed about that earlier, giving new tools to your employees who are working from home, from the living room, from the bedroom, and sometimes from the bathroom. I'm sure it happened to you. You still need to be able to provide them the tools and still deliver compliance. So recording these interactions, analyzing these interactions to make sure that there is nothing wrong going through these new channels. These are the two very large drivers and important drivers that we've seen from a technology perspective that impacted the RegTech, what we do, right? So providing technologies to compliance divisions. And these two very important drivers had us to highlight few things, that the old way isn't working. The old way, again, I guess you can tick some of the boxes, right, depending on your organization. I'm sure you have experienced within your compliance functions disconnected systems across geographies. I'm in Singapore, I'm using something different than what you are using in London. Okay, fair enough. But customers are global, risks are global sometimes, but still disconnected systems. Sometimes we used to see customers that are having different telephony systems. In this part of the world, we are using that brand. In that part of the world, with Microsoft Teams. How do you deal with so many silos when you want to be efficient, when you want to be cost effective, and when you want to control these communication channels? Disconnected systems, sometimes in terms of trading as well, right? So if you think about a global bank with I don't know, wealth management activities or large investment banking activities. They are using how many? 3, 4 different trading systems across different booking centers. When you start trying to reconcile this data in order to identify, I don't know, market abuse, for instance, right? How do you do? It can be challenging. So disconnected system was it's still an important challenge, which brings a lot of inefficiency. Inefficiency in the processes. When you are reviewing, I don't know, a market abuse alert. Again, I will take the bad example of the trader trying to manipulate the market. It's a usual one, but how do you make sure that you have processes that are aligned across your different geographies? Not only you are using different systems, different trading systems, different compliance systems, but you have also teams that are spread across different geographies. Sometimes you may have a team, a remote team in offshore location to do the first level of controls, and then it will be escalated to another team. So having processes streamlined across your compliance functions globally, that's something that could represent a challenge if you don't have it. False positive. This is the nightmare of vendors and clients as well. So false positive is the idea of working on things that I shouldn't be working on. I'm a compliance guy, I'm a compliance analyst. I spend too much time analyzing false alerts, false alarms, or things that are just created by noise within the conversations. I can't really hear what people say, therefore I have to listen a little bit more carefully. Or noise in the data as well, right? We see a lot of transactions coming into the systems, and I'm not too sure if there is a true market manipulation happening. So I spend time trying to review and clean the mess, or going through a disposition process, which may be very time-consuming. So false positive is an issue, it's a challenge. New digital channels, we talked about it. So I bring new digital channels into my business. My traders, my relationship managers, my financial advisors, they are using new channels. Didn't exist in the past. How do I give them the right to use them, and how do I put the right controls in place against these new digital channels? And then the lack of coverage. Earlier we discussed about maybe global banks, traditional banks going one day into the crypto business, So the coverage, the risk coverage that they're going to have to handle in the future keep expanding. So more risk needs to be monitored. We talked about ESG, we talked about crypto. These are concrete and real examples about expanding your business into new areas that will require more compliance and controls in place to make sure that you are doing the right thing. So do I have to handle, or am I facing a coverage gap from time to time? So these are the typical, six areas that we have seen are clearly putting a lot of pressure on the compliance functions. And when you have pressures, when your compliance functions has to change, you have to do things differently because of the drivers that we have mentioned. This is where maybe you're going to start embarking on a journey. We've put together that slide because it usually helps to our clients to position themselves. In which group I am? I'm the pink, I'm the blue, I'm the green, or I'm the orange. There is no wrong answer. You have the right to be anywhere you want, but it illustrates the idea that when you are deploying, an overall compliance program across an organization, buy side, sell side, it doesn't really matter. You may go through these different steps. You may start from having a very siloed approach, as I said earlier, different geographies, different systems, different systems depending on the different communication systems. We've seen customers having 3 different voice recordings platforms, for instance. One voice recording platform for this telephony brand, another one for this, and another one for that. I'm using 5 different channels, so if you need to retrieve my recordings because I've done something fishy, how do? You're going to start tapping into three different recording systems, right? It works, it's painful. So silo, this is really like where usually the journey starts, right? But you still need these foundations. You still need a recording system. You still need a market surveillance system to make sure that people are not trying to manipulate the market. This is one of the responsibilities of a compliance program, obviously. You started many years ago with an e-coms platform, right? You dump all the chats into one database, and then you search against it. Not bad, right? It's in place. But then, if you want to do that at scale, as we said earlier, this is where you start moving into the integrated phase, where you will try as much as possible to bring things together. And usually what we've seen from our clients, they are trying to bring things together, and they start with the alerts, right? So let's try to bring all the alerts that all these different systems are generating into one place. At least it will facilitate a little bit my work as an analyst, right? I'm going to have one place to search. It's not bad, right? And the same applies to the underlying system. So why not having a single recording platform for all my modalities? My Zoom, my Microsoft Teams, my voice, my chats as well. So again, we're going to try to centralize as much as possible the communications into one place. This is kind of the second step. And then we see, financial institutions that are reaching the next stage where not only they bring things together, but they analyze things together, right? So they analyze what did people say over the phone, over the chat, and what did people do from a transaction perspective. So what did I say? What did I do? If we start bringing things together and analyzing things together, we start having a better understanding of what we call the true risk, right? I'm advising the customer for his best interest over the phone. Did I send him the right emails to explain the product that they are about to invest on? Did I place the order, or did we process the transactions as per communicated over the phone? So if we can start answering all these questions by aggregating data together and analyzing data in context, you start having a way more efficient program, because you will start focusing on what we call true positive, and hopefully you're going to start focusing and identifying true risks. So you start putting more context in it. And the next step, this is kind of the dream, so that's why it's blue maybe. The idea is to go a little bit beyond. So we know the keywords that we are trying to identify within our communications, right? We know if we say this, and that, we raise an alert. Good. We know how to detect market manipulation, right? So MAR has been around for many years. The algorithm is clear. If, then, else, bang, bang, bang. We go through these steps. We trigger an alert. Good. But again, human nature may be a little bit more tricky than that, right? So this is where we start adding more data points in order to identify behaviors. And we start touching the big words like AI, machine learning, and things like that. But the idea is to go beyond the traditional if-then-else approach or rule-based models, and adding more data points in order to understand what is your employee doing, right? Additional data points can be, not only my comms, not only my transactions, but maybe my printing habits, right? Friday afternoon, I print a lot. Monday morning, I come late. In February, my P&L is usually twice higher than the rest of the desk. It's not a MAR model, right? It's a behavior. It's my trading behavior as a team member of a dealing room, of a desk. I behave differently than the others. And this is what we are aiming with a comprehensive conduct risk program. It is to start, analyzing a larger data set, identifying abnormal profiles, defining what is normal first, and then identify abnormal profiles. Why did this guy on Friday afternoon not using his mobile phone, right? Everybody's using it, this guy zero comes. Why? Maybe he's doing business over Starbucks. It's interesting, there's nothing wrong. Maybe yes, maybe not, we don't know, but at least we give to the analyst an additional data point, an additional reason to maybe further investigate on that guy, right? So that's kind of the way we see this type of compliance program at scale, and these are kind of the steps where we have seen our customers navigating through. Yes, please.
Actually interested in two sides.
Which color are you? Sorry.
That's another topic. Integrated versus holistic. I think when you talked about in the holistic, it's thank you. When you talked about in the holistic and integrated, pulling things together, but in holistic you said you start analyzing things together. The word analyzing, is it actually system analyzing, detection, firing an alert on combined, or actually you're here thinking about it from an analyst perspective who need to bring this data together? So that is the first part.
Yes.
And in the conduct, a lot of data point brings the challenge of you need people to look at it. And then you have the other thing, how many of these data points, alert scenarios versus workloads. So interested to see your points on that.
Got it. So analyzing things together, is it done by the human or by the software, to make it simple, right? So it's done by the software. I will give you an example. Insider dealing, right? An insider trading. So we can see that from a trading activity. I'm building up a position, large market movement, we trigger an alert. Then the system will bring, with a powerful correlation engine behind the scene, will bring the additional communications that are correlated to these transactions based on some attributes. The date, the name of the trader, the name of the underlying, whatever, name it, right? And we're going to bring these together in front of the analyst. That's one illustration. The second one, it is on the comms, specifically on the comms, right? If you search for keywords, good, but your list of keywords is what, like 50, 75, 100, and the more keywords, the more false positive, right? So when there are techniques, we call it natural language processing, to analyze the communications in context. What did you say before? What did you say after? And therefore, most likely, what you are saying here is, in context, suspicious or not. That's another concrete illustration on how we start generating alert in context, correlating things together or being more accurate when we're analyzing stuff. The second question was about conduct. We bring more data points. Yes, the printing machine, the building log access, or that guy who is always late on, doing the training, from HR. We need to know that. Yeah? It's an additional data point. So then there are ways to interact with larger data points. So visual ways, fancy dashboards and stuff like that. So that's one area. We do that, of course. Yeah. We bring data into a visual, into sexy manner, right? And then the rest is done by technology. The more data you give, the better you can build a model and detect anomalies. So having a lot of data, it's not necessarily a challenge because we start having a machine learning algorithm or AI algorithm that will help to surface the data set, spot outliers without having to you digging into it. So that's kind of not the magic, but the beauty of such type of technology. The more data, the better I can spot anomalies. That's an example. Okay. Well, I only have 16 seconds and I still have 12 slides. No, I'm kidding. So these are the challenges. I won't talk about these challenges because I realize we've discussed that together with the panel earlier. And we have a question here.
Sorry, I was going to ask you about the last slide. Love these slides and put them together myself. And the problem I see is that when you get to sort of like the C-suite, they see the word integrated and they think, fantastic, that's a really great word. I'm integrated and I've gone from siloed. So from your experience, how do you maintain the transformation past integrated when everyone thinks, well, it seems great, single case manager, centralized, we're done. How do you get them up the scale and keep them going over time?
Yes, integrated is great, but what do your compliance people think? Because it's great, but what keeps you busy on a daily basis? You may still have the false positive, right? Putting a lot of things in one place is good. Having it in order, it's good, but you need to make sure that what is in order is useful. And this is the area where we're going to transition from integrated to holistic, right? What type of additional intelligence we need to bring into this big box, which is already receiving all the alerts, to maybe have less alerts. And then we start engaging really on the false positive discussion. Because you're right, the integrated has been done, so the work has been done. All my alerts are flowing in one place. But what about the quality of these alerts? And this is where we start bringing the intelligence piece that will come later. Correlation, natural language processing, dynamic thresholds for the market abuse alerts, for instance. These are the capabilities that will come later, at a later stage. Yeah? The challenges. We talked about the challenges earlier in the panel, and I guess we talked about ESG a lot. We have our part. We have a responsibility as a vendor. We need to be green. We have an ESG score. We are bringing more data points because we are capturing the interactions, and therefore we bring more data points for you to build your ESG risk models, for instance. But we have a tiny responsibility, to be honest. But we contribute. We do our part, as we say. Keep it up with innovation. We talked about it when we talked about the RegTech. Regulatory compliance, yes. I quickly talked about the FCA, the consumer duty. When is it, like April next year, I guess? How do we make sure that we are selling the right product to the right people? To make it simple, right? Monitoring, surveilling. So monitoring capturing the interactions. How are you engaging with your clients? Which channel are you using? And what did you say? So this is, it keeps our clients busy, therefore keeps us busy by extension. Okay. But again, I will go quick on the challenges because I guess we are running out of time here.
You mentioned data privacy.
Ah, yes. Is it a challenge for our customers? No, it's more a challenge for us purely as a vendor, because we need to prove that our cloud-based technology are compatible with your data privacy guidelines. Because you are as a bank, you are managing data privacy very well for quite some time. But each time you bring a new vendor into your ecosystem, then you're going to start challenge the vendor. So it's a challenge for us. You're right. We have plenty of answers. You know, we are a $1 billion company. We are $1 billion last year coming from cloud only. And our job is to do financial crime compliance recording. So we do sensitive stuff in the cloud. So we do handle data privacy very, very well. Different level, plenty of technical answers, plus hashing and things like that. But we have customers in Switzerland, for real. It was not easy, but we have. And AWS will open a data center in Switzerland, I guess, by the end of the year, I guess. We are not working for AWS, but it was mentioning it. They are part of the ecosystem, obviously. So what we do, one slide and I'm done, because I guess we're late. This is what we do, a little bit of marketing propaganda here. I like the slide as well. On the left side, we capture and archive interactions. As we said, all interactions, all communication modalities. We make sure that 100% of what has been said will be captured, archived. This is the foundation. And then what we said earlier, once we have all this data, what do we do next? And very rightly, HSBC said earlier, we need the surveillance piece is important as well. But yeah, of course, once we have put all this data together, what do we do next? We analyze data. So our job is to analyze, is to surveil, is to identify from all these data points if there is something wrong. If you said the right thing, if you said the wrong thing, if you did the right trade, if you've done the wrong trade. I'm making it simple here, but that's clearly the idea. And the holistic surveillance includes as well the personal account dealing, right? So maybe you have a trading account every day or every week or every month. You have to declare your transactions to your boss because you're part of the risk team. This is part of the picture as well, right? Like the personal account dealing. How do we monitor that? How do we make sure that there is no information flowing across the departments? Again, people trying to take advantage of internal information to make profit. So this is what we do on the surveillance piece. And the last box, it is about the conduct piece, right? So it is about going beyond the traditional model, going beyond the lexicon list, or identifying new risky behaviors by going further into the data analytics, leveraging AI and machine learning. And in fact, when we are delivering this integrated platform, recording and surveillance, everything in the cloud, we also think about the end users. We think about the people who are on a daily basis reviewing alerts. So we also believe that triggering an alert is good. You can have good models, great. But working on an alert is equally important, right? So disposing an alert, clearing an alert, documenting, learning from the previous alerts. Again, machine learning, learning from previous alerts in order to get better models. So this is also the things that we're going to do through this platform by empowering the compliance analyst with the right case management tools and capabilities to do their job on a daily basis, basically. All right? Thank you.
Jerome, thank you for your nice presentation and for sharing your really important insights on the subject. You must be dying for caffeine and for human contact. You've got 20 minutes. Please make the most of it. Decide what you want to do, because if you want to join us for our next presentation, next discussion on AI, please join us here. Otherwise, there are demos in the room next door. So please decide what you want to do. And we'll either see you back here in 20 minutes or we'll see you next door in 20 minutes. Thank you. If you're in this room and you want to see a demo, you're in the wrong place. But if you want to witness a very exciting and insightful panel discussion, you are in the right place. It's my pleasure to introduce the next discussion. It's called "What is the current state of AI, ML, and blockchain in RegTech?" So beyond all the hype, what's really, really happening? It's my pleasure. We've got a very distinguished set of panelists today, which is fantastic. And it's my pleasure to hand over to the chair, who is Georgios Samakavaitis. Have I pronounced that correctly?
Yeah, kind of.
Kind of, all right. Apologies, I have been practicing for the last 20 minutes.
It's all right.
But anyway, George is an associate professor at the School of Computing and Mathematical Sciences at the University of Greenwich. His expertise is in banking and payments technologies and enterprise architectures, and is actively researching AI for financial fraud detection, AML, blockchain, and applications for fintech. So it's my pleasure to hand over to you, Georgios.
All right, thank you. And thanks everyone for being here. I mean, we're just notified that we were, a bit delayed, and we were having a pun here talking about, how we're talking about technology, but we were delayed because of technology. So it's always, this side of things. So I'm George Samakavaitis. I will be chairing this panel today. Actually, well, just a bit of an introduction about, the topic. And I'd like to say that this is a topic that it's been very much one of the main points of interest about this topic is that it's very much talked about, and we are yet to see more done through it. So we talk about the technologies, we talk about AI, ML, machine learning, blockchain, but not everyone is convinced that this is really happening. So that's one of the things that that will make this discussion very interesting. We've seen a lot in the field of technology happening here. So being in research in computer science, I can testify to that. We've seen a lot of applications through, from natural language processing to augmented reality to, a myriad of blockchain applications. At the same time, we've seen the market responding quite well. I was just reading a couple of days ago in no other places than the RegTech analyst that investment in RegTech has reached in 2021 to the whooping level of $18.5 billion. So, and 2022 seems to be as promising. At the same time, the regulator is listening. So the industry is listening, the investors are listening, the regulator is listening. And that is actually if you like, set of reasons why this discussion is important. The other one, of course, is my distinguished panel, whom I will let introduce themselves. They combine together approximately of 8 decades of experience in fields. And what's also interesting is that, as you will hear, their professional lives have been spanning across different industries. So I'm really keen to, let my panel introduce themselves, starting from Sultana.
Morning, everyone. I'm Sultana Begum, and you might have seen that I'm Senior Advisor and Head of RegTech Data and Innovation here at the Bank of England. Yes, the regulator does innovate for your circumstances. And I have, prior to that, probably about 16, 17 years of central banking and regulatory experience. I spend my time building the RegTech agenda for the Bank of England, but also working with central banks and regulators around the world to help build their strategies. So hopefully I'll be able to give you a bit of a flavour of what we're doing today.
All right, thank you. Nasos.
Morning all. First of all, it's great to be here with real people. I think for a lot of us it hasn't been the case for some time. So, Nasos Economopoulos, I work in risk management for HSBC, and I'm the global head of cloud, DevSecOps, and emerging technology risk for the second line. Over 20 years of experience, mostly in financial services, and it's lovely to be with you today.
All right, thank you. Stacey.
Hi everyone, I'm Stacey English. I'm Director of Market Intelligence at Data Lake, and we provide security and compliance for all the modern platforms that we're using today, so like Zoom, Microsoft Teams, WebEx, and all of those. I've been in financial services regulation for 2.5 decades, so I take up a big proportion of that 8 decades. I'm a former regulator. I've been a compliance officer in many of the big banks and insurers, and latterly I ran Reuters Regulatory Intelligence, providing all the news and regulatory insights. So my perspective today really are as bringing in that practical industry experience as well as a vendor. I'm going to try not to move because my microphone fell off.
Right, thank you, Stacey. And Wolfgang?
Hi, my name is Wolfgang Berner. I'm CTO and co-founder of Hawkeye. We are a RegTech based out of Munich, operating globally. We are using traditional methods like rules and enhancing it with topic of the day, of course, here as well, AI, to do, on the one hand, behavioral analytics to find, let's say, more stuff in financial crime, and at the same time reducing the noise. So we're doing transaction monitoring, screening, and customer surveillance. And yeah, to add to the experience part, I've done financial services now also for more than 20 years. Also already founded in the space, particularly in the payment space. I've seen quite a bit there as well.
All right, excellent. So that very nicely segues to our first topic, core question here, which has to do with benefits. I mean, we know that all these technologies contribute the obvious benefits of cost reduction, efficiency, and so on. What do you see beyond the obvious in terms of what benefits can be delivered? And I'll start with you, Sultana.
Yeah, it's probably a good place to start with me, because aside from efficiency, the Bank of England isn't a profit-making organisation, so it really isn't looking at revenue as a value driver. It's looking at actually what is our mission and how actually can regulatory technology support that mission. And yes, efficiency is one way, but accuracy is another. The ability to use, for example, our information in an accurate and effective way. I often talk about RegTech, both efficiency and effectiveness. So what does it mean to be effective? Well, regardless of the organization, it could give you your competitive advantage, it could give you your better reporting, it could give you the ability to actually dynamically respond to changing geopolitical conversations. So, okay, I've got through 2 minutes before I mentioned the pandemic, but I did that. But I think all of us can see, and this is why I think RegTech has increased its acceleration in the amount of money going into it, because technology has allowed us to thrive in what has been, quite a big change and, challenge for a global world. And that's continuing. I've heard ESG mentioned today. I've heard, climate change, blockchain, the change in the way consumers operate. So beyond efficiency, I think what it really allows us as an ecosystem is to be more proactive, is to be more dynamic. And that's by using technology to really utilize what essentially is our insight, it's our intelligence, it's our information. I've seen already presentations that talk about, more data, using artificial intelligence, using machines to circumvent, the lack of human ability to generate the amount of insight that potentially a machine can. But I will caveat that by saying ultimately it's humans that are going to create the intelligence out of that augmentation.
Right. Nasser, do you agree? Or?
Yeah, no, totally. I'm just going to epitomize just 3-4 key points. So clearly, we have better coverage. And there is a lot of opportunity for manual tasks like back office operations, for example. A good opportunity for automation. Time to market, as a result, becomes faster. And also, you can use AI to identify patterns which are not always obvious. And I guess, on a more personal level, it's going to be interesting what will happen. On the workforce of the future, what are going to be the skills that we would have to pick up, and hopefully, in addition to the benefits in the industry, we'll have a little bit more free time focusing on more creative tasks.
Right. Thank you. Stacey?
Yeah, just building on some of Nasser's points there. So the biggest benefit we see is being able to detect risks in the new modern workplace that we find ourselves in. We've talked a lot today about the fact that we're all moved overnight to remote working pretty much. We've now got different systems in place to communicate, and all those obligations there to supervise and monitor all remain the same. But it's very difficult to detect risk within them, because the tools that are in place are built for a different era. They're built for text-based communications and email. So you really need AI to be able to understand what's going on in those communications. You know, I talk about in terms of volume, we've got masses and masses of records. They are video calls, chat messages, emojis and GIFs, all make a very different type of text-based communication, and it's just impossible for any compliance team to have a look at all of that and review it all. And even if they could, you know, it wouldn't be the best use of their time. So AI really enables that ability to spot those risks, you know, detect them, surface them, and understand really what's going on in context. You know, what you don't want is AI flagging something like, you know, I guarantee he'll be late. You know, that's not I guarantee this gets investment return. So really important to, some real benefits there of not having those false positives. And also in terms of speed, you know, these communications can very easily get out of the organisation, very easy to share a chat message with something attached to it. It's very easy for anybody to record a video call. There's hundreds of apps that you can do that with. And you need to be on top of it, because if you're not on top of it, you can be guaranteed it's going to be out in the media and someone else will be telling you about it. So I think, you know, volumes, complexity and speed would be the real benefits for me.
Right, excellent. So Wolfgang, what's your take?
Picking up on what Stacey said on the amount of data, I think one of the great things of AI is like finding the needle in the haystack. So we in transaction monitoring, so looking at billions of transactions, and actually also terming it, finding the needle in the haystack is already wrong, because I don't even know that I look for a needle. I look for odd behavior in that haystack. And to give you an example there, to give you a bit of a feel, we not long ago we actually identified some scheme at a client of ours that is like operating in B2B fintech, having thousands of clients, and this scheme that we identified, and I'm coming to that in a sec on how we did it, very much so involved a lot of things like fake invoicing. It was like tax evasion, a lot of stuff happening there. And how did we find it? So first of all, we didn't look for it in particular, because we were applying anomaly detection paired with anti-resolution. And through that, we were able to identify it. And what were actually decisive things that come into play that our model were able to find this? Number one, it was anomaly detection, so finding, so identifying that there was a cluster of odd transaction for a certain customer type. So that was one indicator that actually led to detection. The other one was so we saw quite substantial fan out activity, so distribution of money, and the other one was finding actually correlations between the counterparties. So, and there was correlations that weren't super obvious, but something a machine can pick up. So things like you have different email addresses, but you have similar names in it. Yeah? You have overlaps in phone numbers. You had overlaps in addresses, and the combination of all of this, that things led to finding this without having been searching for it, and that's what the AI is really good at.
Right, I think so. I mean, we can call that, if you like, knowledge generation. If we're going to epitomize that as knowledge generation, that would, if you like, be the headline of what we can identify as one of the core additional benefits, which actually brings me to the challenges now. And the challenges area is really interesting, especially if we, and again, that goes back to a conversation we had before with some of you in this panel. We were saying, well, the problem really is not technology anymore, but it's more about how we make use of that technology. It's about explainability, and it's about all these factors and the governance of the components in there. So what would you say are the main challenges in the implementation and management of these technologies in that field? And if you don't mind, I'll start with Wolfgang again.
Sure. There's still this notion, although of course it's around, as you say, for quite a bit of time. We're doing machine learning AI for quite a bit. But we still have this notion of, oh, there's this black box, oh, it's dangerous, but it's not. Yeah. So that we have all the technology to properly create the transparency, to properly create the explainability here. We just haven't bothered actually to bring the people on board that actually use the systems that have the AI in it. So that's I think the biggest problem. So the tech is there. It's about like creating processes paired with technology and governance to actually solve this. And the big topic here is for wide range acceptance of AI is trust. It's about trust from the regulator, of course, trust from the auditor, but most importantly, actually, trust by the people that use the systems. So if you cannot manage to have the trust of, let's say, in our case, the investigators, you don't even need to bother how you explain it to a regulator because you never get to the regulator in the first place. And there's a couple of things that we think that are important for that acceptance. Number one, it's like explaining individual decisions. So AI explainability as in like individual decisions. How did the model come to that? And then it's also about like the model inception itself, and then how the model evolved over time. And there's a couple of things that we feel very strongly about. So first, it's like when you talk about like individual decisions, you need to explain what's the most important criteria, what kind of model was it that actually triggered it, and you need to explain all of that in human understandable language. So you don't need to be a data scientist, you don't need to study data science to actually understand what's on there. And then on the model evolution, the key piece is like involving the experts, involving the compliance experts in that process. They need to look at, of course, the metrics, the overall process, but most importantly also samples. Yeah. So is this relevant? Yeah. And then you do below the line testing, and there's a lot of fancy stuff that you can do to actually make sure that the process is understood. But you need to get them on board, and then I believe the tech and everything is there. It's just we need to bother to pick up the compliance people and make them understand AI, and then we'll be good.
Thank you. So, Sultan, I saw you nodding.
Yeah, I mean, I like the way Wolfgang set it out, because it is. The people who get it, and the people who don't, really don't. Often, though, in organizations, the people who don't get it give you the challenges that I'm about to pose, which is people who don't get it are your decision makers, especially for legacy institutions that are global, large, huge. So you face the prospect of it's too hard, and that's the reality of it. And the second why I say Wolfgang is that explainability factor. Well, if you can't explain it, we're not using it. But really, we need to think about actually, but what is it we're trying to do with it, and do we need it to explain it all the time? You know, am I using this particular AI to diagnose cancer? Therefore, the criticality of that output is it's got to be right, because the fact that it's wrong has a huge impact. But, you know, let's take Amazon or whatever, you know, online shop you use. It's giving you preferences. Do you want to buy this? Do you want to do that? And it gets it wrong and it gets it right, but we accept it without knowing what algorithm it's used to decide, you know, if you want to buy the next pair of trainers or you want to watch a certain type of movie. So really, I think the journey and the challenge is things that we accept in our personal lives and the way we operate. And I'm sure 90% of you at the minimum, unless you're a renegade, has a smartphone in your pocket. So you are accepting it. And so are the decision makers of these organizations that we talk about. So I think what is it that makes it too hard? I think legacy systems, the technology itself for AI and machine learning and algorithms, and I'm sure you would attest to me academically, have been around since the 50s easily. So what is it that allows us to do it, and what stops it? Well, data storage, as an example. You know, do we go on the cloud? Do we not? Is it safe? Is it not? So these are the kind of considerations. My organization has grown through merger and acquisition, so I've got a hodgepodge of systems, and I have no idea how I'm going to build these great AI systems that Wolfgang talk about, for example. on top of this creaky foundation. So I think legacy systems is a big challenge. I talked about people. I think that's the hugest challenge, but also the greatest opportunity. Upskilling people along the way, I think, is the way to accelerate any sort of regulatory technology journey with artificial intelligence or machine learning. That doesn't mean every organization is going to be run by data scientists. I'm sure both they and we wouldn't like that. However, we do need to upskill everyone. And it goes right from, every course at university, for example, graduates are walking in with digital skills. And then we are setting them down with, here's all the MI that comes from this firm. You sit and read that and tell me what is the next crisis for this firm as a supervisor in my world, when we could be applying technologies that could do the early part of this work and use our already digitally skilled enabled graduates, as an example, to do this work. So really, I think it's also people, digital skills. And thirdly, I think it's around funding and investment. This work doesn't happen without investment. And whether you're profit making or you're non-profit making, you're thinking about, how do I show either an ROI? How do I spend to save? But it's going to take me 5 years to get there because these machines need to learn. Most decision makers might think, okay, well, I've got 4 years where I'm here when I want to come in, change something and prove a point and see the benefits of what I do. So getting organizations to think long term, I think, is also a big challenge.
Right, thank you. So, Stacey.
Yeah, I think this is a really important question because there is that potential for all the benefits we talked about, like not missing risks, to be offset by some of these implementation challenges. And I think the thing to remember, not all AI is the same. It's a very big word, but it is quite different. And firms sometimes find themselves using tools that are built on very general purpose AI. And what that means is that their compliance team is then completely tied up having to check the results of it. They're having to train it, they're having to check all the alerts that come out of it. So it's really offset the benefits, the efficiency savings that they've made in rolling this out. The other piece really is something we touched on, the explainability. And when you are using very big data sets that have trained that AI, it's really impossible to explain the results. And as someone who's a former regulator, internal auditor, that's very close to my heart. And it is possible with more targeted data sets to actually explain the results, what's coming out, why it's making those decisions about why something is a risk, why it's surfaced that.
Right, then last but not least,
Thank you. So I'm just going to build on a point from what my fellow presenters spoke about. So yeah, it's important to understand the technology. It's important to understand the risks. And I guess it's not like for like when it comes to blockchain and AI. There are some differences. There are some commonalities when it comes to risks. Cyber is an obvious one, but there are also differences. But I think there is an element of culture, which is, I think, super critical. And if organizations want to progress, and sometimes when I talk to my stakeholders, being in risk, that sounds counterintuitive. You are in risk management. I'm telling them, look, it's important to try, fail, and learn from it, and create an environment where people are feeling safe to do so, and they have actually the endorsement from their management. And of course, being in risk, I'm advising them that they have to do this safely, right? That's important. You don't want to create any more important damages. But I think this kind of the culture, creating a safe environment for people to try things and progress things is super important, and it's an enabler for any of the technologies. One actually risk, which is, I think I mentioned cyber, I think Sultan, you mentioned data as well, the data side. Obviously, when it comes to blockchain, people are more aware as well of the kind of ecological implications. So that shows how difficult it is to navigate through all the decisions. You have different audiences to please, and there's more focus on the environment. So that's another thing that is people are talking about from a risk perspective.
Right. Okay. So that nicely segues to well, if you like, a more a question that actually pertains to how the industry can work together with the regulator. So what is the, I mean, I myself am a great advocate of the, what I would call collaborative regulation. So as opposed to looking at the regulator and the industry sitting at the opposite sides of the table, I would say, you know, they are really sitting on the same side of the table. So what I wanted to explore with you guys is really what is your take into how the regulator, the stakeholders, if you like, the regulator, fintech, the consumer, and financial services can work together. I know it's a very, you know, broad and open question, but I think we need to start from somewhere, using as, if you like, a core parameter these technologies, this technology stack that we're talking about, AI, ML, blockchain-based technologies. So who wants to go first? Okay, I'll pick on some. I'll start with Wolfgang.
Sure. So I think you're looking at the UK, you're in pretty good shape here already. So you probably got the most progressive regulator in the world. So we're headquartered in. Well, I'm allowed to say that probably is. But then I think there's already a lot of like good formats that also an FCA has created and others. For me, I think we have identified and found a lot of those like right formats already. We just need to do more of those. I'm speaking of things like the tech sprints, those type of events where you like really hands-on work together. And then I think there also needs to be, a lot more informal get-togethers, just that the people on the regulatory side have a good overview what's out there, have a regular exchange, because that has then a very positive effect on particularly the ones in the industry that are very concerned of, oh, I'm not sure if the regulator will accept that, and if they then, okay, here name X, Y, and Z, yeah, of course we understand what they are doing, that kind of thing, yeah. So that's very important to facilitate. So I think we got the right formats. That's probably a short answer. I very strongly believe also in what you're saying in this open communication and open type regulation, and we just need to do more of it. And I think you're not in a bad shape here.
All right. Stacey?
Yeah, I think really is about integrations and kind of working together. So lots of firms, or every firm is using multiple platforms, and technology has got multiple regulations to adhere to. And certainly the way we've been built is to integrate all those platforms and have all that content, so there's no disruption. What you don't want is having to pick a particular vendor and strip everything out when you have compliance processes and built all around that. So that kind of ecosystem is not my favourite word, but that being able to integrate, fill the gaps wherever you have them, I think is the most important thing, rather than having to change everything.
Right. All right. Thank you. Nassos?
Yeah, I'm just going to add one thing, especially for those of us that we work in global banks, and we operate in multiple jurisdictions. So in addition to everything you guys said about collaboration, transparency, I think having some kind of a common regulatory frameworks, it just makes things easier. And from a cost perspective, because imagine, like big actually banks or any organization, they operate in multiple jurisdictions. There is a real cost when it comes to compliance, and if we actually see discrepancy between actually the different regions, that that adds to the cost of implementation, and as well actually it kills in innovation as well, because there are more hurdles to go through as opposed to have a clear path and delivery. So that's the key thing I wanted to add.
Right. Okay. So Sultana.
Yeah, I think Nassos hit the nail on the head for me, actually. So I'm going to carry on where you left off, which is the cost of compliance is an issue and can impede innovation. So I think somewhere in a Bank of England report, we put that it somewhere across 2 and 5 billion is the cost of compliance just for UK banks. in terms of UK. So that's not the cost of our buildings, it's the cost of actually complying. But that did resonate with us as a regulator. And one of the pieces of work we started off actually, which I think is an excellent example of the whole industry working together, is the future of data collection transformation, because that is part of the regulatory journey, and it is one where we can all apply technology. That's the bank itself, the regulated entities, the third-party providers and solution providers who actually build these systems for the firms that we regulate. And that started off as Stacey alluded to, a tech sprint, and then has now moved on to a full-scale industry piece of work where firms can self-nominate to join the pilots that we have in a bid to actually create accuracy in the data for the regulator, reduce the cost of actually providing that data from the firms, and ultimately end up with a better, more effective regulatory environment. So absolutely, I do think that this is an area where regulator and regulated do have a learning journey to go on together, rather than our traditional stances on, this is the regulation comply, which is our general consensus. But it does take time, and I think there is a maturity to reach to really understand where the regulator's job is to play and where it is for us to allow the markets to actually do what it needs to do in order to continue innovation, competition. And that's where I think my peers at the FCA have done a really fine job of actually opening up through the sandboxes, through the innovation, through actually sharing what they are doing internally. So I'm going to agree with Wolfgang because I'm completely biased, but I do think that the UK regulators are doing a really good job of actually opening up the pipeline. And that's not to say there isn't more to do, but I think the general view is that the regulator, is supporting innovation, competition, and wants this to work because outcomes actually benefit everyone.
Thank you. I guess on that account, it kind of builds a consensus that the industry players, the regulators, and users come to the realization that this is not a zero-sum game. That this is there are synergistic developments to be had, and that is really a pleasant thing to see, particularly in the UK. We've seen the efforts of the FCA and the Bank of England with very recently, I think it's happening today, there is the FCA is running a tech sprint on crypto, so it's looking into how the different sides of the industry are going to respond to that. So that has been quite an exciting discussion. I hope that everybody in the room got some key learnings. I think we have some time for some of the questions from the audience. I have a few here, so I know that we're not the time is not abundant, but I'll take them as they come. So first one is, what is your view of regulators' continuing policy of technology neutrality? Is this out of date? Does it exacerbate inertia and status quo bias within regulatory firms? Should regulators be vendor neutral while demanding use of new technology? Who wants to take that?
I'll start.
Please.
I actually think they should be vendor neutral. That's really important. They should be technology neutral. That's not really their role. Their role is about the outcomes, looking after consumers, stability, those sorts of things. But that's not to say what they see going on in one firm that's good practice that they can't share, and that's quite useful to be able to give that guidance and say, is this possible? This can be done in a better way.
Right. Okay.
So just to add to this, I totally agree with the point. There is just to also provide the counter argument. So definitely actually vendor neutrality. And I think this, coming from the business, having been in banks for a long time, that also helps, the strategy, right? Having the freedom to choose. There is an element from a customer perspective, which is concentration risk, right? And this is becoming a hot topic for certain technologies at the moment, including actually cloud, where you have certain vendors almost kind of they are from a specific geography, so there are some concerns with some of the regional regulators. So I think vendor neutrality, but also in a way that it promotes competition, ultimately to benefit the organizations and the customers.
Right. Okay. Thank you.
well, regulator stance on whether the regulators should be vendor neutral. So I think Stacey actually answered the question very well for me from a regulatory perspective. You know, our mission is to look after financial stability, monetary policy, and the safety and soundness of firms. It is not to regulate technology per se. Neither are we a technology company, so we wouldn't have the core competence to do regulation of technology per se. However, I push you towards a new consultation paper that came out from the PRA on third-party concentration risk. So we are looking at this from an operational risk and resilience perspective. So there is an expectation that firms should take into consideration things like concentration risk. Ultimately, you know, my personal opinion here is that, you know, there are very few large cloud providers. So there is an inherent risk that I think everyone is aware of, and it's about, you know, understanding how far you know your supplier chain. You know, is my firm liaising with, you know, exposed to another firm in a huge manner, in another firm, and that third party, and that concentration risk goes all the way through because they're all using Amazon Web Services. Now, we would look at that from an operational risk resiliency perspective, but we would expect firms to be doing their due diligence. Now, I won't make this into a compliance conversation, but essentially, I think the vendor neutrality is really important for the regulator because it allows the third parties and the solution providers to really thrive.
All right, thank you. I'm actually, because of time, I'll actually throw one more question in there, and I will start with Wolfgang. Because that's, you know, that it's relevant to what one of the topics you picked up. So is there any place for opaque AI when involved with compliance?
Opaque AI.
I don't know what, you know, the originator of the question meant. If you're here in the room, please, you know, feel free to elaborate.
Opaque sounds to me like hiding something, and I'm not sure if we need to, because from a tech perspective, obviously, with increasing complexity of models, the more difficult it gets to explain. However, so far for whatever we have done, we have found ways of doing explainability. So I think, okay, the effort increases, but that doesn't justify for me that, okay, just because it's a more complex model, I cannot do explainability. So for me, of course, there's always trade-offs. There might be certain things I can't do, for example. So we have certain restrictions on that we put on ourselves here, that we cannot apply certain type of features because we cannot explain them. So that's why we're not using them for the model. But I don't think there is. We need much room for opaqueness in AI.
Yeah, I think there could be cases where. So I totally agree. I mean, there could be cases where, you know, you use AI for I don't know, cyber defenses. You know, so you build a product to protect an organization. So there could be aspects that, you know, they can be a little bit more secretive just because of the nature of what you're trying to deliver. But I guess, you know, there was a lot of discussion on AI about trust, the ethical side. So openness would, if anything, would contribute to overcoming this challenge and support adoption.
Right.
Yeah, I don't think there's a place for opaque AI. I don't think there needs to be, actually, because, you know, when it's trained on very specific industry notions like insider trading, or you train it like ours to look at financial documents or email addresses or birth dates, very specific information, it's quite easy to actually then explain why a risk has been flagged. It's, as I mentioned earlier, it's those much broader data sets that you can't really explain where you've got to, because those ones had so much training going on to get to the result.
Yes, Sultana.
So I'm going to play devil's advocate, and you wouldn't expect the regulator to play devil's advocate. So it's in our risk tolerance. But some of the ways in which we've seen actually opaqueness work in what we do with AI at the bank is actually providing challenger models. Individuals could explain exactly what they're doing and how their approach is and how they got there. And some AI doesn't. But essentially, it might reach a different outcome. But that outcome could challenge the status quo. And and it's the same. Humans have bias. And some models that are not necessarily fully explainable could come to a different outcome. So I would say we've used it as a kind of counter-bias model, We've used it as a challenger model to the human factor, and that's without explainability, because we're not using it to take the decision, we're using it to ask you a question. And that's the data scientist in me, but I won't go into that particular kind of depth. And then the other thing about opaqueness is actually uncertainty, and I was saying this just before, also provides us with opportunities. If we think about our businesses, uncertainty is also horizon scanning. It's saying, where's our next USP? Where's our next, market product? Where's the next bit of regulation we need to do? So it's how you look at it as well. It's perspective. Can that uncertainty actually assist you in the particular activity you're doing? Can that challenge from the opaqueness actually provide a different view? Because humans don't inherently come with a dictionary and explain everything that they tell you. And it goes back to Wolfgang's point, which is you trust them. So if we can trust that opaqueness, and because of to Stacey's point, the data it's providing us or the information going in is high quality, accurate, representative, then perhaps actually we don't need that full explainability.
Right. Excellent. I mean, I think we can go on forever today, but this is all we have time for. So I would like to, thank all four of you for excellent contributions to that conversation. I apologize that, there are a few more questions that we don't have the time to, respond to as a panel. However, I think that people will be still around, and you feel free to approach us. So thank you very much, and thank you to everyone in the panel.
Thank you. Georges, thank you for chairing an enlightening panel. Yes, it could have gone on forever, but hopefully you get a chance to continue for a little bit longer during the networking sessions. And thank you, Sultana, Nassos, Wolfgang, and Stacey. And Stacey, well, I'm thanking you too early because you're staying with us, as you will now be giving us a presentation entitled Communication in a Post-Pandemic World. Stacey just gave a quick intro. She's Director of Market Intelligence at Theta Lake, an honorary fellow at Cambridge Judge Business School, with over 25 years of experience in financial services regulation and technology. As a regulator, Stacey led investigations across the industry, plus did internal audits for the FCA. And as a practitioner, she's designed and implemented compliance and risk frameworks within global banks and insurers. So a fantastic range of experience she's going to come and share with us today, talking about communication. Stacey.
So hello again, everyone. Thank you, Richard. As Richard mentioned, I'm Stacey English. I'm Director of Market Intelligence at Theta Lake, for anybody just joining now. And we provide security and compliance for all the modern collaboration platforms that we're all now using, like Zoom, Microsoft Teams, WebEx. We enable, many of these are actually our investors, and we have certified partnerships with all of them to ingest data and monitor and supervise. And we do everything from archiving through to risk detection, which I touched on earlier. Is my microphone okay? So I'll come back to some of the things we do and how we do it later. But first of all, I thought it might be useful to have a look at what the post-pandemic workplace looks like, what we're all experiencing at the moment, and see how that compares with what you're experiencing. So pretty much everyone has adopted some sort of hybrid working. 80% of firms have kept some sort of remote working, and it's in great demand by staff because of all the flexibility that it brings. Now, going with, hand in hand with that is the use of these new tools that were pretty much rolled out overnight. So like the Microsoft Teams, the Zooms, the Ring Centrals, the Slacks. We are all using those now as integral to our communications, to how we share information and communicate. Whether you use a tool or a filter that turns you into potato head in your meeting or not, or whether you decide not to turn on your camera, you will no doubt be using these tools. And actually most are using multiple tools. So they have either across the organisation or access to themselves multiple numbers of tools to use. Our work patterns are changing, our days are longer, you probably identify with this. We tend to send messages later or feel that we need to respond to when somebody else is communicating later. We even dress differently, we only have to worry about the top half now, we can get away with pyjama bottoms. And if you're like me, I'm one of that 3 out of 4 who actually wave at the end of meetings, something I wouldn't dream of doing, walking out of a meeting room in Canary Wharf, but it's something that maintains that connection. So a lot of that will be familiar. That's what we're experiencing now. But actually, this workplace that we are in is full of heightened risks. You know, that is very much the reality. The tools we've got, fantastic for keeping us connected, but we are surrounded by all sorts of other compliance and security risks. So another user error here where a lawyer was turned into a cat during court proceedings, couldn't get the filter off. I love the fact that it says on the screen, this meeting must not be recorded, and of course somebody has recorded it and shared it out. And that is pretty commonplace now. So, you know, user error aside, what are sort of other risks that we are facing? Well, massive amounts of targeted phishing aimed at remote workers. We've got platforms that introduce multiple ways to lose data, for confidential data to leave the organisation. That's nothing to do with the security of the platforms themselves. They have, you know, massive amounts of security invested in them. It's the way we communicate. It's the way we share information on chat, or we have screen shares, or we use video. We also know there's tons of staff turnover at the moment, whether that's the Great Reshuffle or the Great Resignation. We've got that coupled with staff who are pretty much burnt out and fatigued, and they all make organisations much more vulnerable to data loss. We're also hearing lots more cases of misconduct where staff, you know, that are home, and those lines between work and home have really blurred. Now, of course, none of this is going unnoticed by regulators. We're seeing constant messages and updates coming from right around the world, you know, of their concern about the hybrid environment, that they need to keep it compliant and secure. So this is the view from the FCA, a pretty definitive statement, a very good summary actually of what's coming out worldwide, which pretty much says, you know, you're expected to meet the rules regardless of where you're working. They're expecting the same level of controls, the same level of oversight. It's really no excuse that you're now in a hybrid environment to meet them. You know, we've heard them say before, you know, a year ago they've said the what remains the same. You know, the obligations are still there, the how may be changing, but you know, the what hasn't changed. So really probably shouldn't come as any surprise now that we're at a point after the pandemic that they are starting to look at these controls, look at the robustness, look at what's in place. Now the challenge is that a lot of firms think they've already got this covered because it's not new. So supervision, record keeping, all of these things are existing obligations. Nothing new here, but the tools that are being used are built for a different era. So tools that are built for email, for text-based communications, cannot handle the types of communications that we're now using. So lots of firms are finding significant gaps and weaknesses in their processes. So that's probably a good point to put into context what we do at Data Lake. So we were purpose-built for modern communications. Our founders had the foresight to know that we were going to be using these platforms in the future. They certainly didn't know a pandemic was coming and that we would be going onto these platforms overnight, rolled out, integral to how we work. And we ingest all of the logos that you see here and many more. We bring all that content and all that communications into our platform through APIs. So there's absolutely no disruption, very easy to turn on, switch on. It's completely frictionless, and we're a certified partner for all of these logos. So that means we've been through all of the rigorous testing and security testing that you would expect. And we capture everything, so the traditional email voice, but also all of the chat, all the video content, all the contextual information that is so much a part of our communications today. So our emojis, the GIFs and images that we attach, the likes and the dislikes, all of that contextual information that changes the meaning of messages and communications that really needs to be captured. And then we analyse all of those communications. We are looking for risks in them. Regulatory risks, data privacy risks, security risks. And we use AI, machine learning, natural language processing to do that. So that's across the whole spectrum, voice, video, chat. We'll detect something held up on screen. We can detect what that financial document says. We can detect logos, images, all of the context, all of that's brought in. And then that's all routed to somebody to review it. So really what this does is then somebody who's in compliance who has to review a Zoom call doesn't have to spend an hour or possibly 2 hours reviewing an hour-long Zoom call. Those risks within that call are just pinpointed, and they have a look at them and decide whether there's any action needed. And it's really changing the approach now to one of proactive risk detection and remediation. And whereas in the past, I think it's been much more of a store the communications and then go and search for them when there's a problem. This is much more proactive. It's what the regulator expects. And the final piece there is the archive. This can all be maintained in our worm-compliant archive, meets all the regulatory standards as you'd expect, or lots of firms already have this in place, they have it set up, and we just send it off to their archive, whether that's Global Relay, Proofpoint, Smarsh, or whoever. And any gaps that those platforms have with capturing any content, we'll just plug those gaps, send it across. Absolutely no disruption, which is really important to us compliance folks. So this is being used at large scale with financial services firms across the world. Firms are particularly liking the unified view they have, so one single place where they can look at all communications and show to their regulators that actually we're very proactive, we've got everything in one place, we're not off trying to look at disparate e-coms over here, voice over here. Much easier to demonstrate that proactivity. So what are sorts of things then that we are helping with and compliance officers are really worried about? Well, as I mentioned before, it's very much the regulatory scrutiny, and particularly on the retention of records. So at the moment, there's a big SEC investigation underway, and that's looking at how firms keep track of work-related communications, and really been driven by the use of mobile devices and WhatsApp in the hybrid environment. So we know staff are using these devices, but a lot of those communications haven't been captured. So there's some of the headlines there, looking at the action that's been taken and some of the firms that they're looking at. And we can really expect more on this. They've even set up a dedicated email address where you can self-report your non-compliance. So really just a view of things to come. And similar to what we've heard from the FCA previously, that have Market Watch 66, for example, where they reminded firms you have to record everything. The obligations are there. So none of these rules, as I say a few times here, these are not new rules. So MiFID II, GDPR, CISC, they are all still relevant. They all still apply to these platforms. But what's happening is it applies to a much greater set of communications. So we've seen ESMA come out and clarify this and say, look, it covers video conferencing, it covers chat and instant messaging, and actually we're not going to give you a definitive list of communications because it's going to change, so just cover everything. Similar, FINRA have talked about visuals in meetings, so anything like whiteboards, they're all covered and they all need to be captured. So of course one thing is getting on top of keeping those records, making sure you've got a retention. The next piece really is finding them, and actually that can be really tricky. So we're helping firms actually with that discovery piece. They can instantly search, they can pull back all their records, retrieve them. And when you try to do that for something like a chat conversation that's gone on for, it could go on for several years, you've got multiple participants, you've got images attached, links, videos, all attached to this chat message, to try and recreate that is impossible. So the benefit of being able to scroll through a native view, so basically as the chat happened, is massively beneficial for compliance officers. And of course, record keeping, absolutely fundamental to everything. Without it, you can't do your supervision. And the supervision piece itself is causing challenges because the volumes I mentioned earlier, without AI, no compliance team could or even should be spending hours and hours and hours looking at every single communication, listening to every call or video. Within that, you've got particular issues that you're not going to come across. So if somebody does hold something up at a screen and doesn't talk about it, you're not going to detect it with a transcript. So using AI, you can actually detect what's happened, where a link's been shared. It's very difficult to know what was in that link at the time. What did the document say? So for that audit trail, you really need to be able to show that proactive supervision. And again, I mentioned earlier, multiple platforms, lots of staff moving from one platform to the other, and actually impossible to enforce information barriers if you don't have the controls that take the macro view like us to say, okay, well, an individual's communicator on this platform has moved on to Zoom, is now chatting over here, and you can take that macro view and see if there's been any inappropriate sharing of information. Privacy, obviously a massive issue. As I mentioned earlier, the way we interact on these platforms has changed. We've all shared the wrong screen, and that is really a problem when that screen is showing someone else's account details, when it's got the HR system up or the CRM system. Chances are someone's going to take a screenshot of that as well. So we are really helping firms detect those often accidental screen shares. Often more frequently, there's the deliberate sharing, extraction of data from organisations. And given that we're seeing such massive turnover, the staff are moving, it's very easy to send data out the organisation on a chat message. There's no limitations like you would get in an email. You can attach an entire database of customer details and it will be out of the organisation on a chat. So being able to detect this is happening and deal with it and address it is absolutely critical. GDPR, in financial services, obviously a lot of our conversations with customers include personal information or health information. So whether that's date of birth, email addresses, health information, that all has to be protected. It has to be secure. And one thing we do is redact all that information so that you don't have videos or chats that have personal information sitting within them that is then accessible within the organisation so that, for example, a compliance team can see it. You want to know it was there. You just don't want to see the absolute details. So there's the retention piece because of subject access requests and customers asking for data. So being able to respond, find those personal details across all these different types of communications, find them, extract them quickly so that you can delete them or you can correct them or you can give your customer access to them. And obviously there's all sorts of obligations and timescales around this that mean you need to do it quickly. And last but not least, the security risks. We are operating in heightened cyber risks. The UK government has already warned all firms that they need to be on high alert for cyber risks. They have been talking to us. There's an article there in the Times that we publish with them because they want to know how these platforms are being secured, what controls are needed. Of course, this doesn't just apply to financial services. This is anybody who's using platforms. So their concern is that it's across education, healthcare, insurers, manufacturers, anybody who's using the platforms. We know that staff are falling prey to phishing attacks, so being able to identify any malware that's come in on any chat message, any screen share, and redact it and remove it. Any links that over time have become compromised. Really, really important to be proactively able to take those out of the system. And it's got some quite unique challenges because if you don't take a link out of a chat message, that will stay there forever. It will stay on your system live. Anybody can come back to it and it's become compromised. So really important to be alert and taking these out of the platforms. And then finally, really on misconduct, there are these instances, sadly, of threatening behaviour, bullying, abusive language, sexual misconduct, and that is all going on inside your systems. It's never been so easy to record anything. You can download apps off Google. Nobody would know you're recording those meetings. You could record it on your own phone. And if you're not aware of what's going on inside those communications, you can guarantee that somebody will record it. It'll be outside the organisation, and then you've got to answer to it. So much better to be ahead of the curve. We've seen this. We've seen, for example, a particular firm had issues in their recruitment process where some racist comments were made. That was recorded, uploaded to YouTube, and that firm had to deal with all the reputational damage and consequences of those remarks. And it wasn't aware of them. Had it been aware of them, it could have addressed them earlier and been seen to be on top of things. So if you'd like to find out more about us, check us out on Gartner Peer Insights. We have lots of customers there who've given anonymous feedback. We have 100% would recommend ratings and all sorts of accolades for service and support. We're pleased to get a mention in Gartner's Magic Quadrant, an honourable mention, and there's comments there from customers. I think the fact that these platforms like Zoom and Slack and WebEx have invested in us actually is testament to the fact that we are providing important security and compliance for them. And actually, it's enabling their customers to turn on features that they might have turned off in the past because they were a bit worried about using chat or worried about video. They've invested all this money and they really want to be able to use those tools, and this enables them to do that. So do come and see us. We're going to be here all day, and we'd love to hear how you're managing these challenges. We'd love to show you the platform in practice. We do have some fabulous socks, which have proved to be very popular with compliance officers. And we've got some umbrellas too. The team are in Santa Barbara, so I think this is their way of keeping us warm and dry in London. And do come and visit our website or connect with us if you are joining virtually. I'm happy to take questions now or at the booth. So any questions now, or catch me later? Thank you.
Stacey, thank you very much indeed. And if any of you aren't familiar with Theta Lake, do please catch Stacey or go to the stand afterwards. They are very much the right company with the right product at the right time. It must be something that's affecting all of you. So please do make the most of that opportunity today. Stacey, thank you. We're now getting prepared for our next session, which is a panel discussion, which is entitled, What is the Current State of the Fight Against Fraud and Financial Crime? And it's my pleasure to welcome a distinguished set of panelists and to be able to hand over to the chair of the panel, who is Harry Weber-Brown. Harry is CEO of TISA Digital, TISA, the Investing and Savings Alliance. He's got over 20 years of experience working in digital and strategic planning and program management. He's worked in the public sector with the Cabinet Office, Department of Health, the Home Office, the Department of Work and Pensions. He's worked in the commercial sector with Old Mutual, Lloyds, Reuters, Ask Jeeves, and not-for-profit, NSPCC, Shelter, and the BBC. He's about 100 years old and is currently actively investing and mentoring digital startups. Harry, over to you.
Fantastic. Thank you very much, and thank you very much for the panel today. I'm going to pass to each of my panelists first to introduce themselves. So firstly, I'd like to start off with David. Would you like to introduce yourself?
Yeah. Good afternoon, everyone. David Cox. So I work for Lloyds of London, the insurance market. I take the role of Head of Financial Crime and Compliance Advisory. So we look after the corporation risks and we look after and advise on the market risks.
Thank you, David. Vangelis, would you like to introduce yourself?
Thank you. Vangelis Ioannakis. I work for Santander UK, and I'm heading a team of analytics within our financial crime area, particularly focusing on transaction monitoring and customer risk assessment at the moment in order to make sure we've got the right controls in place to meet our regulatory requirements.
Thank you, Vangelis. And Trevor.
Hi, I'm Trevor Barrett. I am wearing a wire, but normally my voice is loud enough to be heard quite happily. If anybody can't hear me, I'll turn the microphone on. Anybody can hear me okay? Very good. Right, okay. So I was a money laundering reporting officer regulator for about 20 years or so. I then turned my hand to systems that detect financial crime, and I've been working in that area for about 20 years, so I'm not far off retirement. And I now work as the solution consultant and subject matter expert for ASD.
Fantastic. Thank you, Trevor. And Michael, last but not least.
Yeah, thank you very much. Michael Sokoloff. I'm here representing the British firm Behavox. We are an insights company that allow our customers to get actionable insights and insights into the illegal, immoral, or malicious behavior that might be going on in their firms. So it's really identifying those leading indicators of risk and allowing firms to actually put preventative action in place before some really bad stuff happens and they're on the front page of the red tops for all the wrong reasons.
Fantastic. Thank you. Thank you all for introducing yourself. So we're going to kick off. First question is, how is fraud and financial crime evolving? And as a follow-on from that, in particular, how is RegTech evolving as financial criminals become more tech savvy? Vangelis, may I ask you that question first?
Right. So I think we've got some new challenges, significant changes that we're all experiencing at the moment with regards to how geopolitics basically are influencing right now what we're doing in terms of being able to have the right control environment, and that obviously affects what the red techs and the data also we need to be able to meet those requirements. So what we see is, I think we all know about it. The world is supposed to be global, but now we have new lines being drawn, and that affects how we work within the banks themselves and all the institutions we're working in terms of being able to identify the risks, where they're coming from, and meet conflicting requirements quite often in terms of the controls, particularly for institutions that are global and operate in these countries. And that, as I said, practically that translates to challenges for how the technology can respond to that in a more flexible way, but also make sure we've got the right data and information to do those tasks.
Brilliant, thank you, Vangelis. Trevor, same question about fraud and financial crime evolving.
Yes, so in terms of the areas that we're supposed to be looking at, I mean, those are forever evolving and changing. I mean, if you look at the current situation with the migrants or the refugees from Ukraine, for example, now the vast majority of such people will be legitimate people who are fleeing for perfectly good reasons. But we have to accept and recognise that that is a smokescreen that can be used by financial criminals. And so some of the challenges that we have at the moment is weeding out those people who are seeking to take advantage of that, the same as that we were trying to weed out people who are taking advantage of the pandemic, which is hopefully beginning to be behind us, but is still an issue in some jurisdictions. There are various things we're being asked to look at for the first time now, or until fairly recently we're not being asked to. Things like environmental crime, for example. We've got distribution of ledgers, things like wildlife crime. The red flags for these sorts of things, for migrant smuggling, for example, are not familiar to a lot of people. They're fairly new things to look at. So we've got a lot on our plates at the moment in terms of new challenges that financial crime is presenting to us. We also have regulators who are quite properly looking into a lot of these things a lot more than they used to be, particularly things like trade-based money laundering, virtual currencies that are becoming mainstream. So a lot of things to keep us occupied.
Fantastic, thank you. Michael, would you like to add to that?
Yeah, sure. I mean, I think a lot of the risks that we see today are risks that have been around for a very long time. You think of voice as being one particular challenge, where we know that voice is 10 times more likely to harbour fraud than any other communication channel. Historically, there's been a challenge around transcribing accurately voice communications. Technology is available to do that now, mitigating that risk up to a point. You have cyber criminals becoming smarter now. So you look at the latest lapsus threat, where instead of looking through a route in the door, they actually go directly to people within the organization and pay them money to provide them with IP. So, how do you identify those people who are going to be vulnerable to be successfully approached by these cyber criminals to give away that information? You've got to have technology out there to look at particularly the communications, to provide insights or indicators that these people might be at risk of being approached and put them on a higher level of supervision.
Brilliant, thanks Michael. David, would you like to add anything to that?
Yeah, I think I'd just like to echo both what Trevor and Michael said. Fraudsters have historically always just followed opportunity, whether that be a new product, a new distribution channel, or a new market segment. They will look to see the opportunities therein. They'll also look to exploit your inherent weaknesses. Your staff are always going to be an inherent weakness. So the label that we attach to the behaviours may change, wildlife crime, migrant or refugee smuggling, but the underlying activities that the fraudster will seek to execute will stay the same. They will look to introduce themselves into your organisation. They will look to map your organisation's weaknesses and vulnerabilities, and then ultimately exploit them for their own personal or organisational benefit. So whilst the environment in which we operate and the products we use and the channels we use changes, those key drivers for the fraudster remain the same.
Brilliant, thank you very much, David. Moving on to the next question. Thinking about it from a sort of use case and sort of applications, what are the use cases and applications that technology can help organisations be protected against financial crime, AML and fraud? So, Trevor, would you like to kick off on that question?
Right, so I think the main three use cases in financial crime are, of course, as you've just said, Harry, market abuse, fraud, and anti-money laundering. And I think use of machine learning, I know you've heard a lot about machine learning so far, but I'm going to be talking a bit about it now, because one of the advantages that machine learning has is the ability to look at all sorts of different aspects, whereas rules can only look at a few. So we look at things like market abuse. You've got the volatility of the instrument. You've got the volume of the instrument. You've got, with things like bonds, the implied volatility or the moderation and all of that sort of all those sorts of metrics. You've got in your transactions the time of the transaction, the average transactions, the total transactions, what areas you're doing transactions in money laundering, and to a certain extent in market abuse, also in fraud. There are a whole different range of what we call features within machine learning, which you can look at, which rules are totally incapable of doing. So I would say in all three areas we are moving much more into a machine learning area without abandoning the rules. They have to go in tandem, because the rules we need in order to match the red flags that regulators give us.
Fantastic, thanks Trevor. Vangelis, same question, sort of use cases and applications in which technology can help organisations protect themselves.
Yeah, so in that same context, if we look at financial crime, where I'm spending most of my time at the moment, there's obviously very good technology solutions and loads of improvements in terms of being able to address customer screening, payment screening, which is really important. The market is exploding, so obviously there's loads of use cases there in terms of being effective and at a low cost. But also on the transaction monitoring side of things, where it's much more complex and more difficult to address. But I think the use case is more around being able to provide the advanced analytics, if I call it like that, capability in order to be able to identify behaviors and make the connections across those types of controls, because a lot of those at the moment work in silos. So the technology and the improved data can't deliver these in a silo, but how do we then connect all these dots to make sure that we become more effective is the key for me, because there's a lot of effort that goes behind maintaining these individuals' controls within our institutions that is very costly and very difficult to manage as it stands, and not necessarily doing the best job that we would want in terms of informing ourselves and the regulators.
Brilliant, thank you, Vangelis. David, do you want to pick up on that point? We talked a bit about the connections between different systems.
Yeah, I think we all recognise we live in we operate in a very complicated business environment, and one of the challenges we face is that we have various points of the control cycle that we deploy technology to cover. So if you think about Vangelis' world, you have probably a fairly sophisticated AML onboarding tool to get you through those risks and identify challenges that may present. And at the end of the cycle, you have transaction monitoring, and you deploy something sophisticated, something intelligent that's based on a set of rules, and you seek to identify patterns, as Trevor was talking to. What potentially can happen is that a gap opens between those two systems. A red flag is only a red flag if you have an expected set of behaviours and an expected set of norms. And if your KYC onboarding and your profiling of your customer at the outset doesn't sufficiently inform or talk to your transaction monitoring platforms, then the two are not going to be aligned. And what being called out as suspicious activity in your transaction monitoring world and have to be investigated, manually investigated and then cleared down, could have been a false alert if only it had learnt from the actual profile that the bank or that the FI was expecting from its customer onboarding. So I think the number of systems, legacy systems that the FIs have developed over time, the variety of products, the way the businesses are generally siloed and have developed financial crime technology solutions as their worlds have evolved, presents organisational challenges, which one piece of technology is not necessarily going to save or support. You need to join the dots, I think is how you said.
Fantastic, brilliant, thank you. Michael, do you want to pick up on that point?
Yeah, I mean, I think sadly we live in a world, and have done for a long time, where all our firms harbour bad actors. That's unfortunately the nature of the beast, and often those bad actors are doing it not deliberately. They're doing silly things. People do silly things. Even the smartest people do silly things. And I think firms owe a duty of care to their employees to protect themselves and their organization from those bad actors, way beyond what is required by the regulator. So I think firms need to look beyond just ticking a regulatory box, and they need to use technology that's available to identify those bad actors and make sure that there isn't misconduct, whether that's financial or just general misconduct, which we know the regulator regards exactly the same way as non-financial misconduct is regarded in the same way as financial misconduct. So firms need to be doing everything they possibly can in order to mitigate those risks, and technology is available to do that.
Brilliant, thank you. And I think a question very pertinent to the audience in particular is how can financial institutions identify the right technologies and how can they prove their efficiency, which I imagine is going to be of particular interest to many of the people in the audience. David, do you want to go first on that question?
I guess speaking as a practitioner, as someone who's tried to build financial crime frameworks for various FIs and at Lloyd's helped build out their financial crime framework, it's really, for me, it's very old school, but it's based on the risk assessment. If the risk assessment is right and it has considered the right aspects of your behaviours, your activities, your customers, if you have them, then that will drive your thinking as to where your technology-supported risk mitigation can be deployed. Now, the institution will have a view. I think there is an onus on the tech suppliers to take their product not in isolation and try and shoehorn it into an FI, but to work with the FI around what is it we're seeking to achieve, what are we working with in terms of existing suppliers, existing platforms, and what are we trying to deliver? Because then the expectation gap that can arise between a solution buyer and a solution provider is better managed. For me, the best relationships have always been fairly organic. We start off with an RFP and we start off with a product. Actually, what gets deployed is an iteration of the product that better suits the institution, and the RFP has been moved on slightly as well. And unless there's constant dialogue and it's born out of a sensible risk assessment, that journey is harder to achieve.
Fantastic, thank you. Michael, do you want to step in on that one?
Yeah, my lens is slightly different because I'm looking at it through the lens of a vendor. And I spend my life talking to compliance teams, and I've been talking to compliance teams recently, specifically around replacing legacy solutions that need to be replaced 2-3 years after implementation. Now, if that's the case, due diligence has not been performed because the vendor that's selected should be able to meet not just today's regulatory requirements, but the regulatory challenges of today, tomorrow, and the future. And if they can't do that, then you're just going to be wasting money by replacing legacy solutions. And infrastructure replacement is very, very costly. Never mind the licensing costs. Pulling out one solution and implementing another one is expensive and time-consuming, and nobody wants to go through that process. So, unless firms perform their due diligence correctly and look very carefully at the structure of the organization of the vendors that they're dealing with, and ask themselves, where are these vendors going to be in 5-10 years' time, then they're going to be continuing to waste money and performing and making the same mistakes they make year in, year out.
And do you think, just to sort of follow up on that point, a point made on the previous panel was it might take 5 years for a payback, you've got to spend to save. Do you think also the investment sort of horizon window is either shortening or expanding? I mean, what are your thoughts on that, Michael?
Yeah, I mean, it's an interesting question. Most firms license technology for a 3-year cycle. And if that technology is delivering value, and sometimes it's difficult to quantify what value is. If you're identifying bad actors before bad stuff happens, how do you actually put a value on that? By if you've identified fraud before actually anything really bad happens, how do you put a value on that? It's kind of difficult.
Yeah.
But you can actually put a value on the amount of time people are wasting on searching through false positives. That you can actually put a value on, but it's really, really difficult to quantify.
Thanks, Michael. Brilliant. Trevor?
Yeah, I couldn't agree more with your comments there. Interestingly, the authorities give us a lot of guidance on this. If you look at paragraph 5, 7, 18 of the Joint Money Laundering the Joint Money Laundering Steering Group guidance notes, they actually have a number of questions to ask your vendor. So the first one is, how does the solution enable the firm to implement a risk-based approach to customers' third parties and transactions? How do system parameters aid the risk-based approach and consequently affect the quality and volume of transactions alerted? What are the money laundering, terrorist financing typologies that the system addresses, and which components of the system addresses each typology? Are the typologies that are included with the system complete? And are they relevant to the firm's particular business line? What functionalities does the system provide to implement new typologies? How quickly can relevant new typologies be commissioned in the system? And how can their validity be tested prior to activation of the live system? What functionality exists to provide the user with the reason that a transaction is alerted, and is there full evidence process behind the reason given? And finally, does the system have robust mechanisms to learn from previous experience, and how is the false positive rate continually monitored and reduced? Now, I think that's a very good starting point for any kind of RFI, RFP exercise, those particular questions. The only thing I'd add to it, and again, I'd like to associate myself very much with what Michael said, how to test it. An RFP and an RFI is fine, going on reference calls is fine. The real way of testing a solution is to get the vendor in for a pilot. Get them in, get the solution installed, and if they don't produce very substantially better results than the solution you've got at the moment, be that another vendor or in-house, or if they fail to find a single risk that your legacy system did find, and if they fail to find new cases your legacy system didn't provide, as long as they've got the same data, then kick them out and never speak to them again.
I'd just like to add, actually, something that occurred to me as the gentleman was speaking was that from the institution's point of view, it's important that the right stakeholders are engaged. You know, it's not just an operations project, it's not just a compliance financial crime project, it's certainly never just an IT project, nor is it ever a business-owned project. There has to be the right people around the table, because everyone has got a different vision of what the system's going to do, how it's going to integrate with existing platforms, and you as vendors do not want to be sitting around that table while there's a squabble going on between a budget holder and an operational arm that's got to deploy IT support. So I think, you know, you need to make sure that you've got the right stakeholder community engaged as well, because as I say, that journey is much easier with the right people around the table.
Brilliant, thanks, David. Vangelis, do you want to pick up on that point?
Well, absolutely, and this goes back to the risk profile. So we're, jokingly saying, no offense to anyone, don't let your technology run the project, or your procurement either. Obviously, you have to follow the processes, but it's important to have the people that own the risk, understand the risk, driving those discussions in the room to make sure that, in order to achieve that effectiveness, the efficiency, because it's not just about, there's loads of great technology that, a lot of the people in the room produce, but it's how you're going to implement it ultimately to make the most of it. And one thing that's important, or a couple of things that are important in the process is, what's the capacity of the vendor, not only to be good in the technology, but to have the SME experience. So for example, again, in my current world, I would want to know that, the vendor has people that understand financial crime and they can bring this to the table, because otherwise then it becomes, a lengthy process trying to get the same SMEs within a bank that might not have the capacity to offer that, to support such a process, and ultimately, you're not going to get the results even if you can, because you don't have the right people. And then also, to the point that Trevor was making, is just you need to focus and do something that produces results quickly, and that's where again the combination of having the right technology with the right people is critical, rather than trying to basically deliver quite often big change which fails.
Yeah, brilliant, thank you. Please do post your questions up. I've got a couple of questions. I've got quite a few questions actually, but do keep them coming from the audience. So next question up is, what are the barriers for adoption of RegTech? And this was covered a little bit on the previous panel, but I think it'd be interesting to get your insights. And what is needed for the industry to overcome them? David, if I may turn to you first. So the barriers for adoption of RegTech.
Yeah. Existing organisational complexity, budget, the two of the classics, the deployment of internal resource versus external suppliers. A lot of IT departments within FIs now would argue that they are, to a point, able to deliver some form of risk mitigation through their own development. It's the engagement, as I said, with the right stakeholders. And you made a good point, Vangelis, about procurement. I omitted to consider those. But it's the risk-based approach. You've got to sell a benefit that comes with an associated cost, but the benefit is a saving, potentially. Could be customer protection, could be just financial revenue protection. And that's a challenge. And I think whilst people accept the need to have technology deployed in the financial crime compliance area, it's how much technology have we boiled the ocean here? Have we gone too far? Have we adopted the right level of risk-based approach? And having those conversations in organisations, is a challenge because people have other priorities, people have other focuses, and therefore it's sometimes difficult to get all of the different stakeholders to the same point of thinking. Because of the legacy systems, you've got to think about the data platforms that you'll be engaged with, and they'll have system owners with a different view. The lifetime of those data platforms will change. So are we buying a system now that we know will only be 80% usable in 3 years' time because we're retiring this platform over here that feeds it? So there's a whole host of organisational considerations that have to be thought through and overcome. I would suggest before even the FI should get to the point of engaging with potential vendors.
Brilliant, thanks David. Vangelis.
The couple of things to call out in addition to that is, well, we talk a lot about data, obviously, in addition to the technology, and a lot of the data challenges go to what's available to us, what's available in the market. We talk about digital identity, for example, where we don't necessarily have that in a consistent manner in the UK. From my experience, you go sometimes to countries that we don't consider as advanced, let's say in Asia, and you see that they have potentially digitalized the identity of people. They might have very good ways of identifying who they're dealing with. So these are things we need to consider as well on our side in order to be able to enable more of these solutions. So that often becomes a barrier, particularly when you have to integrate basically internal data and external data. And another key thing we talk in terms of AI and machine learning are becoming quite important in terms of the technologies is the ability to, explainability is very important. That is quite often very hard to achieve because of the way the algorithms work, because ultimately, yes, it's great technology. Again, you'll get your analytics guys coming in telling you, but it's there. But you need to be able to find it yourself and be able to explain it in a way that you understand it. And obviously you can respond to a regulator if you're asked why you made this decision. Why did you close this person's bank account, for example? So unless we're able to get to that point of doing that is a barrier specifically for ML.
Fantastic, thank you. Turning to the other side of the market, Michael, would you like to pick this up from a sort of vendor perspective? What do you think the barriers are of adopting RegTech?
Yeah, I think one of the biggest barriers is the perception within a lot of these organizations that we deal with that compliance is a cost center and it disrupts business. And that's historically been a problem. And I think unless vendors can demonstrate that they're adding a value and allowing those compliance departments to be perceived as partners to the management as opposed to barriers, then it's going to continue to be a barrier, unfortunately. And I think when making decisions, if those decisions are based on being able to check that regulatory box, then long term there's going to be a significantly higher cost by orders of magnitude than actually the cost of bringing in the new technology. I think I still find it very odd that historically financial services have been leaders, actually innovators when it comes to technology, but when it comes to cloud, actually they're very reticent and reluctant to adopt cloud solutions, particularly when there's personal information and data required. So yeah, I've seen a lot of very large financial organizations saying, no, cloud, no, we have to keep our data on-prem. That beggars belief, but that's the case. That's a barrier.
Thanks, Michael. Trevor, do you want to pick up on?
Thank you. Yes, again, I'd like to associate myself with what Michael said. A couple of points that so picking up on something that Vangelis said on understanding. You should never be using a system that you don't understand. But it's frightening how many people are. I do quite a lot of consulting, and I go into firms, and they say, we've invented this wonderful new rule that does X, Y, Z. And I have to tell them, well, actually, if you look on page 27, the solution guide, we've had that out of the box for the last 5 years. There is a great deal, I'm sure nobody in this audience, but in the wide world out there, there is a huge amount of lack of understanding in terms of what the technology actually does. And that's as much the fault of the vendor as anybody else. We should be investing more in training firms, in explaining things, in making our documentation more understandable if it is in any way ambiguous, to make sure that the layperson really understands what the solution is and how it works. The other thing, again, that other panelists have talked about is the emotional capital and the career capital that people have in thinking they can do it themselves. If you've got somebody who has spent the last 5-10 years of their life building an internal system, that person is going to be emotionally extremely resistant to actually somebody else coming in and replacing that system, or even augmenting it. So that is a big barrier, and vendors need to be sensitive to that and understand how to work with such people. It reminds me a little bit of, I don't know if many of you remember this, but a few years ago, BT Internet, used to have an advert with Gordon Ramsay, and he was trying to put a Wi-Fi in one of his restaurants, and he was screwing things up with a carving knife and so on, while there was pandemonium around him. His dishes were burning, waiters were falling over the place. There was an absolute chaos around him while he was trying to install a Wi-Fi system in one of his restaurants. And the message there was quite simple. BT do this thousands and thousands of times. Gordon Ramsay is a chef. He's an expert in that field. BT are an expert in Wi-Fi. Same with a software vendor. Without wanting to sound blasé about it, we have done this many times over a very long period. And so we have skills and experience that can be used and can be leveraged in tandem, in cooperation with our clients. So I would very much want to try to understand the mindset of those within banks who say we can do it all ourselves, or we can do it with the system we've got, and to try and work with that to see how we can take the best of both.
Brilliant, thank you, Trevor. Just moving to the last of the questions, and then before we go on to the audience questions, so now's your last chance. If you want to post some questions up, please do. From a regulatory perspective, there was a very interesting discussion on the previous panel about what the regulators are doing in the UK to help this. So I just wondered, maybe Trevor, I'll pass over to you. What are the regulators actually doing to help organisations operate in today's environment with growing cases of financial crime?
Well, I think the FCA actually are doing pretty well here. They have a number of committees. They invite vendors to participate with them on those committees. They seek our opinion on things. They are happy to talk to us. Some regulators refuse to talk to vendors. I can kind of understand why, but I think it's a mistake. And FCA have always had an open door to vendors. You never get the FCA to express an opinion on a regulator, quite rightly. But there is a dialogue between us in terms of us combining our skills with theirs to get to the right approach. They have things like the sandbox, the sprints that they organise, the hackathons. All of these things, the FCA are leaders in providing some regulators do, rather less than the FCA, but I think we're very fortunate in the UK with the amount of things that they do. The other things that I would really encourage you to look at are the various papers that are published by regulators on various things. One of the very best that I can recommend is from the ACBR in Paris. It is available in English translation. It's a study of machine learning in fighting financial crime. It was published last year. FCA has similar papers which are of very good quality, but if you can only have time to read one paper, read that one.
Brilliant, thank you. David, do you want to add anything to that about?
Yeah, there's a couple of points I'd like to make. Firstly, to echo Trevor's point, the FCA are taking a very adult and mature approach to their oversight model. They seek to get to know the institutions they regulate. They seek to have extensive ongoing dialogue about the risk profile of that institution and the risks it poses to its customers. They are treating, in my experience, more and more kind of Section 166 solutions as the last resort. They're leveraging the SMCR programs, the accountable executive model, and they are therefore asking institutions to give undertakings and then getting the findings that they've delivered those undertakings independently validated, and almost stepping back from being too engaged. And if I can comment also upon the Lloyd's model, we have an oversight function of the Lloyd's market. We've recently moved from a fairly prescriptive set of minimum standards to a principles-based approach where we will assess a firm's maturity, assess the risk we feel is in their book of business, and set out some expectations of what we therefore think their financial crime program should look like. But the freedom is for that institution to map those expectations into how they deliver. And then there's always an interesting debate around, well, you think it's met our expectations, we're not quite so sure. But it's a principles-based approach where there is freedom within the organisation to build its own framework. So I think, the way of regulation, some of the worst system deployments have been created by Section 166. The need, with the regulator hand in my back, to put in a system that mitigates risk ultimately leads to a poorly implemented system and a poorly implemented solution. You hit your timetables, but you don't get what you ask for. So I think taking that step back and having that more mature approach is what we're seeing across various regulatory bodies.
Fantastic, thanks David. As we're going to move now to the audience questions, obviously you guys haven't been briefed on these, so don't feel any pressure in having to answer them. So first question is, how big of a threat are cryptocurrencies to be used for fraud and financial crime? And is this impacting their adoption, particularly by banks? I don't know if anybody wants to pick that up. There's no pressure on anyone to answer that, but maybe Trevor, do you want to go?
Yeah, so cryptocurrencies are rather like nuclear power. They're dangerous in the wrong hands, and they're particularly dangerous in uneducated hands. Like nuclear power, they have a great force for good. So with blockchain and the openness of the distributed ledger system, you can actually do a lot of monitoring of virtual currencies that you can't with fiat currencies, because you don't see all the transactions going back to the famous pizza transaction right at the beginning of Bitcoin and so on, which you can with virtual currencies. You have firms out there that specialize in finding the dodgy wallet, and once you've found the dodgy wallet, then you can see anybody who's associated with the dodgy wallet and build out a complete network of who might be dodgy by association, and this particular holding may be the fruit of the poisonous tree, as our American friends like to call it. So there's a lot of advantages that virtual currencies bring to monitoring. The disadvantage, of course, is the anonymity. But the regulators are now putting in place, or have done, the need for exchanges, wallet providers and so on to address that, to actually do full KYC on everybody that comes through their doors. And the vast majority of wallets out there are from exchanges or professional wallet providers. So we are moving to a position whereby, although the data may not be there on a day-to-day basis in monitoring. It is available by subpoena, by regulatory action, and so on. I think in the long term, we will actually find not only that virtual currencies will be adopted much more in the mainstream than they are today, but also they will actually improve our ability to fight financial crime.
Brilliant, thanks, Trevor. Would anyone else like to add to that question?
Yeah, I was just going to say, I don't think it's necessarily anything, that you should consider a greater threat. Is a level of understanding and maturity and our ability to basically understand the risk, make sure we've got the right information and put the right controls in place. So that makes people nervous, I guess, until they get to that point.
Brilliant, thank you. I mean, picking up on the next question, actually, which is an area which is very close to the heart of ties around digital ID, is the industry doing enough to develop digital ID solutions to help remove fraud from onboarding processes? And Vangelis, you mentioned ID earlier on. I don't know whether that might be something you wish to pick up on.
Yes, so I mean, I mentioned my experience from previous lives of doing some work for the World Bank, and where I looked at the digital identification that has been implemented in many countries in Asia. Excuse me, and that really includes a very tight system where everybody has an ID, and that quite often contains biometrics. So obviously that has great benefits in terms of removing any ambiguity about who you're dealing with. But there are challenges here, not only in terms of the industry, but in terms of as a society, how far we accept these things are, things we want to do, particularly in the UK, and how basically security, privacy, and everything else is managed. So, the benefits, if you look at the benefits as an industry, we should be doing more to look at replicating those models potentially. But, we just need to get that balance right and convince people.
Brilliant, thank you. I'm going to keep moving on just because we're going to run out of time very shortly. I'm sure everybody wants to get off to their lunch. What about the people component of preventing financial crime? So we've spoken very much around the technical side, and the previous panel talked a lot about training people, for example. So this says, for example, how can we encourage people to engage in a safer security behaviours so they are less likely to become victims of financial crime / fraud? We've only got a few minutes, so I will keep it quite pithy and short. I don't know, David, do you want to?
Yeah, I can't quite work out for the question whether it's aimed at sort of the consumer or...
It's more at the people, yeah, so the people component of preventing financial crime.
Yeah, I think the UK has particularly got itself in a bit of a muddle with its counter-fraud strategy. So your average consumer doesn't know whether to go to action fraud, go to their police station. They look at the various bodies that are out there, all with a website presence and some literature. There's a host of sources you could go to, but where should you go to? Do you place reliance on your FI to help you become educated? And that's more the direction of travel when you open an account or you're getting an alert. There's always something on there about the latest scam or the latest, and that's because of PSD2 and other things that have driven that responsibility into FIs. But if I didn't work in fraud and financial crime, I would be confused about where to go to protect myself from attack.
I think just to add to that, Stop Scams, which is a charity that's been set up recently by banks and mobile network operators, is probably the first place to go. If you just Google Stop Scams, that's a good place to go to start with from a consumer perspective.
Yeah.
Final question. Should we move from annual contracted license agreements to flexible SaaS pricing models in RegTech? A very, very specific question. Michael, do you want to pick that one up?
I don't have a view on the subject. Ultimately, from a vendor's perspective, we will do what the customer requires. That's the role of a vendor. We want to meet the customer's requirements. If that's the customer's requirement, then that's always going to be on the table, isn't it?
Fantastic. Anybody else like to pick up any sort of thoughts on that one? No, Trevor. No.
I agree entirely. I mean, if you within reason, you can pay us any way you like, as much as you like, as often as you like.
Or not at all.
Yeah, I'll take it in cash. I won't take rubles at the moment.
Or cryptocurrency.
I'll take cryptocurrency. Sorry, I'm not the financial director of IASD, but I personally would.
Fantastic. Brilliant. Well, I think we'll wrap there, guys. Thank you very much for your time today. So thank you to David, to Vangelis, Trevor, and Michael, and thank you for all your patience, and enjoy your lunch. So thank you.
Okay.
Thank you for sharing your insights with us. That takes us to lunchtime, those of you who've been waiting. We carry on in here with a panel discussion on the impact of RegTech on risk management after lunch, and we carry on in the room next door with a demo, with a solution provider demo. So please make a choice, and we'll see you back here or there in about an hour. Thank you. Okay, welcome back everybody. If you're still eating, drinking your coffees, please do start to move to your appropriate rooms. In this room, I'm delighted to be able to present our next keynote panel discussion. It'll be on the topic of the impact of RegTech on the risk management model. So I'm delighted that we've got, yet again, another amazing distinguished panel of speakers. And I'd like to hand over to our chair, and welcome back, Francesca Hopwood-Road, who is the centre head at the London Innovation Hub, I think, for the British Bank for International Settlements.
Bank of International Settlements.
Bank of not the British, the Bank of International Settlements, of course. Francesca joined to lead the hub very recently, having headed up the FCA's RegTech and SupTech activities for many years, I understand. So, Francesca, welcome.
Thank you
Over
very much
Thank
indeed.
you.
Thank you. It is my great pleasure to be here with you all this afternoon, and I'm also going to spend a few moments welcoming our virtual guests as well. So thank you for that introduction. Yes, this panel is on the impact of RegTech on the risk management model, and I am delighted to be joined by a very esteemed panel: Samantha Brayshaw, Ryan Swan, Rachel Greaves, and Simon Thomas. Before I ask them to introduce themselves, I'm just going to spend a few moments talking to you about how this session is going to run this afternoon. We have 45 minutes together, and having done the briefing call with this panel last week, I know that we're going to have a really rich and engaging conversation. But I also want to leave plenty of time for questions from you in the room today and from our guests who are joining us virtually. So, with that in mind, I'll aim to leave about 10 or so minutes towards the end of the session for questions from you. For our guests who are joining virtually, I believe you have an app, and I believe all your questions will come to me on my iPad here. So please do start putting your questions through, and I will share them with the panel when we get to that point. So without further ado, can I ask you, Samantha, to introduce yourself, please?
Hello, my name is Sam Brayshaw. I've spent most of my career either implementing RegTech or dealing with the various compliance issues that come from working in a finance or risk function.
Thank you. Ryan?
Hi, yes, Ryan Swan. So I'm Chief Legal and Risk Officer at Think Money. Look after risk, legal and compliance teams, and I suppose we are on the smaller kind of scale in terms of more the perspective as a small medium business rather than a global bank, and some of the issues that we've faced and challenges.
Thank you. Rachel?
Thanks. So I'm Rachel Greaves. I'm the CEO and co-founder of an AI RegTech company called Castlepoint Systems. My background is I'm a certified auditor and privacy engineer and certified security manager and certified records manager. So I'm the compliance person in our company.
Thank you. And Simon?
Yeah, I'm Simon Thomas. I'm the chairman of Thomas Murray. We sort of specialize in technology provision to banks and brokers, asset managers. My background is PwC, Warburgs, and KPMG.
Thank you. So when we met last week to kind of talk about how we wanted to shape this panel and what we thought our audience would get the most value from, we talked about kind of a bit of a scene set, kind of a context opener around where the sector has been over the last few years in light of the pandemic and kind of some of the challenges and opportunities that has presented. We know there's been quite a lot of research on it. The City of London produced some research on this just last year. But perhaps I could come to you first, Sam. What kind of, as a consumer of RegTech solutions, what have been your observations of how the market has shifted, responded, or not to the last few years?
Well, there's nothing like a challenge. During COVID, we were halfway through a system implementation, and you suddenly had to do a very strange risk assessment that says, number one, can I still run an implementation where we're used to working together? We suddenly had a lot of environmental changes, learning how to co-work and cohabit across multiple different technology systems, but also factoring in the risk of delays to the programme and any ongoing regulatory issues because your team had COVID. So lots of different challenges just from a physical perspective. I think then from a regulatory perspective, it's trying to ensure that your systems could adapt with all the new things that banks were looking to do, whether that was the implementation of BIBLs and SIBLs, making sure you were equipped to respond to the different interpretations that were coming from a regulatory perspective, never mind the compliance of dealing with a rapid flow of deposits coming in, with the loans, and just how you could then structure that. So for us, it was a real baptism of fire, but through technology, how did you learn to adapt quickly to that?
Thank you. Rachel, I saw you nodding furiously. What would be your take on that as a practitioner?
Right, so we saw the same kind of challenges, so a distributed workforce, and that made a more permeable network, which increases risk, obviously. But what I've seen in Australia, New Zealand and globally is really a recognition that we have very little control of our supply chain, for example. So with COVID, we saw a lot of impacts on we had a toilet paper shortage. I don't know if you guys heard about that. It was dire. So what happened with that was that there was a recognition more broadly by our government and governments all around the world that actually we're very vulnerable to these kind of disruptions. When we're sending people home or we're changing the way people work or we're having lockdowns, we're very, very vulnerable. And the issue with that isn't so much another pandemic, although that could happen. The issue is that suddenly it's very clear that we wouldn't respond well to interference by a foreign state actor in those same supply chains. And that really increased the focus on cyber risk and privacy and security, to the point where now in Australia yesterday, a financial services company was successfully fined $750,000 for failing to manage their cyber risk appropriately. So just not having the checks and balances in place. When they were breached, they were then found liable. And that's actually new that we've started to do that. So I think there's much less appetite for risk in terms of destabilisation of critical industry. And now in Australia and in lots of places around the world, financial services have been named as critical industry. So there's a lot more government oversight, a lot more concern, and a much sort of a higher sensation of risk than we had before the pandemic.
Thank you. Ryan, what's your take?
Yeah, I think stating the obvious, I think it's that we can do things differently of what we've kind of seen. I think it's there's been a lot of kind of work in the retail kind of space on the consumer kind of front end and platforms and systems. I think sort of COVID has really brought to the forefront for us in terms of it's our kind of time, it's the back office time to kind of to innovate, to do things differently. And I think we've seen in terms of earlier sessions today reiterating that around data and in terms of being more proactive and all that kind of good stuff in terms of would we have predicted the pandemic? No, but actually would we have been more resilient? Probably, if we'd have been more forward kind of looking. And I think what that's also led with the RegTech sort of side of things is to protect our kind of people, our expertise. So actually it's in my kind of world, it's doing more with less as well and seeing where we can use that. And I think it's also bringing through that new breed of risk manager who want to be innovative, who want to do things kind of differently. I think as an organisation and as a community, that COVID has taught us that actually we can turn things upside down and actually change is good. And that's across both boards, across teams, across regulators. I think it's moved that story on a lot more.
Thank you. Simon, any reflections from you?
Well, obviously it's been an extraordinary time. I think we've seen our applications much more heavily used during COVID. I think the whole push towards cyber and focus on cyber has been absolutely extraordinary. We've introduced a sort of cyber risk application which is very heavily used now, and I think it just talks to this. It happened to coincide with what's going on with COVID, but I mean it was took a long time to build. I think we've traditionally sent teams around the world to really reinforce the DDQ data and get representations locally. Obviously those teams couldn't travel. I think we found that we've had to therefore, or we've seen clients using more technology than ever before to really try to capture additional holistic views of these entities, and it's been a challenge, continues to be a challenge. I mean, the other thing we're seeing is our larger clients taking their API feeds of the data we pull in is now being called every 10 minutes, not just sort of once a day or every hour or two. So there's much more proactive analysis, much more reliance by certainly our clients in the financial sector on the tools they have to form a view of risks of the downstream suppliers. So it's been an enormous shift. And I mean, it may be that the local physical due diligence re-emerges, but I suspect it'll never go back to the reliance that was on it. It'll all be a technology push, and you know, we welcome that.
Thank you. And on that, I mean, one of the things that was kind of formulating in my mind as you were all talking was how far some of those changes are fleeting and how far that change will persist. And some of the things you talked about, Ryan, was around a kind of an appetite and engagement and innovation and kind of what skills that therefore you need to breed within your organisations. And I wonder if you could sort of talk about that a little bit more.
Yeah, I think in terms of that traditional kind of approach in terms of, you know, especially obviously in financial services, around it being, you know, risk, looking at regulatory kind of risk, and I think that's, you know, it was broadened into conduct, and coming on probably to later in terms of that role widening as my role as Chief Risk Officer, in terms of it's now across all kind of remits, and I think it's then looking at kind of, again, the different skills that you've kind of got, where we've sort of created a risk analytics team that we started a couple of years ago in terms of bringing that skill set in that a data analyst but sit within the risk team. You know, why do we do that? Because we're fighting with tech resource and other resource, and we wanted to bring that there. But actually, I think then those people in that team are then coming forward. Well, actually, there's tools out here, and it's almost cross education. So in terms of the SMEs within risk and compliance, who kind of know the rules and regulations there, the risk and analytics kind of side, and bringing that together, and then still keeping that business engagement model, because, you know, without the people, without going out and understanding what's kind of going on, it's useless anyway. So I think that cross collaboration, and we kind of look at it around, you know, sort of say to my teams, product guys have a product, marketing have a product, well, we have a product, and our product is risk and compliance. So how do we go and sell that product? How do we educate people on that product? And that product is technology, it's processes, it's people. I think it's kind of bringing those kind of skill sets in that we can all learn off each other that way, how we've seen it.
And one of the things you were saying, Rachel, was about kind of the complexion of change. You know, the pandemic has bred all sorts of different responses, and one of the things you touched upon was around cyber. And I think that what that means in terms of how agile you need to be as an organisation to be able to respond to that. Yeah. Simon talked about challenges quite a lot. You've talked about kind of opportunities. I wonder if you can kind of go into that in a little bit more detail.
Yeah, well, I think that the pandemic specifically, not to harp on about the pandemic forever, but, you know, it's still pretty raw for all of us here. What it did is it really knocked down the very last barrier, because we had guardians of compliance before. We had the regulatory team or the records management team or the cyber team saying, no, you can't have that technology. And the business was saying, but we want it, we'll be so productive. And they were saying, no, I'm sorry, you can't have that in the cloud, you can't collaborate. And then we had a pandemic, and just all bets were off. We just had to mobilize, we had to go cloud, we had to go virtual, we had to go, you know, remote access. It just happened, and that last kind of bastion was taken away. So what we do have to do now is be agile, like you said, and say, okay, well, there'll be new technology every day. The business now is empowered to go and get what they want in order to just continue functioning and being productive. How do we make sure that all that emerging technology is managed in terms of risk? So we have to then work out how to make the data in those systems and the use of those systems compliant and secure and appropriately records managed without needing to modify that system. Because as we went global and as we went virtual, we bought more and more COTS technology that we don't have control over. We can't customize it, it's off the shelf. So that's not the only kind of adaptation that we need to do rapidly, though. The risk environment changes rapidly too. So in Australia, we have something called the Individual Health Identifier Number, and it's really second only to your tax file number in terms of its risk and use for identity fraud. And because of that, it's such a sensitive government identifier that it's protected under an act, and you're not allowed to have unauthorised access to this identifier, you're not allowed to disclose it. There are big penalties for doing that. And our government, in its wisdom, put everyone's IHI on your vaccine certificate. So now everyone was asked to send in your vaccine certificate to work, send it into universities, send it in everywhere, send it to the, you know, cafe, like whatever it is. So thousands and thousands, millions of IHIs have been spilled effectively into the public domain. So we needed a way to, and that's something we built into our tool, a way then to really quickly go, well, here's an emerging risk that we couldn't have predicted, maybe we should have. How do we respond to that and find these things so that they can be managed? Those regulations are complex. It's very hard to train the whole organisation to know that. Did you know that IHI is protected under law? No, you didn't. And why would you? The other issue that we have, post-pandemic is churn of staff. It's a labour shortage, there's a lot of mobility. So even if you could train all your people in all the regulations and all the risk, all the secrecy provisions and the retention rules and all the sensitivities like that, you'd lose them then straight away. So there's been a real direction towards making this kind of compliance invisible and automated. And in fact, the international standard for records management has now changed to require that kind of compliance to be invisible and automated.
Thank you. And Sam, if I can come to you, I mean, one of the things Rachel was talking there was about kind of the risk environment, the external environment changing, how to kind of have an appetite to embrace, assess, engage with technology innovation that is happening seemingly on a daily basis. From your vantage point, what would you say, what's your take on what the kind of latest tech innovations are that are impacting your world?
I think if I look at my world in particular, it's around, especially with the changes in regulation, I think back to the point made earlier about the breakdown of silos, this is no longer about a regulatory reporting function or a compliance function. It's looking for technology that can help you join the dots and look end to end. So everything that you look to do across a bank, and that's obviously where my experience sits, involves end-to-end cooperation right from the point that a customer is logged in the system, for example, right the way through all of the compliance and the reporting. So one of the challenges that I find, especially where I look at different systems, is how can we either use that data in a combined way to make more informed decisions end-to-end for the whole process, or even better, is there a system that can help us connect the dots themselves? So I spend a lot of my time looking at compliance and GRC tools, regulatory reporting tools and treasury management systems, for example. Wouldn't it be amazing if there was a way that we could connect all of this information and data and use it to make really informed decisions? That's kind of what I'm always on the lookout for.
I know we're going to come back to this point later on around kind of, but as the challenges for RegTechs in terms of, engaging the kind of the sort of demand side with their tools. But Ryan, perhaps I can ask the same question from your vantage point in a sort of a different part of the forest.
Yeah, I think it's what Sam sort of said in terms of, I think the innovation that we're kind of seeing, I suppose, in terms of a technology innovation. Technologists out there will probably say, well, actually it's not that kind of innovative, but in terms of where we kind of see it helping us, I think that kind of integrated kind of approach, I think people have talked about it today, and I think my kind of fear is actually making sure that we don't kind of lose that. So in terms of whether it's APIs, we can pull that information together, because I think we've had a lot of work, a lot of great ideas, a lot of great products out there that kind of fix kind of different points, and that's brilliant. But actually, as a practitioner sat there, what I don't want to do is have to go to all different points. Equally, what I don't want is 3 or 4 different versions of the truth. So we have to look at it as a holistic kind of risk level in terms of where do I inform my board, where do I put our resources, where do I focus most on, and what we don't want to do is actually this looks great over here because we're really focused on, we've got a great tool that's fixing it, but actually we're not looking at the kind of this area because we don't have full visibility. So I think the technology to connect, whether that's connecting into systems, whether it's RegTech systems to RegTech systems, so we can join the dots up to Sam's point, I think that's a really important part that we should kind of focus on.
Mm. And Simon, what are you hearing from your clients?
Well, I mean, to this point that's just been made, I mean, I think it's really where, look, we've for some years now have had clients that might buy our DDQ automated questionnaire tool, or they're buying our market intelligence sort of real-time data tracking tool, which looks at capital market information, and then we have this cyber tool. So what actually we are finding is we've had to bring them together. So it's single sign-on. You've got 3 applications, so you have a holistic view, running view of these different entities that you're trying to track. Some of them you're monitoring, as I said, on a sort of real-time almost, well, not quite nearly real-time basis. Others are, cyber is maybe a weekly update. You've got to bring it all together so that people can begin to do their job properly. And then when they want to do a deep dive into a particular set of suppliers, they can launch questionnaires and use the DDQ. I mean, it's got to come together. So what we ended up doing is building a dashboard, which actually brings all this together, and it cuts then across multiple functions in bank. I mean, some of these banks have 20, 25 different divisions, and
it starts to talk to that. And I think it's about integrating and bringing them together. And I mean, I have to say, our world has been, you know, very much around wholesale banking, so I know nothing about retail banking. Yeah, thank you.
Thank you. And just sort of pulling on that thread a little bit, you know, one of the things, you know, kind of the themes coming through there were around integration, single view, help me join up the pieces, help me kind of see kind of my landscape. You know, there's huge amounts of data, various different tools to kind of cut through that. But from your, and I think this is a particular question for you, Sam, and for you, Ryan, kind of what would you say, you know, what do they help you do in terms of some of the key regulatory challenges you're facing into at the moment?
So I think one of the key challenges that we face from a regulatory perspective is you're all about showing how you comply with the regulation and how you can evidence that regulation. And back to the point I said earlier, it's end to end. So if you look at the CRR articles, it could touch 5, 6, 7 points around the bank. So wouldn't it be amazing if there was, through the user interface or a dashboard, you could bring all of that together to make a really informed decision? Because in many instances, either compliance or reg reporting are any errors there or challenges are the consequence of something that's happened elsewhere. So for me, it's, you know, how can I bring all that information together to make an informed decision? And then using that data to try and figure out how I act on that going forwards. And, you know, sort of when you engage with the regulators or even your own second line of defence function, they're looking to try and understand the process, look for evidence of the thought pattern, look what controls you went through, what processes that you followed to see where the errors have arisen and how you can then fix them going forward. So for me, it's about using all of these tools to help inform and evidence how we've tried to comply. And let's not forget the regulations and the bar is constantly rising. So the burden of proof is ever more on the practitioner to really show that you've understood the interpretations and applied those. And I think if I bring that back to a technology perspective, one of the interesting debates that we've had this morning is when we buy a tool, we need to understand the black box that sits within it, and we're accountable for that block. So I can't outsource my regulations to a regulatory reporting tool. I have to show that I've understood the code and how those regulations are calculated so I can prove my own compliance, whereas previously I think we'd relied on technology to do that for us. So I think the big thing for me is how can we work hand in hand with technologists to make sure that end-to-end accountability comes out.
Hold that thought. Rachel, Simon, I would love to get your take on kind of how to understand the workings out under the bonnet piece. But before we come to that, Ryan, what's your take?
Yes, I think it's the same kind of thoughts for me. I think the evidence piece, absolutely, in terms of having that kind of central place, having it backed up with kind of data as to why we did something or why we didn't do something. I think it also helps in terms of giving, you know, what RegTech and technology and data does is give confidence to team members in terms of actually, you know, when they are there to challenge kind of the business on certain points, they have evidence, they have fact-based things to back it up. It gives confidence to the regulator that, you know, things do happen, things do go wrong, but actually we've got it under control, this is why we did it. I think without that evidence base and without that kind of analysis that will kind of look at why did things happen and root cause, you're on a back foot because you're already sort of stopped there going, well, actually, we don't know if it happened last time or we're not sure the reasons why. Go back to that confidence point. It's one central place to say, you know, this happened, these are the controls, this is how we fix it, this is why it's unlikely to happen in future. I think bringing all that kind of together as opposed to, you know, and that question comes in and you're answering it within an hour because you've got that data as opposed to it's coming back and it's a week later and actually it just erodes confidence. So I think for me, it's evidence, rationale and confidence that are key drivers for us.
And as someone, Rachel, kind of engaging in exactly this conversation, how do you kind of engage with potential clients about here's how we're going to help you explain and understand what is driving kind of the decision making, the kind of the workings out?
Right, and that's the conflict, because the only way to manage all the information in all the systems against all the regulations, which are complex and interrelated, is with artificial intelligence. But artificial intelligence is not allowed to make discretionary decisions. That's unethical use of AI. So how do you use AI in a way that will give you that full coverage, which it's very powerful for, it's very good at doing that, but that makes sure that the decisions that you make as a human based on that information will be defensible. So there's different kinds of AI. There have been lots of systems that try to use supervised machine learning, for example, which is where you train the system on the rules. You need probably 1,000 to 10,000 good examples for each rule to train. It's very hard to curate that amount of information in the environment that relates just to one rule so that you can train it in an appropriate way without including bias. So that's very burdensome, but the bigger challenge is that once you have done the training and you've supervised the learning, you get an outcome that is from a black box. It's from an algorithm that is very hard to understand and unpick. So the standard now, the global standard for AI for regulation is called regulation as code or rules as code. Governments are now writing laws to be machine readable, because we understand broadly that the only way to apply regulation with AI is to make sure that it's completely transparent and defensible and explainable. That explicability is very important. So, so that's what we built into our system, having looked at the other kinds of option, because it's the only way to have the business then understand, okay, I've had a request for a right to be forgotten, fine, so we use AI to find every mention of that person. That person wants a copy of their data. All right, let's use AI to see if any of that content across all those hundreds of systems and all time has sensitive or confidential information that we can't actually disclose. That's another kind of regulation to overlay. And then finally, let's understand the records retention requirements of the content, because they might be saying delete it all today, and actually it turns out we need to keep it for another 3 years and 4 months. So regulations conflict, value and risk are two sides of the same coin. The only way to stitch all those obligations together at scale is with machines, but the only way to do that ethically and defensibly is with rules as code.
Thank you. And I know that is a conversation we could probably spend a whole other panel on. So, but Simon, I wondered whether you had any reflections on kind of helping your clients to understand what sort of sits within.
Yeah, I mean, look, I think. I mean, most of if you take European regulations, I mean, the only defence that, for example, depository banks have for being, for losing assets is that they've made reasonable efforts to try to sort of monitor and track downstream entities that support, let's say, the funds industry. And I think that how do they do that? I mean, they have to utilize sort of technology tools such as the ones we have, for example, where they will pull in data. They'll then blend it with their own internal views. They'll make internal reporting and also out to the regulators on the back of it. And what we're seeing is this data is becoming, it isn't good enough to do it once a year, it's becoming much more frequent. And I think the use of the tools vary depending on the sophistication of the banks or the fund managers, and you know, some people are much more confident with forming their own view, their own analytics. So very big investment banks will just take the API feeds I referenced earlier. They'll do a lot of their own analysis using stuff. Smaller banks around the place will obviously not necessarily have the teams to do that, and they will rely very much on external information to support you know, their assessment of compliance and what the risks are. And I think you know, very much to Sam's point, I mean, it's our clients that are responsible ultimately for these you know, for compliance to the regs. It's not our tools. All we can do is feed in data. So the demand for data increases. It's just becoming more heavy. The frequency increases, but ultimately the decisions have to sit, I think, with the management of our clients, and they know that. But these tools and the data sources that we used to pull in and things are, you know, critical. I mean, most fund managers have a very small, unless you're BlackRock or something vast, you haven't got a big team.
Thank you.
And I think on that, just to add, I think it's really important as well in terms of the regulatory kind of engagement. I know the, you know, FCA and the RegTech and the kind of the skill sets they have there are kind of fantastic, but I think it's continue to make sure that carries on at the same pace, so that the regulator understands the technical development, so that when firms are trying to explain that, yes, you need to be accountable and explain it, but actually you're well down the track of already all on the same page as opposed to that standing start. I think that continued collaboration should be something that both firms, RegTech and the regulators, you know, promote. I think it's key.
Thank you. So this is just a kind of a moment to say, we are getting questions in from our virtual audience, but I'm going to come to one of my last questions to the panel, and then we're going to open it up to the floor and to our virtual audience. So do start thinking about your questions and getting them ready to go. So you've just talked about collaboration, and you've talked about kind of partnership there, Ryan. One of the things that we have seen, research that has been done over the last 12 to 18 months, research that I did, some research I did in my previous role, was around understanding that supply and demand side dynamic. What are firms looking for when they buy a RegTech solution, and how and what are some of the expectations of RegTechs when they go in to sell a solution, and how is that conversation happening? Where are the challenges? Where's the friction? Where are the opportunities? So perhaps I can start with you, Sam. You've talked about having that end-to-end view. You've talked about having kind of, maybe the panacea, that seamless view to help you understand what's going on. So from your perspective, what is it that you're looking for when you get that reach out from a RegTech, or you start to think about what you need to commission to fill that in, so that you get that end-to-end, that seamless approach? What are some of the challenges, and what are some of the questions you ask?
I think some of the challenges that I've seen when I've been through RFPs previously is I'm looking to work in partnership with the vendors to solve a problem. The solution that they offer is not what I want to hear in the first instance. I want to go on the journey where I say, look, this is what I'm trying to solve for. Yeah. How much of this can you solve for me? Where else do we need to look? And do you have any partnerships? So some of the really positive conversations I've had are where they've said, yes, we can help you solve this part of the problem. We have a really good relationship with this vendor where we can help you knit together everything. Where it doesn't work is when people come with a preconceived idea of what we're looking for and what we need, because everyone's different, even on something as standard as a regulatory reporting or compliance. Every organisation is unique. So vendors that are really, really open to that kind of problem solving in the first instance, and then looking to see how their solution might help. And actually with some of the vendors we've worked on in the past, we've actually helped them, it becomes a mutual relationship in terms of improving the offering, making sure the user interface is right, etc. So I think if I were to summarise it, it's making sure both the practitioner and the vendor come with open minds, and looking to see how they can solve the problem together.
Fantastic. And Ryan, what's your take?
Yeah, I think we kind of look at, I suppose, three kind of things always spring to mind in terms of the agility of the third party. In terms of, I think most companies will say we're configurable, we can work like that, but actually, how are you really? How far do we have to bend our frameworks to get into your system, and that kind of nimbleness. So I think that's kind of important. One at the start, and two as you develop, and I think that also leads into the simple and the keep it simple kind of approach. We are personally we're not a global bank. We're not across all these kind of different regulations, and we're looking for sort of tools and solutions that kind of do the basics, but do them really kind of well. And then the third part, I think, is that usability, that user experience. I think we're constantly trying to do more where we provide self-serve tools to the business. We're constantly having new team members come in, and there's an expectation that technology looks and feels like the technology they use in the home life. And I think if it's not there in terms of, not RegTechs that are at this event obviously, but there's ones that we've seen where they are, the systems look like ones that we had 20 years ago for CRM, and it's got to be usable. It's not got to be necessarily app-led and all that, but it's got to be usable.
Thank you. How does that resonate with you, Simon, Rachel? What's your kind of take on being on the other side?
So I think there is more appetite now to comply for organisations. Downward regulatory pressure is getting a lot stronger, a lot more intense. But the lawyers in the room will know that one of the defences for negligence is unreasonable burden. So yes, you might say, oh look, we really should be doing that, it is risky. A reasonable person would agree that it's risky, but actually the impact or the cost of fixing it is too high. So therefore, we're not really negligent because we didn't do it. Now that we have artificial intelligence, that argument is getting harder to make because it isn't actually that burdensome to apply those rules. So it takes away some of that shielding. But it does mean that as RegTech vendors, we need to provide solutions that don't have any barrier to adoption. So We can't have solutions that actually are mechanical Turks, right? They look like a robot, but inside is someone moving the chess pieces, a human being. That's not real automation, and it has too much burden on the regulatory team. We can't have models that require users to change their behaviour or the way they use their systems. That's very, very hard to do as well. We can't have models that require changes to technology platforms. Again, a lot of them are COTS. We don't even have that ability. We can't have integrity issues with data. We can't be duplicating it or moving it or modifying it. That's too burdensome. And of course, we can't have a performance impact on the network. It is possible to do full coverage without those impacts, but you do have to be strategic about it, because any one of those barriers to adoption will be invoked as the reasonable excuse not to do the right thing.
So I mean, I think I'd look at this slightly differently. I think so for the point about technology to suit a client, I think what we've found is that about 60 of our banking clients white label our technology. So you can separate white label kit, which is sort of adapted for particular groups, from multi-tenanted versions, which are more usual in if you like out there. And I think that that's been important to actually deal with particular needs. I mean, obviously all the architecture is sort of common, so that's helpful. I think the key is to have actually very very good technology. Clearly, I think it has to be usable by the client's staff and their teams. They've got to feel it's intuitive. They've got to be able to blend their own data with any external data, whether it's from us or someone else. That's absolutely critical. I think the other thing we're finding is that the economies of scale. If you've got communities sort of congregating around particular supplier types that you're looking at, then you can pass on economies of scale which help the cost dynamics of it if you're a finance director like Sam. I mean, and I think those are the sort of things that matter, and ultimately the technology just keeps advancing. I mean, the problem for most groups, I think, is the scale of what's required for data storage. I mean, we have about 16 terabytes of data stored across our applications. It's just massive. And I think it's just getting bigger and bigger, and the cyber tools we have take an enormous amount of that 16. And I think it's just going to get to a whole nother level, and it's just not possible for most organizations to sort of build their own kit, or and they have to be very, very judicious in where they sit and whether they do it themselves and who they might outsource to. And ultimately it's everyone has a choice, but it's these are big decisions and they're getting more difficult.
Thank you. So we are doing well for time, so we have got plenty of time for questions. I can see a hand straight up at the front, and I've got 3 questions here, so perhaps I can come to you at the front, but a microphone is on its way so everyone can hear you.
Sure. From an owner-operator perspective and service provider perspective, where do you think the next step is? Is it going to be continually pushed by the regulatory agenda and that ongoing need to comply? Or is it going to be around capability enablement, seeing what's you have within your organizations and looking for the opportunities there that may not be there currently?
Who would like to answer that first? Thank you, Sam.
So I think from my perspective, it's actually a bit of both. I think I'd love to be even more proactive and be working with the regulator real time. But actually, it's not losing sight of the data that you're generating and the capabilities that you're generating in-house and how you can put that to good use. I think we've talked a lot about all the data that we're generating. I think we actually have to remember to use the data. And I think we're so focused on making sure we've met the compliance or regulatory requirements. I'm obsessed as a story in all the data that we collect. Take the time to find the story and use your capability to drive actions through that. So it's there, you just need to use it. Wouldn't that then be amazing if you could use that then to inform forward thinking?
I mean,
Simon?
I think I'd say in wholesale banking, the regulators take no prisoners. And for this panel, I pulled out some of the fines that have been pulled out. So one US bank in 20 years has an $82 billion series of fines from 260 regulatory breaches. The same in the UK would be the single biggest fines for a single bank in Britain has been 13 billion US dollars for 33 breaches. So I don't think the regulators take prisoners, and I think one has to sort of put in place what's necessary to sort of satisfy your particular regulatory environment, and obviously the states are out on another level to where we are in Britain or arguably Europe. I mean, this year last year the fines, the FSA fines were about £600 million, and the US for 21 was 2.5 billion. So, I mean, there are lots of reasons why those fines come through, but I mean, it's just a constant, and the problem is a lot of these bigger organisations have just ongoing problems. They're just always the ones that fall foul of these regulators.
Yeah, I think on the regulatory side as well, though, I think it's becoming so accessible in terms of all the different RegTech solutions out there as well, and in terms of a little bit like in the lending world now, actually, if you've not done a credit bureau check, why have you not done it? Because it's accessible, it's easy to do. I think there's going to be pressure there in terms of that's not an excuse for those ones that don't kind of want to adopt the tools out there. I think the other point as well is around it being in terms of the kind of the workforce, and I think that we've seen the risk management market and compliance is really tough in terms of keeping and securing and attaining strong caliber individuals. I think that will continue as well. So I think having technology to take actually some of that pain away, so that those really top caliber people can focus on the really high quality work, I think will be an attraction tool when you're recruiting as well as across the board. You don't use RegTech, I think it'll raise eyebrows to say, well, actually, how innovative are you as a company yourself?
Thank you. Rachel?
Yeah, I think compliance can and should have return on investment, and I think not getting fined is a good kind of way to save money, but there's other benefits as well, because to manage risk and to manage compliance, you need to understand what you have and where it is and what it's about and who's doing what to it. And once you have that information, well, what else can you do? So we use ontologies in our system that are regulatory. So, for example, we have one that will find any information in the network that falls under the aegis of a particular secrecy provision from an act or regulation. But we have another ontology, it uses exactly the same technology, to find any mention of Maori, Iwi, Hapu and Marae, which are the tribes and the sub-tribes and the family groups of the Indigenous people of New Zealand. And our New Zealand clients use that for Indigenous data sovereignty. They can say, okay, for this particular marae, we have across all our emails and everything for all time, 1,716 mentions of this group. Let's share that with them and invite them to be involved in the custodianship or the ownership of that data. That's a value thing. That's a return on investment. That's getting more value out of existing information and repurposing and reusing it. That is a side effect of making it compliant.
Great question, thank you. I'm going to go to one of the questions that that's come through from our virtual audience, and it is turning what we've just heard about all the positives and the value creation on its head somewhat. And the question is, what do you think the balance between RegTech opportunity and RegTech risk creation is? Is the prospect of RegTech all positive? Who might want, Rachel, you were furiously shaking your head.
No,
what's your response?
It's so dangerous. Right, so once we've done that, and once we've found all the risk in an environment, all the PCI spills and all the classified information and all the stuff related to trade secrets that's lost in the shared drives, immediately I've taken away your plausible deniability. So someone has to address that issue now, right? We know, and we prove that we know, and we need to do something about it. So that's the risk with this kind of technology, is when you're looking for breaches, you will find them. But then how are you going to treat them? And that's why those relationships are so important. So we need technology providers to work in alliance with services providers. Internal resources are quite limited for compliance and security and privacy. You'll only have a couple of people in the organisation. That's not enough people to manage proactively, reactively first, all the problems you find, and then proactively to prevent them happening again. So it's really important that sort of trusted advisors from tech and services work together. Otherwise, all RegTech does is create a new problem for you and a new kind of liability.
Thank you. In the interest of time, anyone else want to come back on that question, or should we move on to another one?
No, I'm happy to. I think the only point, and would just one final one add, is around that risk of not creating robots. So I think I think RegTech empowers the risk and compliance team, doesn't kind of replace them, and I think having that one eye to make sure that teams don't just sit there relying on the technology, that they do get out there and understand the business, engage with the business. So I think that's a risk to manage.
It's not an abdication of responsibility.
Yeah.
Thank you. Any other questions in the room? Sultana, there's a microphone on its way.
Well, firstly, a confession. The Slido question was mine, and a fantastic answer, Rachel, because I sit on the regulatory side, as you know, and I think about it from one perspective. So great to hear that from solution providers. My follow-up question then is probably, because we've got some vendors in the room, which is around something I think about, which is it's been coin herding. So as organizations begin to use these vendors, and multiple organizations use the same vendors, and they are using AI and predictive analysis, both supervised and unsupervised learning, is there a risk that if these machines start to go awry, that actually we're creating an inherent risk that is far greater than actually the compliance opportunities that arise and or discuss?
What a question to finish on. Who would like?
Yeah.
Simon?
Well, I think if you look at cyber risk, for example, I mean, what I would just say is that the algorithms behind all that are absolute ratings, risk ratings. So they're just common across the entire world. It doesn't matter whether you're a big organization or small. So I think it's not something that is likely to sort of cause particular blips, would be my view. I think the other thing to say is that regulators are very different. So the Italian regulators are completely different to, for example, the Luxembourg regulators, who pursue a very aggressive agenda around the funds industry in Europe. And I think they're on top of it, and they're just remorseless pressure. So I think that certainly the regulators will encourage this sort of proactive sort of, adoption of more and more tools and support, and not just tools, but also data to supplement small organizations, big organizations that they regulate. So I think it's a sort of horses for courses.
Who might like the last word on that question? No? All right. So can you join me in thanking Sam, Ryan, Rachel and Simon very much indeed for their generous comments, reflections and contributions this afternoon. Thank you.
Thanks.
I'd like to underline that thank you for a fantastic way for starting off this afternoon. Thank you for going through all of those topics with us. We're going to let you go, except Rachel, who's going to now join us for a presentation on overcoming systemic failures, artificial intelligence adoption by government and regulated industry in response to death, destruction and dispossession. So quite a mouthful there. So Rachel, I'll hand over to you to introduce yourself and the topic.
Thank you. I might be on 2 mics. Are we okay? No feedback? All right. So hopefully I can answer your question a little bit more about those risks, but let's just get this one started. So I'm Rachel Greaves, that's me. I'm a certified records manager, certified auditor, certified privacy engineer and a certified security manager, as I mentioned. And I designed this new kind of AI for governance, risk and compliance after about a decade, auditing some pretty significant information governance and security failures in government and industry. The last project that I had cancelled because of ineffective information management was worth more than $2.5 billion. And it failed because really it never could have succeeded with too complex regulation, too much distributed information, too much scope and too much scale. So I really didn't want to be failing everybody forever, especially at that scale. So I developed a solution to address that. Castle Point's multi-award winning. We're an Australian company, if you couldn't tell. RegTech and Cyber, we have a pretty large range of federal, state, local government, regulated industry clients, including the Treasury, the Australian Financial Security Authority, Health Practitioner Regulator Authority, many other regulators, universities, critical industry providers, for example. So today I'm going to talk about automation, specifically as it pertains to serious failures in information management and security obligations. I'm going to explore why AI has become so necessary for effective data governance and the different ways it's being used. And I'll look at some case studies of how different agencies and organisations are using AI to change the way they manage information risk and value. Takeaways should be some real life examples of life with and without AI as a regulator or a regulated entity, and a better understanding of the options as far as adopting or not adopting this kind of tech. So first I'll talk about some historical and more recent examples of things that went wrong, really wrong, and why, so we can see why AI and automation have become such a critical part of governance, risk and compliance. So a review of National Audit Office audits for the last 2 months shows that 7 out of 10 found issues with records and information management. These are some of the critical government programs suffering deficiencies with their compliance, which have detrimentally affected their outcomes. JP Morgan Securities last year paid a $125 million penalty from the SEC for widespread and long-standing failures by the firm and its employees to maintain and preserve written communications. So as we mentioned before on the panel, the regulators are getting more serious about these kind of lapses. But it's not just an administrative kind of red tape issue, and it's not just about penalties. Failing to manage information properly can have actually catastrophic impacts on real people. So I think there's some stories we should all know about as information owners and custodians, because it was the information management that caused the disaster. Vivian Salon was an extremely vulnerable Australian citizen. She was found in a park with a head injury. She had a mental illness. She was deported by our Department of Immigration at the time because they couldn't find her record in their records management system. She never picked her child up from daycare. He was sent to foster care, and she was sent to the Philippines, where she lived in a home for the dying and destitute for many years until a Good Samaritan found her and brought her back. Unfortunately, not a one-off. Cornelia Rao, another Australian citizen, was locked in immigration detention by that same department because staff couldn't relate her records between the line of business systems and the record-keeping system. For financial services, we had the Hayne Royal Commission in Australia into misconduct in the banking, superannuation and financial services industry, and that found that a fundamental failure to keep, link and retrieve records enabled banking misconduct and resulted in people who have anxiety and stress, people who have attempted suicide, people who have lost their family home, farmers who have lost farms that have been in their families for generations. In the UK, the NAO recently published a report into the British Steel pension scheme, which you might have seen. That was a financial advice failure. The FAC had found that 79% of transfers out of that scheme were made based on unsuitable or unclear advice, and that affected pension members lost around £85,000 on average. The NAO analysed how it happened and found that insufficient information was documented from those members, resulting in the commensurately insufficient advice. The advisors are affected as well. Firms are expected to incur around £9 million in compliance costs to review the decisions that they made and the whole history of who made those decisions and why, and then pay out around £71 million in compensation. A lot of smaller ones will close. They can't handle that kind of a shock to the budget. Many records relating to Indigenous peoples in Australia are affected by our stolen wages disaster and the Maralinga atomic tests that were run there, as well as those of Caribbean Windrush generation immigrants to the UK, were destroyed or deliberately lost, making those immigrants effectively stateless and damaging the prospects of Indigenous reparations in Australia. Data breaches by foreign state actors are increasing, and their aim is to disrupt critical industry, including financial services, and they're positioning counterintelligence to destabilise the Commonwealth and our allies. In 2018, 19 years worth of student and staff records, including mine, were taken from the Australian National University by what's believed to be the Chinese government, most likely in an effort to build profiles on each of us for later use as we're promoted through the ranks of government and industry, or we become founders of cyber companies. The San Bruno pipeline in the US exploded because records about how it was constructed were incorrect. Paul Maguire, a young father of 2, died in a Queensland mine because safety records weren't updated. These disasters were caused by a pretty consistent set of information problems. So undiscoverable systems, broken business context, a lack of control of those source systems, a lack of data protection, and incorrect and obsolete records. So we can consider each problem. Firstly, discovery. How can a system be so hard to search that it's easier to deport someone than it is to find their record? And that wasn't a one-off just for that department. The Australian Department of Health spent 9 years and about $5 million implementing a centralised records compliance system. And when our National Audit Office audited that project, They asked some newly trained users to go and find 100 items that they knew to be in that system. Any guesses as to how many they found? 18. They effectively lost over 80% of their records by putting them into that safe, compliant system. So why does that happen so consistently? Firstly, many information systems don't actually index all the content of records, only the metadata or maybe a portion of the text. Sometimes PDFs and image files haven't been OCR'd and they can't be indexed at all, which leaves you with metadata, which is really only as good as the available system properties users can select and the diligence and consistency of that user base to apply that metadata. We find that on average only 4% of records have any descriptive metadata, to give you some context on how big of a problem that can be. Even for systems that are easy to search, duplicates and versions abound, and that can be very challenging then to find the latest or the authoritative copy of that evidence. And then finally, the sheer number of systems often means we need to search more than one to find everything we need. And if we don't have access to those systems as auditors or IT security or records, or it's too time consuming to log into each one and search it separately, important results get missed. So in some cases, the story of a project or a person, like Cornelia Rao, is spread across multiple systems. That's because most organisation structures these days are functional. Most key activities that happen, though, are cross-functional. And that means more systems are involved in the life cycle of a customer or a stakeholder or an asset. For example, every team that's involved in the process is using a separate system. But IT security access control is still largely structural. So access normally aligns with branch and division structures, and those cross-functional stakeholders often don't have access to each other's information. Compounding this is the fact that most systems also aren't interoperable. So the systems can't easily share or map or match data together to show the full story. The metadata is inconsistent from system to system. So one de facto solution to this has been to require each team to make a record, to save a copy into a central compliance system to share and control. But that only captures a small archive fragment of the whole story of the transaction or the interaction, just at a few points in time, and it results in more duplicates. Also, systems like that can only capture unstructured data, like documents and emails, which means we lose the structured data context from the original workflow system or case management system or task management system. So when each business unit uses a different kind of system, it's very hard to make sure all of those systems are appropriate to use as systems of record that can be secure and compliant. We finally moved away from trying to make each business unit use only one source of truth system exclusively. Different business areas need different tools and they need them at different times. Effectiveness and efficiency are higher priorities normally for organisations than compliance and regulation, as we're talking about on the panel. So the new expectation is manage in place. Records are managed in their system of capture or creation where they're born, essentially, not just when they're archived into a separate system for a compliance purpose. But we can't customise dozens or hundreds or thousands of systems to comply with all the applicable standards and regulations. One federal government department did that. They put 141 custom features into their SharePoint 2007 environment, and then they couldn't upgrade it for nearly a decade. And then finally, last year, they upgraded through 2010 to 2013 to 2016 to 2019. It took a year and a half to upgrade. So customizing is risky. We also can't really integrate that many systems tightly together. When we connect systems together and make them interdependent, we introduce cascading technology risk. We can't update one without updating the other. They become interdependent and it affects their supportability. So that's risky too. What about configuring line of business systems to be compliant with our regulations? Well, if you take away delete rights from users in SharePoint, for example, they also lose their ability to move or rename documents, which is not good for productivity. So it's not as straightforward as it sounds. So, you know, overall, it's very hard to stop people deleting information they create. It's hard to stop them doing what they're empowered to do by the system that they're in. And that's why incredibly important records keep being lost. And it's not just users deleting them. Recently, the Dallas police lost 8 million criminal case files in a botched data migration. With unprotected data, security breaches we know are increasing every year in their scale and their impact. A breach, if it's malicious or accidental, is almost inevitable for every organisation. Traditionally, compliance teams have not worked very closely with cyber teams, but they do need to start. And that's because it's very hard to significantly reduce the likelihood of a breach. The network perimeter is very large, it's very permeable, the workforce is now distributed. 2/3 of vulnerabilities are 0 day. There is no patch for those vulnerabilities. But what we can do is reduce the impact of the breach. When the ANU was hacked, 19 years of staff and student records gone, including mine. Mine was at least 15 years old, and it only should have been retained for 7. And if they had actually compliantly managed the life cycle of my record, I wouldn't have been in the spill. And actually 60% of us wouldn't have been in the spill. So we can significantly reduce the threat surface of information if we can apply regulatory rules around retention to that information. So working together, we can actually manage the threat surface better than we can alone. The more data we're keeping, the more risk we're carrying. So we have to understand both the inherent risk of the data and its minimum retention. Then we can protect things that security want to bin because they're risky, but they do need to be retained. And we can destroy things that records teams might prefer to keep, which have actually reached their minimum retention and carry more risk than they have continuing value. In most organisations, we're not balancing risk and value yet very well. And then finally, the worst outcomes, deaths, because people relied on incorrect or out-of-date records. The San Bruno pipeline was recorded as having no welds in it. It actually did have welds, and when they pressure tested it, it blew at those weak points. 24 houses in an unsuspecting suburb in the middle of the day were completely levelled and 8 people were killed. Closer to my home, Paul Maguire was a young father of 2. He was working in the Grass Tree mine in Queensland. He took a job card that sent him to a dangerous part of the mine called a GOF, a collection of toxic gas that had built up behind a door. When he opened the door, he was overwhelmed and killed immediately. The danger was known, but the job card was never updated. He relied on the job card and it resulted in his death. It's not the job of governance teams to make sure information's accurate and up to date. That responsibility lies with the business owner, and it's very hard to govern that centrally. But there is a key reason why records aren't properly captured or maintained, and that's systems. Systems that aren't usable and not seen as useful won't be used. And when we rely on a system as the source of truth, but the business can't or won't use that system to record the truth, we have a false sense of security that puts everyone at risk. Multiple government audits across the Commonwealth have found that traditional record-keeping systems are not usable, and as a result, they're not being used. There's no longer a broad tolerance for organisations in regulated industry to rely on traditional and outmoded ways of managing information. So for all those reasons, automation's really become essential. The traditional methods and platforms can't cope with that exponential growth of data that we have, the proliferation of systems, including cloud systems, and how rapidly the information environment changes. So there's a few approaches to automation that have been tried. The first and most common one we see is actually driven by people power. So the machine automates part of the process of applying rules, but it relies on users to select appropriate rules for each document or record in order to classify them. Those might be privacy rules, secrecy provisions, records retention, for example. That's very similar to traditional models and tends to have the same outcomes in terms of quality and consistency. Reducing the burden on users a bit more, file plans and rules engines instead transfer that burden to the governance team. So users can have invisible compliance if they follow the plan for where to save each item properly, but regulation and compliance managers need to write and maintain the rules that the machine then automatically applies. In a supervised machine learning model, the machine takes on more of the work. So that's where the AI is trained on existing classified data, and then it uses what it learns to classify the rest of the environment. That takes the day-to-day work away from the users and the governance team. However, every rule will require at least 1,000 good examples to train on, and there might be hundreds or thousands of separate rules. So there's a very large burden to initially set up supervised ML and then actually supervise it through the learning process. And depending on the quality of the original data, supervised ML can actually reinforce and perpetuate mistakes at scale. So because of those limitations, for such a large-scale challenge, rules as code has become global best practice. to make sure that regulatory rules can be applied and understood by machines effectively. In the rules as code model, the machine's trained on the rules, not on the data. So that's done once and then applied to any type of data in any structure. Based on the topics it finds in the content of the records, the machine can work out what rules apply. Rules as code is the model we developed because it's the most accurate, transparent, agile, and it's low impact. It also lets us manage risk as well as value because we can code for any type of rule. For example, near the end of last year, we were contacted by a large university experiencing a malicious data breach from a foreign state actor. They called us on a Friday night. We deployed in their production environment over 220 affected systems, indexed all the content and matched it to the secrecy provisions from state and federal acts and regulations that relate to the higher education sector. We identified which parts of that spill might incur civil or criminal penalties from those obligations and calculated those. And we also coded their records authority to determine what of the data that was spilled should have already been disposed of, which also goes to liability. We automatically detected sensitive personal information like credit cards and tax file numbers, passport numbers, student IDs, as well as sensitive topics like thesis reviews and aviation research. All that was done by Saturday afternoon. In November, we added automatic detection of IHI numbers, which I mentioned in the panel before. The IHI is legally protected in Australia with significant penalties for unauthorised use and disclosure, but our federal and many state governments have included it on vaccination certificates, which are still flooding into organisations uncontrolled today. So really the ability to respond rapidly, not just to breaches, but also emerging regulatory risks like this is really vital for effective GRC, and it's really only achievable using rules as code. When we designed our system, we knew we had to solve not just the challenges of traditional compliance management, but also overcome the limitations of the other kinds of AI and automation. So we had to cover all the data, all the systems, all the rules, all the time. And to really succeed, it had to be invisible to users, low touch for compliance teams, and no impact on the source systems or the network. So to achieve this, we register every system in an environment in the cloud and on-prem. We register every record in every system, structured or unstructured, and every file in every record. And we use natural language processing to extract all the meaningful topics and named entities mentioned in every item, no matter the format. We capture all the events on the data and all the metadata, and we do all that without any agents or connectors, and without moving or duplicating or copying the source data. So we can provide command and control across discovery, audit, and records management invisibly to general users. And this solution is unique still in managing all information for the whole life cycle without the impacts. It's really AI that makes that possible and a lot more. Some of the problems we have solved this year have included finding references to potential child abuse in government databases. This client was subject to an inquiry into how predators had flown under the radar in the public service. They'd spent a year manually searching a system for flags of abuse. Using Castlepoint, we searched that system for the same flags over just a couple of weeks, and we found 100% of the original matches. And then we ran over the next big system, which they actually couldn't search using the methodology that they had, and we found another 60,000 more. Command and control over more than 535,000 systems for one organisation. They're using Castlepoint to identify risk and value in their data, including large amounts of confidential information that has spilled into their public drive over several decades. And records management, we reduced the cost of records disposition for one federal agency by 98.5% per action, and the cost of identifying redundant data by 97%, and the cost of compliance auditing and reporting by 98% per action. So, summing up, when we're planning automation for compliant and secure information management, we don't just need to know the pitfalls of traditional models for managing compliance. We need to consider the risks and impacts of introducing AI and make sure it's done in a sustainable way. Labels, rule engines, file plans, supervised ML have a high effort overhead for users and GRC teams, and they can actually result in the same quality outcomes in terms of discovery, protection, coverage, and system usability as the legacy models do anyway. The sustainable vision is full coverage and no impact. That's how we can prevent more disasters and get the best value out of the information. So thanks so much for your attention. Please reach out to me or come to the booth for a demo of the system or to find out more. and hopefully I will talk to you soon. Thanks.
Rachel, thank you for a presentation that was amazing and shocking in equal measure, actually. So clearly there's a challenge there. If any of you think that your systems are safe, that your data is in good state, please go and visit Rachel at her booth, and I'm sure she'll show you otherwise. So thank you. We're now moving on to our next panel discussion. I'm delighted to welcome our next set of panelists for a discussion entitled How to Effectively Integrate RegTech Solutions into Onboarding, KYC and AML Processes. And it's my pleasure to introduce Koen van der Hooijdonk, who's also known as the Connector. So apparently Koen has a passion for innovation in the banking industry. He's a fintech and RegTech influencer with very large followings, the author of the RegTech Black Book and the author of the RegTech Black Book, the sequel. So we're delighted to welcome him. Koen, if you'd like to join us on the stage and welcome your panelists. Thank you.
While everyone's seated, please. I would like to say thank you, because it's so nice to be here this afternoon. It's so nice to meet so many people enthusiastic about RegTech. It's just amazing. Let's take just a minute to think about it and to actually get it on us.
Please, thank you.
We'll have a conversation about KYC. And I was thinking about myself, what can you do best if you not know your audience? So let's do a know your audience. Who of you is a banker or a financial industry, a financial services? Bankers, bankers, bankers. Who of you is on a sanction list? Okay. With that bombshell, I will have a panel discussion with a lot of senior people, and I would like to start left with me, Kevin.
Sure.
If you can introduce yourself.
So Kevin O'Leary here, everybody. Delighted to be at a face-to-face event. It's I think we're all tired of Zoom, personally, having spent 2 years of my life in front of a screen. I work in Fenergo in the strategy function. My current role is leading our initiative on perpetual KYC, so a topic very close to everybody's heart. And my background over the last 16, 17 years, all vendor side, I hasten to add, leading various programs for different companies around AML, transaction monitoring, fraud detection, and CTD. So looking forward to a nice, interesting conversation. We were chatting about the slot we got. We don't know whether the slot after lunch or the slot after lunch is good or bad. So we'll try and keep it interesting, and please just share your questions and we'll do the best we can to answer.
Thank you, Kevin. Sure.
Hi everyone, good afternoon. I'm Cho Tay, you can just call me Cho. So recently joined Moody's. So I'm from Moody's Analytics. So I've got a fairly long job title. It's Director of Financial Crime Compliance, Industry Practice Lead. Very mouthful, I know, but basically what it means is like I bring the practical experience, the very extensive practical implementation, practical KYC experience from the previous 15 years that I've gathered working across the global investment bank. The most recent one is Investec. Some of you may have heard it about me talking about CLM, how to digitize the onboarding processes. And I hope in this panel, excellent panel here, that we can bring in a few more details so that everyone can relate it to their own use cases.
Thank you very much. Sure. Barbara.
Good afternoon, everyone. My name is Barbara Halasek. I work at CoinFirm, which is a blockchain analytics RegTech company providing AML solution for crypto asset businesses, but also for traditional banks going into crypto. I'm looking after the regulatory affairs there. I have a combined of 15 years experience in financial crime compliance, but also in the software development industry. So working for FinCrime roles at Deutsche Bank, UBS, and Citibank. Then I got really excited about the RegTech to the extent of actually learning how to code, doing my own app, moving into Pega system, which is similar to Fenergo in terms of also providing AML KYC solutions. And then I got extremely excited about crypto assets, and hence I joined CoinFirm, and I'm hoping to shape the AML KYC and onboarding for crypto assets businesses.
Thank you so much. Alia, last but not least.
Thank you. Hi, I'm Alia Cooper. I'm the Global Head of CDD for Wholesale at HSBC.
I've been at HSBC for 9 years in various financial crime related roles, starting in KYC operations, spent a bit of time in a business financial crime risk role, then in compliance itself, and now back into the business as part of our wholesale client services team.
And did I spot that well? Did you say you work for a bank?
Yeah.
Or you're on a sanction list too? No, you. So maybe I can start with you with a very global, broad question. So what do you see as the main challenges digitalizing KYC and AML processes?
Well, I'll answer it in one word, which is complexity, and that's complexity across a number of different factors. So I don't know how many dimensions of complexity there are, but I think it's potentially infinite. So we've got global regulations, which are not always the same. They're similar, but not similar enough. We've got global data sharing restrictions. We've got the volume and pace of change. Internally, we've got our own challenges with data quality, legacy systems. We still very much, I think, tend to operate in silos, in organisational structures. We've got the challenge of a good customer experience, the challenge of balancing growth and managing risk, the challenge of competition with different types of financial services industries emerging. And last but no means least, we've got the challenge of meeting the ever-changing typologies of financial crime. You know, as soon as we close one door, we can be pretty certain that another door is being battered down. So, is that enough?
Well, I thought you said infinite. I thought this was a very easy panel with only challenges, but maybe it's not the only ones. I mean, bank, I hear you talk about crypto. Is that similar? Are there like specialities about being in the crypto space?
Yeah, similar and different at the same time. I can only echo what has been said already. I would underline the comment about the ever-changing environment. In crypto space, the regulatory developments are even more frequent than in traditional finance. So keeping up to speed, keeping abreast of what's happening is maybe challenging, and it's definitely one of the focus points for the RegTech. I can also say, you know, I'm bringing this experience from both sides. I worked at the banks, but I also worked at the vendors. And I think from the banking experience, the biggest challenges that I would point out was mindset, that is being aware that digitalization requires having proactive supporters, not only, let's say, you know, agreeing to a change, but really getting people on board with the idea, but also dealing with the vendors and defining what you actually need in your digital, in your RegTech solutions, and making that communication to the end. There's a lot of like pictures and memes in the internet of you know, what you want as a client, as a bank in this case, and then what you get from the vendor, and there's some communication lost on the way. But then on the other hand, working for the vendor and working now for a blockchain analytics company, I'm seeing the other side of things, where we're talking with the clients and also with the mindset of the software developer. At some stage, I'm basically having thoughts of, well, if you could have specified that requirement at the very end, at the very beginning, the architecture would be very much simpler. So it's interesting to see those both sides of things, really. And I can only confirm what has been said in terms of the challenges. There's many, and I think many more to come in that developing space.
Well, interesting. And sure, I'm not sure whether I should still count you as being on the banking side or on the vendor side. Which one would you pick?
I think I will share the experience from continuing from Barbara. I'll call it the implementation cycle. So when we go through digitizing the process, you're effectively going through a transformation program. So I'll provide the challenges that I experienced myself. We solved it, and we moved on. Also, we learned new problems. So I'll provide that perspective. So how I see is technically I will categorize into like 5 categories. First is the digital KYC profile. Second thing is the data aggregation. Third is digitizing the policies, whatever the policy, the regulations. Fourth is data management. I'll explain a little bit more on that. Fifth is MI and audit trail. So if you take a look at the digital KYC profile, so we need to figure out how much information and what to ask in that, both from the banking perspective or the vendor perspective. You need to know about this. Now, RegTech can play a very big role in here, is because the RegTech has the opportunity to work with different types of organizations, large, small, FI, non-FI. They would have a fairly good idea about what is so-called the 80-20% rule that will satisfy most of your data requirement. And then we also been providing trusted data. In the context of Moody's, we've been providing trusted data for the past, for as long as we can remember. Why do I think digital KYC profile is important? I'll give an example from the mobile industry. So probably 10, 15 years ago, probably 20 years ago, when you want to switch a mobile phone provider from one to another, you typically go through a process like this. So you call up your existing provider, you say, I want to off-board myself. And then you call up a new provider and say, hey, I want to join you because you've got a cheaper deal and things like that. And then they'll ask you a set of questions, maybe, and then they'll ask you to provide certain IDs, proof of address, etc., etc. And you wait about, what, a couple of weeks, sometimes a month. Today, they probably only ask you one question. What is your PAC code? And you'll be able to port the information like that. This is what I would say, one of the examples that I could closely relate it to. If you have a digital KYC profile, you can move across. Obviously, there's a lot of things that goes around it. It's the regulation that enables it. So this is why I emphasize on the first point. Second point is the data aggregation. The biggest part of the data problem is duplication. Again, I would like to quote that RegTech has been in this journey for long enough. They've evolved, they're specialized, and we should utilize the RegTech playing this because they're part of the ecosystem. The third one is digitizing policy. Some people call it the rules engine. Essentially, to me, it's a decision matrix. So if you get this matrix right, you are essentially building a solid foundation of risk assessment, which is a core part of digitizing an AML processes or KYC. The fourth one is actually data management. So this is probably the most complex part. I broadly categorize them into a structured data versus unstructured data. Structured data would be like company house information in the UK, or Orbis, Moody's product, or Dun & Bradstreet. So you access the data through a paid service or an API. Unstructured data would be like an example of adverse media. So you connect it, you utilize the AI machine learning that sits behind it, provides you the data for the likes of RDC, previously known, and now is GRID, part of Moody's product. So why data management is important? So I don't want to get this right, I'm just going to read it. I would say KYC isn't just on the onboarding stage. It is intrinsically linked throughout the entire chain life cycle of onboarding, eKYC, reviews, offboarding, transaction monitoring, and so on. So you certainly do not want to let the client know that you're good in bringing them in on board. And then you're poor in servicing when they become an existing client of you. So the concept of business retention is fairly key in the space of KYC or AML. So, which means that it needs to be planned from the start. And part of this is the challenges that we need to go through. And then obviously data management plays a key role here. The final one, I'll try to be as quick as possible, which is the MIN audit trail. So everyone knows this. Audit trail, you're able to explain to your auditors that these are the journey that the clients go through, and these are the checks that you've done, and you can explain that with what it was there. Obviously, from an MI perspective, you can explain to your management, this is your client base, here's the risk profile, and how many clients have you onboarded or working actively for certain business lines, or to the operational or the so-called KYC team. You know what your risks are for an unfinished AML and how many reviews do you need to go through. So this is what I broadly categorize the 5 categories of challenges.
Okay, well, thank you for putting them in 5 categories. Do you mind I say faster, 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 real-time, perpetual KYC?
Yeah, so actually
is that not where we're heading to?
Just picking up a couple of comments that are already made, right? So there's clearly a technology challenge, right? And one of the things that we see in our business is historically large complex clients solve these problems by bespoking a solution that uniquely fitted or shaped their requirements. That becomes tremendously difficult to maintain and progress as regs change or business changes, you expand into new jurisdictions, and coping with that change in a solution that you've heavily bespoke becomes a significant challenge. So an enablement factor in perpetual KYC is a common set of technology which we now see in the cloud, right? So one version of software that all clients subscribe to, so you largely mitigate against the problem of migrating bespoke solutions. And with that in place, right, you can then start to solve the perpetual KYC problem We've been chatting to our clients in this perpetual KYC initiative, which is the next thing that clients are contemplating. They're all on various stages of maturity. Some of them haven't even yet solved today's problem, right? Getting data into a good shape, as you mentioned, implementing a digital KYC policy, as you mentioned, and doing that on a global basis. But for perpetual KYC, the problem looks like, how do I continuously monitor clients, anticipating or identifying a negative client before the next periodic review, and do that without overloading my KYC team with a flood of false positives and low value information?
But I think I got the answer. It's fairly simple. It's AI and machine learning, right? I'm looking at the bank. I'm so sorry. Are you using already AI and AML and machine learning within the realms of onboarding KYC AML?
We're getting into it. I mean, I think we've just finished the design phase of our perpetual KYC program. And I think I would really echo what Kevin has said there. The ability to identify triggers is really what will make the difference between success and failure in PKYC. So being able to particularly identify changes to UBOs, which is a fairly hot topic at the moment.
Mm-hmm.
And I think it's not just about machine learning there, although I'll come back to that. It's really about data sources and data quality. You know, so we have a huge range of customers in our wholesale business, from your sole traders up to your multinational corporations and institutional banks. It's quite easy to identify UBO changes at one end of the spectrum, very difficult in the middle down. So how do you do that in a way that doesn't just create a whole bunch of additional client outreach that perhaps you were avoiding before? I think the other point to note, which is where some of that machine learning and AI may come in on the triggers piece, is being able to have systems that learn what is a genuine trigger versus what is one that can be triaged or hibernated away from the main team, or maybe dealt with in a different way. You know, can it be auto-routed into a fraud team, for example? Does it require a deep dive into a particular product that the client may have? All of that, I think, is very much on the agenda for what we're trying to build. The challenge that we have is really around orchestrating all of that for such a broad range of clients in that kind of complex and you know, I think everyone's probably familiar with that kind of VUCA term, you know, volatile, uncertain, complex and ambiguous. Well, that is definitely CDD all over, and trying to kind of navigate our way through that whilst balancing the demands of a very ambitious revenue targets for the bank, as well as managing the expectations of our compliance team to make sure we meet regulation and manage risk. That's really part of the challenge. But it's an exciting one, and I think the dividends will make it well worth the effort.
Mm-hmm. And maybe picking up on the ML aspect of that question, so back in the dawn of time when fraud detection systems for credit cards got going, it was like shooting fish in a barrel. There was huge volumes of transaction data, lots and lots of true positives, so you could implement pretty well-performing models quite quickly to pick out fraud cases. The challenge, certainly in the PKYC standpoint, is even when you switch on a system, and this is what a lot of clients aspire to layer in the AI to say, actually, for something like this, it should actually bypass a human and be STP'd. But you have to turn those systems on for a significant period of time to generate enough trigger information to learn from, right? Mm-hmm. So what some of the folks in the market we're talking to are saying, let's get the triggers in there, let's put in a layer of automation so we can throttle back what lands in KYC operations and then go in baby steps. But there's a huge spectrum of maturity. So some clients are still solving we chatted about before, the turn off the fax machine problem. Mm-hmm. And others are at various stages to operationalizing onboarding and regular KYC and regular periodic reviews, and then some of them, like notably HPC, are contemplating how to perpetualize that.
Mm-hmm. I'd say more than contemplating, without meaning to sound too bold about it. I mean, we're moving into a deployment as I speak.
Barbara, I was wondering, in your view, do you see a compliance as a role that happens only by machines? Or do you believe that human intervention is still required at the very end of the tunnel?
I'd say compliance is no different to other aspects of areas where we introduce AI, and I think there will always be element of human intervention, of human analysis, of decision making, of, let's say, control, etc. So even though I'm strongly in technology, I'm not a believer of we can only leave everything to the machines. But having said that, I think we will not escape the stage of having much increased reliance on machine learning and AI that we currently have. So it's not a question of if, it's a question of when. And I think regardless of whichever financial sector we're in, it's the traditional finance, crypto finance, whichever really area, it's coming there, and it's inevitable. In terms of the crypto assets, I'd say it's even more evident than in traditional finance. The reason I'm saying that is, and I appreciate there might be mixed understanding of crypto assets on in the audience, so let me try to keep it as simple as I can. In blockchain technology, in crypto assets, you can program money laundering. So you can basically write code that would do the money laundering for you in simple terms. So as a illicit actor, instead of actually moving the assets myself, I can write a code that would instantly move those assets through hundreds of addresses and just disperse them across different places and then get them together. And because it's like programmed and written in the code, I don't think that long term we will be able to spot those patterns without machine learning and without AI. It's kind of like using the tool that has been used to design it to actually tackle that. And that's one of the things that we're looking at CoinFirm, to actually utilize that machine learning and AI, to spot those patterns. But not only that, there's a lot of different elements in crypto assets that cannot escape machine learning. Just one more example that I'd like to mention is something called clustering, which is, again, in very simple terms, recognizing if I have one crypto asset address, using technology, I can recognize a number of addresses that are controlled by the same person. So I don't know who's behind those assets, but I can learn through the behavior of those addresses, well, actually, I've got evidence that there's the same person behind that address. So long-term, crypto assets definitely, but I would dare to say that I can't imagine any financial service actually operating without that type of level of technology advancement.
Well, thank you very much for elaborating, but I'd like to take you back to the moment where you talked about the balance between the human and technology.
Yep.
And one question came out of the audience, so thank you very much for that. It's like, how can companies balance the strict requirements of compliance teams with the demand for streamlined and quick customer experiences? Sure.
Good question. I'll try to answer in this way, and hopefully this is the answer that you were expecting. So in my experience, the AI and machine learning could play a key role in the context of unstructured data. So take adverse media, for example, which I mentioned early on. So how is it useful? It brings two benefits, so cost efficient and identifying emerging risk. So from the point of cost efficiency, so this is a tested proof of concept in the previous company that I worked for. We tested the concept of using adverse media, which runs on the back of an AI machine learning algorithm, as one of the criteria to assess, do you need to perform a full review or a data point to data point review, which is a much simpler review. So what we found is, in terms of potential ROI, the percentage is fairly high, 30 to 40% safe in terms of the time and effort saved. Now, the foundation of this is majority of our good actor, the clients that are good actor, they don't change their information over a short period of time. So why do we need to invest human effort into doing that massive screening? You could use technology to do that job to an extent. However, this does not mean you eliminate the people. You use the human resource more appropriately to those targeted risks that will be highlighted through this process. So hopefully I can answer it in this way of balancing the people skill set, typically, and the analytical risk assessment that people actually brings. The second part of it is the identifying emerging risk. So this is about a use case again in the unstructured data. So within the space of adverse media, we know news travels really fast. So this is where AI or machine learning plays a key role. We'll use the current situation, a very unfortunate one, which is the Russia and Ukraine. Mm-hmm. So well before the war, there's a lot of news that's been published say that, oh, there's a likelihood that the war will happen. Now, if you have a tool at that point of time, which also we tested, you were able to certify, bring forward the hidden risk, indirect risk, throughout your direct client, your ownership, your shareholding, and potentially also through the transactional side. If you then overlay this data with the credit team, you're not going to just cover your financial crime risk. You cover your credit risk as well. You'll be able to know what's the upcoming transaction pattern based on this data that you have. So the concept of what I have is very aligned to what Moody's is portraying as well. We need to have a more comprehensive approach into situations like this, that we need to broaden our horizon a little bit more from the financial crime perspective, because it leads and is very intrinsically linked throughout the entire customer journey. So hopefully I provide a bit of context.
Okay. And I'm myself also a believer that it is all about the customer at the end, and we're on an ambition to fight crime. And sometimes I wonder, a situation I got to know myself, with AI, we managed to get a clustered bit of information, and we brought it forward to the first line, which they said, congratulations, but what will you do about it? And we didn't know, because it was a clustered information. So we went as far as going to the regulator, and they showed the RegTech Black Book. Can you imagine? They said, you know the rules, so you solve it, you're the principal. So I think there is an eccentric discussion that's ongoing, and we'd have to try to solve that as RegTech, as a global, or maybe subtech. Another question I got from the audience, and I'd like to ask that to you, Kevin. Do you get the question of your clients that, because you have a platform, you use different underlying vendors, do you see a trend that the financial institutions wants to have multiple vendors to be really covering?
Yeah, so I think this is a simple answer to a complex question that Ellie outlined, which is, it is a complex problem. And with the vendor hat on, there are no silver bullets, right? So what we see is, and what we see clients asking for is vendors that have interoperable systems, that have a degree of empathy with each other, that are willing to cooperate. We all specialize in doing certain things really well, right? So an ideal solution for a client, especially a high complexity client, is one where best of breed vendors come together. That's another operational challenge on top of the internal operational challenges that firms have, getting vendors to kind of cooperate. How do you test that when you talk to a vendor? What's your API strategy? Who do you have as vendors? What do you specialize in? What do you acknowledge you don't specialize in? As opposed to saying, yes, I do everything and try and win as much of the pie as you can, right? So clearly there's a degree of rationalization, because the procurement people want to deal with as few vendors as possible, and that's understandable. But there's also specialization and the creation of IP that's deep and meaningful, right? So we do get asked that question, and there are partners that we work with quite closely, and we're happy to point out what we do, and we're happy to point out what we don't do, and acknowledge that.
So is there a need for somebody that does the orchestra between all the different vendors? Does that mean is this potentially a space for regulators to step in?
So regulators love auditing technology from the outside, but they're not technologists internally, right? But what they do what they are helpful in doing is fostering collaboration, right? So from a Finergo standpoint, we solve that orchestration problem, and we do pieces of the pie or the puzzle. We don't solve every problem. We're quite happy to work with others to offer a joint solution to a client. It would be interesting, though, to see how regulators evolve their thinking. They are certainly open to RegTech initiatives and innovations, and speaking to that audience question of how do you ensure that when you deploy some AI or ML, you don't arrive at an incorrect decision and burn yourself from a regulatory standpoint. It's pretty clear, like the FCA, MAS in Singapore, and others are now a lot more open, saying to firms you should, experiment within safe bounds, and to bring the result of that innovation back into your mainstream process.
I agree, and you give some good examples. I think FCA is a really good example with their sandbox, and MIS with the fact that they have a golden record around KYC. Elia, I was wondering, in the bank, do you also feel a difference in the stance of the regulator towards this question that we have?
I think it's still, relatively speaking, early days. I think some of these technologies need to be proven for the regulator to really feel comfortable with them. And I think, to the point Kevin was making, that the space for collaboration is not so much in the development of technology, but in what it results in. And particularly when we start to consider the ethics and broader societal implications of applying AI and machine learning, making sure that there are strong controls around how those algorithms operate, that they're tested, that we're not resulting in inadvertent discrimination or prejudice being built into systems, that we're not inadvertently creating situations that are open to exploitation by bad actors. I think those are the questions that regulators will rightly have, as we do actually. So I think there is a need for cooperation and sharing of experience in a constructive way between technology vendors, financial institutions and regulators, so that we don't end up with some of the problems that we've seen in history, where people have built complex solutions that nobody really understood, everyone was too frightened to say, and then bad things happened. And the only way we will avoid that is by working in a constructive and collaborative way with all those parties.
Yeah, it takes three to tango, right?
Yes, in this
It's the bank, the
situation,
regulator, and the fintech.
It's a weird tango, but yes.
Yeah. Oh yeah, 3 legs. Well, not sure how that goes. Barbara, since you sorry to come always back on the crypto part, but that makes it just very interesting. You're here in the panel. You're on the verge of innovation in terms of monetary systems. So do you see a different type of collaboration, or do you see other opportunities that could be taken into place?
Yes, certainly. That's very much linked to the transparency of blockchain and the fact that assets which are identified as illicit ones, once we record them somehow, either in our blockchain analytics tool or anywhere as illicit, you can trace the whole history of those assets. So the way I like to compare it to the banking side, in the banking side, I've got Bank A and Bank B, Bank C. When Bank A receives assets, your assets, let's say your funds from Bank B, I only see where they came from. I don't see the whole history of those assets. In the blockchain space, with the right tools, I see the whole history since those assets were created. So there's a lot of opportunities for information exchange. And I think I've been chatting to some people there in the networking that I've got that utopian vision, which is absolutely not commercially viable, of all the companies in the blockchain crypto industry actually sharing the information that we have, because that would be incredibly, we would be able to actually have the full transparency. Not commercially viable, but there are opportunities to share the information between us and the regulators and the FIUs, and this is happening. It's been actually very vivid with the current situation now in Ukraine, and with targeting specific, let's say, events in the crypto space linked to the sanctions, where through the cooperation with the right authorities, we're actually able to, share the information that we have, and through the transparency of blockchain, block certain assets from moving. So yes, cooperation definitely. We'll just have to find a way as an industry to do it in the commercially viable way.
So talking about collaboration, collaboration is the future. Kevin, what's the future for you in KYC land?
So actually, one of the interesting KYC use cases that came up today in a conversation is, so there's conventional things you do in KYC, like screen entities against lists and check for status changes with entity data. One of the interesting challenges is sharing data within a large internationally dispersed organization or across organizations around bad actors, and to what extent data privacy laws prevent or stop you from doing that, right? So even though there are moves around data sharing and fostering data sharing around actors or bad actors, achieving that without actually exposing all of our data to some central pool is a bit of a challenge. So there are novel solutions out there around weird things like holomorphic encryption to say, look, have you dealt with this entity before? And neither of us know they're asking the same question. So I think the intent is there, but some of the enabling technology still isn't. And it's another issue that needs to be worked through between the firms, the vendors, and the regulators to figure out a data sharing methodology that actually works. I mean, there are good examples. So in the Netherlands, they're sharing, they have built an AML transaction monitoring system that crosses institutions, and they're rolling that out. That took a lot of political will and nurturing just in one jurisdiction. you imagine trying to replay that on a kind of a global basis, which is what Barbara was saying. If you could do that across the blockchain, you could detect a lot of criminality, right? Yeah. And the issue is data sharing does get in the way, and criminal actors know that those data sharing boundaries are there, and clearly locate their assets in places that are impenetrable.
Mm-hmm. Any other opinions about the future of KYC?
Can I just share my views? I've got about 3 points. So I think first thing is, Barbara touched on it, I think every panel talks on it, it's about the integrated risk. You know, you just don't look at risk in one perspective. If you look at the financial crime risk, it's actually the risk from KYC, onboarding, financial crime. You might need to start thinking about the ESG risk, supply chain risk. Those are all the other elements that it needs to, part of the calculations that you need to build, part of your risk assessment. So I think that's the future. You don't just look into one perspective. So when you have this information, it would enable you to work with your partners better because you're aware of it, and you will show them, say, well, you be transparent to your clients, say, these are the potential risks that you get into, you know, how can we help you with this? And that's where RegTech or banks, they will say that, okay, we know that you've got this problem, so how can we partner to make you get over that barrier? Second thing is I think we talk about future, we talk about self-serve. I think the market has changed. There are certainly existing players that still prefer the old school way. You meet the person, you go through a few processes, you like this. But we also could not ignore there's a younger mindset, the younger clients, that they prefer to do it themselves. Mm-hmm. So, and they will be the dominant in this market in the short future. So this is something that the self-serve plays a key role. So it's something that needs to be in the traditional player, the new players, the fintech. Something needs to worry about how do we empower self-serve.
So we come back to the user experience in a way.
Exactly, which is the third point. So speed to market, again, a topic very closely to user experience or customer experience. So COVID, to an extent, plays a key role in here. So they speed up the digitalizations of the process. Now, it also raises expectation of the clients. So in the past, I don't think that it's fair to say they can accept, but they have to go through a few days, a few weeks to get onboarded. Either they sign up for an account, they sign up for certain services, or they do a certain transactions. During COVID, those things has come in, and Challenger Bank comes in and they reduce that to a day, couple of hours in best case scenarios, couple of minutes. So people expectations has gone a lot higher than what it used to be. They would say, you know, common question that they ask that I get heard. If Challenger Bank, they can do it, why not the so-called traditional player? So that is how I felt. And there's a thing that goes along with this speed to market as well. Sometimes the technology could do it. Sometimes the sales process could do it. But if the compliance functions, the KYC, the onboarding, the other compliance functions are not digitized, so you can't do that in a scalable way. You can do a portion of the digitalization to an extent, but when you start to scale, you need all these supporting functions to be also on this digital journey. So that's my view.
Well, it's another It Takes Three to Tango, I guess. Yeah. Ali, I was wondering, with COVID, I think you rightly say, Chor, that expectations seem to be changed. I mean, we were forced. There was no fidget. There was no human contact anymore. Only digital contact. So I was wondering, do you feel, I know you're in wholesale, but do you feel within the bank that this is actually changed, or is it back to normal?
Well, I think it's a different type of normal, and it just accelerated a change that was happening anyway. So it happened under pressure, and I don't think it will revert back to old ways of conducting business in that sense, because it works. You know, we proved it works, and so I don't believe so.
Do you have anything else to add where the future of KYC and AML is going?
Yeah, so I think the future of KYC, I think, just coming back to something that Chor mentioned, is ESG. We are increasingly involved in HSBC's ESG program, and I think there's a lot of things to be learnt from the experience that many of us on the financial crime side have learnt about implementing risk-based approaches to managing financial crime risk. And there are a lot of analogies with how one might manage the risk associated with ESG, whether that's transition risk, whether it's the risk of greenwashing, and how we start to build this into our existing processes. And again, that will feature in our CDD journey, I believe, in the near future. So ESG is a huge topic for us, and there's a lot we can learn from CDD and take into that experience.
I was even surprised by talking to many of you earlier that in continental Europe, MiFID, as of the 2nd of August, we have to ask the preference of our clients in terms of ESG, and that has a phenomenal impact on the journey. And I always say you bring them to the candy store, but there's no candies for sale. So that's a bit of a tough one.
And there's an impending regulatory element to ESG, which I don't think is really fully landed yet.
Correct.
But that gives us, any organisation, a commercial advantage if you get ahead of that. And so I think that's kind of the key message is, it's coming. You've got the opportunity to adapt existing processes and systems to take the knowledge you've gained from financial crime and apply it in a slightly different field. There's a huge opportunity there.
And it's interesting because we see the very same thing replayed across our client base, especially in the parts of the world that are leading. Not making the same mistakes around poor quality data, driving poor quality outcomes, and work for KYC functions to do, and leveraging existing investments rather than net new, just along the lines you're talking about for collaboration across vendors, because there's a risk assessment, there's a data piece, there's changes to the onboarding piece, there's an investor classification piece, and if you have existing tech, like reaching out to your vendors and understanding what their ESG strategy is, because nobody wants to reinvent the wheel and do it all over again after 15 years of fin crime, right?
I'll just add a line to what Kevin and Leah mentioned, is that during my previous time, ESG has become part of the criteria to assess whether or not you're going to prefer to onboard this client, this particular organization, because does it match your own company ESG agenda? So, ESG has definitely become this. So therefore, we kind of emphasize it from an integrated risk perspective. Do you actually know your client, and how can we work together?
All right, looking at time, we have about 2 minutes left. I believe I have answered all the questions that came from the audience. Thank you very much. And I would like to close off my panel discussion with an opportunity for all of you just to give one really strong tagline to give away to the audience. And I know, Barbara, you get a little bit longer because you were not able to say more about the future of KYC. So the floor is yours.
Okay. Okay, one line. I would say, don't get stuck in unhealthy relationships, and let me explain. So I've been seeing on both sides, again, in banking and in vendors, in RegTech, that sometimes this mindset or attitude, rather, is applied of, oh, I've invested in that solution, in that technology so much, either time or money or both. And even if it's not working, even if it's not meeting your requirements, I've been seeing again and again people and the management and the companies getting, being stuck in that, what I call unhealthy relationship, as in, oh, I don't want to go back, I don't want to change, I don't want to withdraw and roll back all the things that we've done as an organization. And I think I like to look at that as people's relationships as well. Sometimes it's better to get divorced and to move on, and to basically find a vendor or a company that has better solutions. So again, seeing that both from the banking side and from the RegTech side, there's so much competition in the market. There's so much solutions. Let's, as an industry and market players, not stick to one and be open to explore.
Amen. Now for the other three, I'm gonna be tough. It's a one line, fast.
I'd say complex problem, look for solutions that are collaborative.
Thank you.
I'd say KYC onboarding is part of every parcel of the journey of client journey, and onboarding is an experience that your client first experienced with your firm. So let's mitigate it together.
Thank you. Last but not least.
Thank you. When it comes to ESG risk, it's coming. Use everything you've learned from financial crime risk management to help you do a better job.
Thank you so much. I'd like to have a warm applause for all the panelists here, and I think they all deserved a copy of the RegTech book. Thank you very much. Thank you. Thank you. Thank you.
Cohen, Kevin, Alia, Shaw, Barbara, thank you very much indeed for another outstanding panel discussion. It's not nicotine time. Sorry, no, don't smoke. It's caffeine time. For those of you that want it, chance to network again, to carry on our discussions with our panelists, to go to more exhibition stands. We'll be back here after the break. The demos will be over, so we will be back together again. It'll be very much worth coming back for the final sessions, which will be on breaking through data silos to deliver AML compliance, and then we've got a future regulatory reporting panel discussion. So well worth coming back, and we look forward to seeing you in 20 minutes. Ladies and gentlemen, if I can welcome you back, please. I know you don't want to get torn away from your coffees and your networking. There's another opportunity after this session to do some more networking, so you won't want to miss what we have in the final sessions of the day. It's my pleasure now to welcome Deepan Nambiar, who will be giving us a presentation on breaking through data silos to effectively deliver AML compliance. Deepan's a compliance solution expert at Sentinels, which is part of Finergo. He's a financial crime compliance professional with deep practical experience in financial crime, anti-financial crime, KYC, and transaction monitoring. He's got a passion for fintech innovation in the payments industry and is well versed on regulation around the world. So, Deepan, it's my pleasure to welcome you to the stage. Thank you.
Great. Really happy to be here in front of this wonderful crowd. And I'm going from a picture of myself to another picture of myself, because I'd like to start by being a bit selfish and just talk about my background a little bit more, because it's going to provide some more context for the rest of the slides. So I started my career as a due diligence analyst at BNP Paribas. So this was before they implemented Finergo, funnily enough. And this is where I really learned the ins and outs of what it takes to be an analyst. What are the kind of AML systems that I'm dealing with? What are the different processes? How do I escalate? So I really understand that quite well. And from there, I was looking for the next step in my career, maybe something a little bit more. And I joined Banking Circle. If you're not aware of Banking Circle, it is a infrastructure provider bank out of Luxembourg, and all of their clients are other financial institutions. So for Banking Circle, I was essentially doing financial crime audits on prospects and existing clients. And the kind of clients that I got the chance to audit were fintech PSPs across Europe and Asia, starting with some of the biggest billion-dollar unicorns, all the way down to your new fintech startup, which is just setting up a control framework. So this was the real eye-opening role for me, because of course I got to see different maturities of control frameworks being implemented across multiple jurisdictions. And I really, speaking and interviewing the key people in the organization, so the heads of compliance, MLROs, team leaders, all the way down to the analysts, really understood what are the different systems they're using, what the industry is using, in-house solutions, RegTech solutions, what are the common pain points and challenges, and really, got very broad general experience. So after this, I had a bit of an itch to become part of the solution, which is what brings me to, let's just turn it off. Which brings me to the current stage of my journey, which is being part of Sentinels. So if you've not already heard, Sentinels is an AI-driven transaction monitoring platform, which focuses on money laundering, fraud, and screening. And again, we recently got acquired by, we were part of an acquisition where Finergo, we're now part of a Finergo brand. And this is really exciting, because this is really a marriage of two companies with a joint vision. And that is to bring financial crime into a single solution, and also something which can be applied to both banks and fintechs alike. Okay. To quickly walk you through what we're going to be discussing today, we're going to data silos in the fight against financial crime, and how RegTech solutions are poised to solve this issue. And then lastly, we're going to talk about cross-institutional data silos and what we think is the future of fighting financial crime. So let's discuss the state of data at financial institutions currently, and I'll try to draw on my experience as much as I can. I think it's very clear to everyone in the room that banks and non-bank FIs are in a very unique position. They have access to hundreds, if not thousands, of data points on the end users, right? I remember the first time I got one of those budgeting apps, which is powered by open banking. I was really shocked at all the data aggregation and the insights it was providing me. And I think that's really, really cool. Also learned that I was spending too much on takeaways Don't know if anyone can relate. However, many financial institutions are currently struggling to draw valuable insights from this data. Research done by Clarinet on IT and digital decision makers across UK financial institutions found that 53% struggle to draw insights from the data that they have. And a further 43% cite centralizing their customer data as a key challenge, the key challenge rather. And the future could be bleak if you are not digitizing and you're not embracing this digital transformation. I think that's a theme we've heard in pretty much every panel today. A report done by Gartner actually predicts that financial institutions with heritage processes, rigid mindsets, up to 80% of those could be brought down by 2030. And I think that's definitely a bold claim, but you can see how this could play out. All the fines that these financial institutions have gotten recently, the regulators are starting to increase, put out more and more information on why they're getting these fines. So you can see the exact control failures which led to these fines, and a lot of the times it's data related. So things like not gathering adequate information for the client risk assessments, not flagging enough suspicious activity, and things like that. So really, not managing your data silos and your data quality and management could get you in a lot of trouble. And why do these, other than the already mentioned point, why do these data silos represent a challenge when fighting financial crime? So the number one reason is, of course, the complex regulatory landscape coupled with criminal typologies. Criminals are great innovators. I'm sure it pains a lot of us to say that or admit it. But they're constantly looking for new ways. They don't stick to borders, and they certainly don't stick to a certain financial institution. And if you think about it in practical terms, the amount of information that a fraudster needs to commit fraud or financial crime is a lot less than the level of sophistication the FI needs to detect this same activity in their portfolio of hundreds of thousands or millions of customers. So it is a hard job. It's incredibly difficult to do this effectively. And of course, corrective measures are expensive and they take time to implement. Again, budget is a thing that has been brought up a lot today, as well as legacy systems, interdependencies, and so on. The solution might not be as easy as just bringing in a new vendor that solves part of the solution. You're going to have to have a whole digital change transformation kind of project. And lastly, legacy systems and compliance analysts don't get along. I'm sure a lot of you will agree with me, but I think being a compliance analyst is a very high skill ceiling. You're required to have all these different characteristics, such as having attention to detail, being able to think critically, being suspicious of stuff, of course, is a main one. But we're also starting to see more and more roles which have a technical requirement. So being able to do a bit of business analysis or data modeling and things like that. So on top of this, if you add system complexities, so juggling multiple systems, juggling multiple systems and having to deal with data quality and integrity issues, you're simply not going to be as effective, and you're not going to realize your full potential as an analyst. So I would like to give you a very practical example. I'm not saying this is one from my audit days of a company I've audited, but I assure you I've seen very similar situations. So let's think about a day in the life of a compliance analyst at Poor Data Bank Limited. So I've logged in the morning with my shirt and shorts, as we saw from earlier, high likelihood, and I've made my coffee and I'm ready to do some work. So let's say this company has an in-house system which generates email alerts, and the alerts are rule-based. So transactions hit rules, an email alert is generated, and now I have to investigate it. So my first logical step might be to see what are some of the other transactions this client is doing. Who are the other remitters, beneficiaries, where's the money coming and going? So I might log on to my core banking system. Here I can see all the historic transactions. I can scroll through them, but I might be missing some visual representations of this data or just more insights. So that already is one of the first obstacles I face. Let's say next I want to know a bit more about my client. During the onboarding process, what information was collected, what is their registration, incorporation, nature and purpose of business, and so on. So now I'll log into my CRM system, and I'll search up the client, start to look at their details, what was collected at onboarding periodically, and so on. Let's say I also want to know the screening results, and my CRM system only tells me if they're currently screening positive or negative. But if I wanted to see the results, I have to go to my screening solution. So that might be an external solution. I log in there, look at all the results, and see if there's what were the historic results like. A couple more things. I might have an external data repository like CreditSafe or something. I have to go in there, pull some reports, see what information they have on this client. And let's say I also made a RFI, request for information. The client provided me some invoices and proof of shipping, I don't know, for the goods in the transaction. I have to go and save these on the shared drive. Of course, I need the audit trail there, right? I'm sure you're seeing where I'm getting at, right? If you're still paying attention, that's very good. But as an analyst, I'm about to go into the email client and make my escalation to my compliance advisory team. And this is just one alert, and I've navigated 4 or 5 systems. And hopefully you agree that is simply not efficient. I could lose my chain of thought multiple times in this process. So how can RegTech break down these silos and achieve compliance? Sorry. So one of the main approaches or principles that we have to change when we're doing this transformation is going from a transaction-based or a to-do list kind of approach to alerts. Because if you have an alert on its own, sure, you can see some things in there, who is the sender, who is the beneficiary, what is the amount, payment reference details, and so on. But you can't really, you don't really have the context to make a decision of whether this is suspicious or not. So this is where we have to move to a more client-based approach to KYC and monitoring. So generating rich profiles around the clients, building up their transactional history, being able to compare what did they say during the onboarding that they expect to do versus their actual transaction profile. Secondly, separate tools and a siloed approach to risks is going to lead to lots of operational inefficiencies, time, cost, and also the level of analysis your analysts are doing. So this is where RegTech solutions are really well versed. The majority of them use cloud computing, API technology, and something like APIs are key, and they're instrumental here, because this is the technology which essentially lets systems talk to each other. Thirdly, if you have data in silos, its value is underestimated, and you could have very compartmentalized, batch-driven processes. This is not valuable use of the data, and the survey figure I quoted earlier, where people are unhappy with the insights they're getting, is a testament to that. And this is where cloud computing and all of these kind of technologies come in together. So cloud computing is essentially enabling all these processes to occur. So things such as being able to store data online, getting access to networks, databases, all whilst being able to deliver this with a SaaS model, really can accelerate how well and efficiently you can manage your data and data security as well. And then lastly, business rules with a high false positive rate. Again, a very common theme or topic today. This is super important because if you have business rules which aren't tailored to your product, your geographies, your delivery channels, and so on, you're not going to have efficient results. And one of the panelists earlier said, when you're choosing your RegTech vendor, you also need to make sure that they're future-proof. So this is where advanced detection methods come into play. So having explainable AI machine learning models, and if we talk about explainable, I'll put myself to the test here. I'll give you 2 examples. So first will be, rules which are self-sufficient. So, managers are able to monitor their performance. The rules also learn by themselves based on the real human feedback being provided by the analysts to improve the false positive rate. But you can also apply machine learning models. And I don't know if this is a bit risky, but I'm going to give an example of a machine learning model that we deploy at Sentinels. And it's called a local outlier factor model. So what this does is for each data point, so this could be transaction or what IP address you're logging in from, it looks at the standard deviation of that data point compared to its neighbors. And anything which is suspicious is something where the deviation with its neighbors is lower than the rest of the transactions in that group. Is the room still with me? Okay, good. And of course, that's just that's a generic version of the model. But really, you'll start to see results when you do a tailored implementation of this. So let's say you're a crypto company accepting fiat deposits. You can run the same model on a specific peer group of your clients. So let's say 20 to 40-year-olds. And then you're getting real examples of, let's say, if you run this on deposits. So, is it normal for this person to deposit this much? Is this what other people with this kind of age and profile and other data factors that you feed into the model are doing? So what does an ideal solution look like? I think above everything, the best solution would be something that incorporates as much of the KYC, lifecycle management, and transaction monitoring process into one. So if we start all the way from the bottom, when you get your license, you've already designed your policies and procedures at this point. They're, of course, tailored to your business, risks, and so on. That should determine what your onboarding processes look like. So what kind of information are you requesting in your application form? Does this feed into the risk calculation? And the risk calculation, again, should be tailored to what kind of customers you expect to have, what geographies they're going to trade in, and so on. So once you've onboarded a customer and you've assigned them a risk rating, that should then feed into your transaction monitoring system. You should have a tailored approach where you have greater risk, so more high-risk clients, high-risk verticals. That's where you should have enhanced monitoring. So that's the second method in which these systems need to talk. Secondly, once you start to analyze some of these transaction alerts and escalate them, this should really feed back into the KYC process. So I think pretty much most of the main regulators in the EU have said at this point they want to move away from a periodic refresh cycle and be more risk-based, so going more off of triggers and how the customer is behaving. And this is, of course, a vital component of that. But you don't have to reinvent the wheel. So let's say parts of your control framework are already robust, but you're missing something. Let's say either transaction monitoring or your client risk rating is not automated. You're still using Excel. That's also where fintech solutions, RegTech solutions, are well poised to solve this, because they can be implemented on a modular approach. Okay. So lastly, I'd like to discuss cross-institutional data silos and the future of financial crime. You could have the perfect control framework, and you have really tailored monitoring. You're very diligent on who you're onboarding and what you allow them to do. But it's still not going to solve the issue of financial crime, because, as we said earlier, criminals don't stick to borders or single financial institutions. But lucky for us, there are already initiatives like this happening around the world that are trying to solve this issue. So 2 examples I've got on the screen. FinCEN 314B, which is essentially a legal framework for obliged entities, MLROs, and compliance professionals to share suspicious activity, whether it pertains to terrorist financing or money laundering or fraud. But this works on a voluntary basis, and the success so far has been limited. But we also have Transaction Monitoring Netherlands, TMNL, which has also been brought up in the earlier panels. This is a consortium of 5 major Dutch banks the top 3 of which own 80% of the Dutch banking assets. And this is one of the first initiatives in the world which is actually applying transaction monitoring across the shared data set, including advanced techniques like anomaly detection, network analysis, and so on. But again, this technology, is in the early stages. And there's 2 key challenges with such an approach. As commendable as it is, there are still some issues. The first of which being, you have to respect that any major financial institution is going to have some degree of legacy systems that they need to deal with. They're also going to have different data sets because they have different kinds of customers, which presents the first challenge. How do you have a monitoring approach that works for all the banks and produces meaningful results? And the second, I'm not going to go into too much, is GDPR, which of course limits the way in which you share data and also limits what data you share. So this is where we as a company believe the answer lies with RegTechs. Again, we've heard a lot about how forward-thinking the FCA is in the UK with all its initiatives, and it's really supportive of RegTechs and new technologies, but not all the regulators are like that. And I think this is where the expertise of fintechs really comes into play. And just to give you an example of the Sentinels approach, we're definitely dreaming big because we want to solve this, but we're starting small. One of our clients is a leading local payment method aggregator. So all of their customers are also financial institutions, which puts them in a very unique place because they have access to the data sets from multiple financial institutions, their merchants, and also the end users. So for them, we're really trying to put in place cross-institutional monitoring because it's in their best interest to protect their business profitability and, of course, not being facilitating financial crime, for them to have cross-institutional monitoring across their network. So to summarize everything we've seen today or heard today, this is just trying to solve data silos really should be at the forefront of every company's objectives. And if you're a decision maker here or a compliance team lead or head of department, if you haven't done KYC or transaction monitoring in the past few years, maybe just put yourself in the shoes of your analyst today and really reflect on how are their processes, how is their day-to-day, and are they really doing their job, which is to think critically and detect, do the assessments. And with that, I'll see if there's any questions from the audience, or I'll call it a day. Nope? Okay, then thank you. Cheers.
Steve, thank you very much, Steve, for an excellent presentation. Put yourself in your analyst's shoes. That's very good advice for everybody. Final session of the day, the big finale. You'll be pleased that you waited until the end. It's very worthwhile. We are now going on to a final keynote panel discussion, again with some very distinguished panelists. I'm delighted to, first of all, welcome the chair for the panel, who is Rongrong Huo. Hopefully I pronounced that correctly. And Rongrong will be introducing her panelists. Rongrong herself is an executive director and head of the Investment Institute at 91, which is a listed asset management firm. Rongrong's got an awful lot of experience, including 11 years at HSBC Global Banking and Markets in a range of senior roles covering strategy, risk, commercial banking, RMB products, and sustainable finance, to list just a few. So Rongrong, welcome.
That's okay, no problem.
Okay, shall we start?
Yep.
Okay. Sure. Well, first, thank you so much for the organizer for bringing us together. And more importantly, thank you for you guys to staying on because I know you probably had such a long day and hopefully it's a good day. So me, myself, I just arrived from San Francisco, so my day have just started. So whoever wants to stay on, and then I'll be happy to add some jokes. But if anything, I really feel like I'm the grateful one because I have some fantastic experts here. But more importantly, we're hoping to add a bit more color, bit more perspective on the common issues that we all care about. So in my session today, if we may, I'd like to structure it in the following way. First, I would like my guests to introduce themselves a little bit and then explaining why they are here, specifically. But more importantly, in the next 45 minutes, we will be exploring, what are the current issues that prospective experts like them, have been able to overcome or yet to overcome, and what are the role of technologies within the regulatory reporting? And more importantly, where are we going? What does the future of our industry look like? And then hopefully we will be able to take some questions either online or in audience. If that's okay, and we're gonna perhaps start. Okay, so as I said, I'd like them to introduce themselves. So I have George from obviously Credit Suisse. We have Ibrahim from Standard Chartered Bank. And last but not least, we have Marwan from Bank of England. So let's start with you, George. Tell us about who you are, your organization, your key interests, and then we follow.
Thank you. George Maridakis from Credit Suisse. I'm a head of RegTech IT for trade and transaction reporting and development manager of regulatory reporting platforms. I am quite excited to be here because I have a keen interest in RegTech, particularly because it has a number of challenges that RegTech can address, but also because as part of what we're doing is we help provide transparency and stability to the market.
Perfect. Ibrahim.
Yeah, thanks. My name is Ibrahim Gadungu. I'm currently the head of information cybersecurity, looking at policy regulation and how we align that within our organization. So I come from an organization. Standard Chartered has more than sort of 50, 60 countries where we have quite a lot of issuers, different regulators, both financial and non-financial. And I think I'm here today just to share experiences on some of the challenges that a global bank has on that, inconsistencies in the way the regulators sort of look at the expectations from a bank like ourselves and how we respond to that. But also share experiences about my role and how we've been able to automate within this space of regulatory reporting in cybersecurity specifically. Yeah.
Perfect.
Cool. So yeah, I'm Melvin. I work at the Bank of England, and essentially my job is to drive forward innovation at the regulator. In my spare time, I actually teach RegTech at Cambridge University, and I'm really excited to be here and talk about RegTech and how it's advancing forward in the world.
Perfect. So let's start with the regulator. So you see a lot, horizontally and vertically. So what are the key challenges that you think facing our industry, especially the data-related challenges?
Yeah, so that's a great question. So I think key challenges that we all share is legacy systems, number one. We did some studies, and you can go away and look at the Deloitte research on this, but a lot of legacy systems go back to the Ronald Reagan and the Margaret Thatcher era. So having those systems in place in the financial industry and trying to implement RegTech and AI can be a big challenge. The second challenge I will have to say is spying from the top. So often you may have senior leaders who, still think of data as something that's done by a couple of guys in the back room. And the world has moved on now, right? And it's very important for senior leaders to not only implement a data strategy, but also drive it forward and get behind it. And that's another key challenge that we've seen across the financial industry, where it's not every institution has data as a priority or the core strategic plans going forward.
Thank you. I think I like your comments on driving forward, and we will explore a bit more in this panel. So Ibrahim, as a user, also a provider or reporter, how do you think banks are reacting to all these challenges or the requests coming out from everywhere?
Yeah, I think for us, given that we have quite a big landscape, so one of the bigger challenges is just the data points and how those are reflected consistently to regulators, because you might have the same question that is asked in Asia or the US or Africa, but how people respond to that really differs from the sort of regulatory relationship as well as the context to which the regulator wants that to be submitted. So I think from a system perspective, I think the opportunities there for those kinds of challenges is really to bring in a consistent approach that is used across. So for example, for myself, Standard Chartered currently has accelerator labs where those kind of challenges can be brought into, so that people talk about sort of new automation ideas that can be invested in by the business, and then just look at how some of that can be addressed, I guess, just to fix some of those challenges.
Thank you. Let's move to another bank. So given the complexity of the challenges, especially around data, so what sort of approaches or role that can, things like data lineage, data mapping can play in this setup?
Yeah, great question. So as you said, in reg reporting on RegTech, there is quite a bit of complexity. It's a data-rich enterprise. And with that comes as well risk. And the risk arises on how do we handle the complexity of the intrinsic data that we have to either report or we have to handle and so on. And there are the key areas of focus are, for example, where the data originates from, and there can be a number of sources within an institution, down to going to the regulator, and it passes through a number of phases and various other systems. During the transition from one system to another, the specific field, for example, might be changing, and that adds more to the complexity. And it may, if you can think of a change, let's say a regulator comes in and says, well, here's a new requirement. It means that a number of players in this chain have to look at how the data is transformed and what impacts it has. And to your point, this is where data lineage, data mapping come into picture, because they help provide a sequencing, a flow of how data gets transformed from one system to another.
Can I interrupt you on that? So it's really important that we understand the journey, but how can we ensure the quality and integrity of data is as best as it could at the very beginning?
Yeah, so it's one of the biggest challenges there, and I think having this depicted in the first instance using data mapping tooling or going through an exercise of doing a read across on the systems that institutions have and so on will help over time build the quality. It may not be perfect at the beginning, certainly when an institution starts transitioning from having nothing, Excels or otherwise, going to a more systematic approach on how they look at how data is transitioned, that quality gets built. And over time, I guess the target state would be that you would have an end-to-end mapping of how data gets transformed. So when a change comes in, we would know in terms of what systems have to change, and in terms of quality, when it comes to testing, or whether the data is good as it goes through in real time, whether there is an issue or not.
Okay, so Ibrahim, what sort of technologies that the banks are embracing to solve challenges like the integrity, quality, the transformation, the journey?
Yeah, I think for us, we've sort of taken two approaches. One on robotic process sort of automation and technology, where we use things like machine learning, natural language processing, as well as looking at semantic analysis to really query a whole set of pre-agreed responses to some very standard questions. So what we usually see is that a lot of the questions specifically within cybersecurity relate to how a policy has been set, and a policy doesn't change within a year. And a lot of the regulators who want to know what we've set will come in and ask the same question. About 70% of those questions will be quite similar. Right. So what we've done on our side is just try and look at similarities of what regulators are asking, and then prepare certain responses that people can query, just like a Google search. Then those now can go into sort of accelerated reporting for some of our teams. And then on the second side is sort of process mining, because from a technology perspective, banks usually take on those processes, put them within, automate them, but there are various sort of let's say, considerations that have to be made. How critical is the system? What's the intention of that system in terms of the use? And what's the interest of the regulator in the question that they're asking? So we also have picked up sort of that sampling of more critical systems and created a database where some of the questions can be answered quite quickly as a result of that, by mapping sort of domain owners to those kind of systems, whether information systems, information owners, and then creating those responses for them in advance so that they can provide that quickly to the regulator when they're asked.
Right. So is everything done in-house, or do you have a hybrid model with a third-party provider?
Yeah, so initially we actually put out some requirements, because we actually went and presented this initiative to our management as one of the innovation points. And we invited more than 30, 40 different vendors. But unfortunately, we did not really get what we wanted. So I think the way vendors are responding to this question is that I think they're looking at the macro, and yet when it comes to what the regulator needs, is actually quite the details. When it's the how you treat the risk, how it relates to your system, how it relates to your processes, your people, and it needs to go down to that level where you look at the rules from the regulators to the standards, the controls, the libraries that you have within the organization. And that's the bit which I think was missing. Looking forward, I think that's a big opportunity for vendors who are coming into that space, because there aren't too many solutions that are solving that problem at the moment, because it is a challenging problem. I think it's very large organizations like Google, Microsoft are the ones who built AI models that can encompass that kind of different sort of scenarios and present you with results that you can quickly refer to and are quality.
Yeah. For any vendors in the audience, I hope you just captured the important thing, because often, when they pitch business, they forget about the problem they're trying to solve. And Ibrahim have just very nicely articulated the issues. So anyway, so moving on to the regulator again, Marwan. So new technologies would require, a new way of thinking. Yep. And the people often, I'm not talking about expert you guys, but people perhaps outside the room or on the street, get confused about fintech and regulatory tech. So how does a regulator like Bank of England promote the quality and diversity, between these two very important theme or concept?
Yeah, no, that's a great question. And I think we step back and look at our own organizations. When we look at the people who work in fintech and RegTech, you might begin to notice that generally they're male, and generally they may come from a certain group of universities. And you start to form this picture of a particular type of person. So what we did at the Bank of England is that we hosted that Turing Institute, who came in and did some research into diversity when it comes to fintech and RegTech. And it's not just in the bank, but as an industry as a whole, we need to do more. So what we did is we actually created an innovation campaign aimed at attracting people who don't usually typically apply to come work in fintech and RegTech. So we removed academic barriers. So in the application process, we said, look, if you apply to this campaign, we're not going to be even asking you what you study. We're not even going to be asking you grades, because creativity is something that is needed to drive innovation, right? Academic grades don't always give us the best person who's the most creative. Another thing we did, we also removed work experience. We said, look, a lot of people sometimes might get a leg up in getting these jobs because they might have worked in a fintech startup, or they might have this experience. And it cannot be fair. So if you think of that girl growing up in a council estate in Manchester, or if you think about somebody who may have a disability, you know, growing up in Edinburgh, far away, who thinks, you know, I'm never going to go to the Bank of England, I'm never going to go to JP Morgan or big companies to work for. That's the people who we're targeting. So we wrote this campaign and it closed earlier this year, and we had a fantastic response. We had applicants coming in, not just from outside of London and South East, but we had applicants coming in from Wales, Scotland, and Northern Ireland. It was such a hit that we not only were able to secure many candidates, and by the way, most of them turned out to be women, which was great for us, because had we done it the usual way, we're more than certain it would have been a male cohort like it typically is within the industry. But apart from the fact that most of the winners were actually female, what ended up happening is that this was recognized by the industry, and the Financial Times recently nominated us for a diversity award because of the way that we've been going out there to the UK to attract talent that does usually come to this area. So I would strongly recommend for institutions here listening today to go out your way to try and attract new creative minds into the industry.
Perfect. I'm feeling good about adding a little bit color to the diversity. But of course, diversity is much deeper than being a girl. So we need to really think deeply about that. But anyway, so thanks for adding some confidence here. Before we move on to the future in terms of where we are going as an industry, I just want to check with my guests, are there any issues that we really struggle still at now? And then, you know, what sort of things we want to share with the audience? So I'll start with you, George.
So I think certainly one of the challenges is that regulations change very often, and that poses to some extent a stretch to institutions and organizations on how they can look at ensuring that they keep up with the regulatory landscape. And that is, especially from my perspective, coming from the technology background, it means that platforms need to be up to date, they need to be agile, they need to have the right setup so that it can help the business and institutions to sort of quickly adapt to challenges like this.
So you think the challenges are more like on the softer side, right? So the ability to respond, the ability to kind of keep the platform in shape?
I think it's more around ensuring that there is a streamlined approach from the regulatory change requirement down to rollout to production, like making it one stream that doesn't have any blockers, and ensures that the time to market is reduced so that it can any organization can respond very, very quickly.
Okay, cool, thanks. Abraham?
Yeah, I think for us it's, you know, different regions have regulated things like AI a bit more strenuously. So I think in Asia, for example, we can't really use AI for certain use cases. So for example, the regulator there is looking at whether why it should not, actually that it should not be used to process personal data, and that any use case that has to be applied within the organization does not touch any kind of that data because it is protected data.
Yes.
So I think that's something that we've applied through our architecture councils, just making sure that somebody asks those questions, checks that between first line and second line, and those approvals are applied before any sort of technology is approved for deployment. But I think also from a wider reporting perspective, this, you know, inconsistencies in the way people respond, or maybe even the risk of misrepresentation of responses sometimes is a human element error that still exists. And the opportunity there, I think, for RegTech is really to remove that. Because when you have a model that is repeatable, that is applied quite consistently through automation, then you remove that sort of human error that can exist there. However, just back to sort of what my colleague was saying, Melvin, around the people, I think interpretation of regulation is quite is a big skill set that is required still within the industry. There are not too many people who can do that consistently. I think for us, we go out for people who have like an audit background or a very sort of clear risk management background, so that is mitigated. Because that's something that you cannot replace with technology. You still need a human brain to sit behind a machine and actually go through the data and take a decision on the risk.
Yeah, we'll come back to the people part, but I think the human element is very important. So Marvin, are there anything that, we will talk about the future in a second, are there anything that you feel like still yet to overcome for the industry?
Yeah, I mean, just listen to Ibrahim and George here. It's very interesting how this all links back to digital skills, right? Because we all work in financial service industry, and there's a lot of money right now being pumped into RegTech, but RegTech is often, I always like to say, often as good as the people who are behind it, who are there to use it. So we were all given a blank check to go out and buy the best AI, the best RegTech solutions available in the market. It's only going to be as good as the people who are there at the other end being able to use and adopt it. So digital skills, I think, is also a challenge across organizations. We also have to get behind to make sure that we upskill our staff, but also be able to bring in new staff and retain them as well.
Thank you. Well, while we have you, you touched on a little bit already. So I know that you're quite active in public, and then you recently published a piece on the Handbook of Financial Services in terms of the future of RegTech. So how do you see the industry evolving and going?
Yeah, that's very interesting. So I'm sure everybody has heard today about how RegTech is a $1 billion industry, right? We saw in 2020, like I think it was like over 8.3 billion was spent on RegTech deals, and it hasn't slowed down for the pandemic. But something that I think will be happening in the RegTech industry that's perhaps not talked about often is EdTech. So if you think back 5-10 years ago, if you wanted to teach your employees about fintech and RegTech, you couldn't do it. There wasn't a course you could go in and be like, you know, I want to study fintech, I want to learn RegTech. But now we see universities like the likes of Oxford and Cambridge implementing these courses as very recently as just last year, a few months ago. So I think the future will see a lot more institutions in the academic side come into this space and begin to offering these courses out, because it is a growing industry.
Right. Okay, so that integration part is very important.
Yeah, of course.
Yeah. So back to you, Ibrahim. You talk about the importance of having the right people. So some of the people are not ready in terms of straight away adding value per se, and they are probably embedded in internal, looking for a career change. They might be out there in the audience or somewhere else. So how do you kind of capture them, but also have the decency to invest in them so they can be sustainable for banks like yours or others?
Yeah, it's quite an interesting question, because one of my team members was actually a winner of one competition that we drew inside our company called the Talent Marketplace. So this is open to any person, and this is an idea that any bank or any institution can take, where you launch sort of a portal where people can put in their talent, even if they don't work on technology at all, but they're people who are passionate about creation of new ideas and technology. And then they're partnered with business people who are looking for somebody who can run with that sort of creation journey. So for him, he's quite passionate about desktop tools, because I think a lot of this kind of space works with end user sort of tools that are initially created. Then that becomes a bigger solution, and the use case is grown a little bit, so that when more investment is made, then that becomes an enterprise solution. So I think just finding talent within the organization, if it's big enough, I think it's something, an opportunity that can be tapped quickly. And then the other bit, I think, from an external perspective, is participating in hackathons, because I know there are a lot of sort of accelerators who invite people to come in and design solutions and showcase those solutions, so that either they can be bought by a technology provider. And I think a lot of the fintech providers at the moment some of them have been bought by large organizations as a result of those kinds of initiatives within the industry.
Right, and Ibrahim is a successful transformation himself, right? Coming from a Big Four firm.
Yes.
So, and now adding huge value to the bank. So that just goes to show that career is evolving all the time. So back to you, George. We talk about the future. We talk about the integration. So from a bank's point of view, how do you think where we're going? And how can we embrace all these changes, whether it's technology, people, etc.?
Yeah. Looking at it from the technology perspective, starting from that, I think it was mentioned quite a few times in today's session, is adopting technology like AI, ML, neural networks, NLP. And the reason for that is because we're looking at the challenges that I mentioned earlier on around data, for example, and the complexity, is try to understand where there is, for example, an anomaly, or trying to work out how a regulation might be changing things, but given the complexity and the size, sheer volume of data that we have to deal with, looking at automating this in a way that if there is a problem, it's anomaly detection, or if there is a change that it may be so subtle that we may not pick it up, there is a mechanism there, the technology that can help us seamlessly get that. And going back to my point that I mentioned earlier on about that seamless process, I think the industry in general is moving towards that, on ensuring that there is that automation end-to-end. Now that's I know it's a big buzzword, but it's something that we're industry-wide we're tending to have an end-to-end solution in an automated fashion that will bring from the regulator perspective requirements down to a system that operates in production and reports or otherwise, and there is a full traceability on how this goes back to a requirement. And then there are, from the people's perspective, I think I agree fully with both Ibrahim and Melvin. I mean, at the end of the day, it's technology is as good as the people that implements. And I think this is where there's a lot of focus from the industry, focusing on skill sets like, as I mentioned, AI, ML, data science in general. Things like DevOps is emerging as a big key theme because it means that it helps with that seamless transformation of data. So like we build it and forget about it. It's like when it runs, we get continuous feedback, we improve things, again, from the data perspective. And then I would say, at least from this is an environment where I was mentioned earlier in one of the sessions that you know what keeps you awake at night. It can be to some extent stressful for market participants in general. So I think trust is there. If you look at soft skills like having empathy is one key thing here. If anything, because it also helps with the collaboration and also putting that trust into the people that build the systems to make this a future-proof solution.
Perfect. That's very well said. So I'm going to ask my guests to think about the final messages that each and one of them want to leave with us today. But I'm now inviting you guys to ask questions if you're still awake out there. And then thanks for putting up with my left side on this side, because it's not really a good side of mine. But anyway, feel free to ask questions. Okay, so gentleman over there. Please do say your name and your organization. If that's
sure. Hussein Abdullah, I'm with Deloitte. So one of the things that's intriguing to me is in a space like trade and transaction reporting and reg reporting generally, that process is a data consumer. So it doesn't itself produce any meaningful or significant data that is used by the business, but instead it consumes data from various parts of the business, such as static data, client data, reference data, trade data. One of the things that we find very often is that data consistency or data quality across the data sources varies considerably, and that's naturally going to happen. And because the reporting process isn't the owner of that data, how do you then ensure that data consistency and data quality in the future moving forward, and how can RegTech support that? And as a sort of second question, sorry, being a bit cheeky, but to what extent do you feel that in the realm of reg reporting where the rules are fixed and known, to what value does machine learning and AI add? Because typically those applications are in cases where rules are not well defined, but where you do have really well defined rules, is it a bit of a red herring to follow or try and implement machine learning and AI?
Yeah, I mean, they are great questions. Really, I feel for you. I think they are really, really important questions. So who wants to? Yeah, please.
Maybe start. So very, very good points. Starting maybe from the second one, and I think it would link naturally to your first point. Anomaly detection is particularly useful when it comes to analyzing the quality of the data that reports, so linked to your first point. So whilst the rules are there, we know they're not changing. Let's say they're static, although they may change over time, but let's say on a daily basis, we consider them static. When it comes to the data that we have to process for reg reporting, let's say reference data, for example, they have a huge impact on how eligibility is determined. And we're not talking about just a handful of reference data. We're talking about millions sometimes. And this is where using AI/ML can add huge value, because looking at the various permutations that you have like X number, hundreds of fields that you have to analyze. You've got 1,000 rules. You've got millions of records that you have to analyze. And if you put this and you work out the permutations, it goes to an insane number. And this is where AI/ML, for example, or other technologies can help, because it will pinpoint patterns that might be out of the ordinary. And earlier on, there was a very interesting presentation. Usually we say that we're looking at the needle in the haystack, but sometimes we don't know what the needle is. And this is where it becomes interesting, because then how do you look at the unknown unknowns? Again, looking, for example, at unsupervised machine learning can be extremely helpful, looking at this anomalous pattern that can tell you, hey, I looked something out of the ordinary. A user will go back and say, well, okay, that's not a problem, forget about it. Or they will say, oh, I didn't know about it. Let's keep it there as an alert. So that goes hand in hand with quality, because if quality changes, then we have a problem, and a good way to find it is using machine learning.
So come to you, Melvin, because I think they made a very good point about when you guys receive stuff, right? You are not always the owner of the initial.
Yep.
So how do you address that, or thinking about that?
I guess I'm just thinking a few years back when at the Bank of England, we obviously regulate a lot of insurance firms, a lot of banks, but also credit unions. And if I think back to not too long ago, credit unions were sending us paper forms, and they'll literally post it to us, and then we'll have to get the data, then manually type it into a system, and from there try to draw some insights with it. So I think there is still a very long way to go. And just to go back to your question, to your second point about artificial intelligence, maybe perhaps not always being the best thing for RegTech. And by that, what I mean is that like some people see if this solution hasn't got AI, it's not innovative, right? It's not forward thinking. Just to give you a recent example, so social media is growing in prominence now, and it's very important to obviously like look at the ways on how we can regulate the ecosystem. So not so long ago, there was a rumor in WhatsApp that was going around. Someone had sent a message saying, Metrobank is going to go bust. Take out your money right now. And this gained a lot of traction. So the next day, it was picked up in the media, and as you would expect, there was big lines outside Metrobank branches, people lining up to withdraw their money because people believe this to be true. Now, you're thinking, what's this example got to do with not using AI? But what we did at the bank, for instance, we worked with data scientists to implement a dashboard that connected to the Twitter API, which allowed us to then basically track when there was a spike in tweets about particular banks that we supervise. And using that, we were able to make a statement saying, look, this is an official PRA statement. Metrobank is safe. If you bank with them, please continue to do so. As an independent regulator, we're saying that they are safe and that your money is safe with them. And as soon as we did that, the trends on mentions of Metrobank disappeared almost overnight. So I guess the reason I bring this up is because that in itself didn't have any AI or any ML, but it was something very effective to allow us to do our job.
Right. And I think it's really important to think about the base, why we're having regulatory at the first regulatory requirement at the first place. I think we can take one more question if there are any. Otherwise, I'll invite my guests to have a final closing. Thank you. You guys have been so kind. So let's do that. And so start with you again, Melvin. So remind us about why we're having these regulatory requirements again, and what's your plea for the industry going forward?
My plea might come across a bit biased because of how I introduced myself at the start, but I would say if you guys can make sure that when you go back to your individual institutions, making sure that relevant staff who want to get into the space are able to get the right external academic learnings, that's something that will create real quick value in return in the short term and the long term for your organizations.
Thank you. Ibram?
Yeah, I think for myself is just looking forward. I'm looking forward to see more acquisitions within the GRC space or governance risk compliance solutions into RegTech, because at the moment they seem very separate, and large organizations like ourselves really rely on those larger solutions to bring things together. So where you have so many varied systems, it becomes quite challenging to integrate reporting and so on, which is going to be a big challenge. But also from a people perspective, just embracing ideas, investing more in data scientists who have other skill sets as well, whether it's legal interpretation of requirements or cybersecurity, for example, in our case. And just looking at how organizations can invest more in those kinds of skill sets in future. And lastly, innovation hubs and how those can accelerate development within this space, so that private organizations like ourselves can partner with solution providers and actually go to market together, even in some cases, to provide a client solution that is best fit for the industry that we work in.
Perfect. Very good. Judge?
For me, it's, I think where the industry is moving is towards the collaboration between institutions and regulators. I know the Bank of England is running sprints, tech sprints, and as ever, a number of regulators are very interested to sort of engage with financial institutions and vice versa. And that brings a lot of innovation to what Ibrahim mentioned. And as ever, we may, going back to my point around streamlining the end-to-end process, it may mean that in the future, we may use technologies, aside from machine learning and AI, things like blockchain and DLT, to have a direct visibility of how trades and transactions are happening without the need to go through various complex hoops. And again, that's the future. I think federation of data between regulators and institutions might be one of the future areas in this space.
Perfect. Allow me to say a word, and then we'll let you guys have a well-deserved break. So, I mean, it is a very complicated issue, and often we see this topic as somebody else's job or problems. And I think it's important that we think about the collaboration, integration, and innovation in a very, I guess, the future value created way, because this is together we can improve the quality, we can improve the efficiency, and ultimately, as the gentleman's question over there, is creating the value that help our clients, help our users, and then together the whole ecosystem can flourish. And then don't forget, behind all sophisticated technology, there's a human element. We are as strong, as weak as ourselves. So together we'll get there, but if you make mistakes, just correct it and then keep going, learn from the industry players, not to worry about competition too much, because we are entering to a very uncharted world, but together, hopefully, we can add value on this future journey. So first, I want to thank my experts, and I want to thank the organizer, but more importantly, together we are incredibly grateful for people in the room and online. So thank you very much.
Wrong. Gentlemen, thank you for an excellent panel discussion, a fantastic way to almost end the day. It has been a very eventful day. Thank you all for participating. We've had some huge insights throughout the day. I did write a very big list of them, but I'm sure you're really tired, so I'm just going to give you three. ESG, huge growth area. Organisations now need to shape their internal governments by considering ESG and financial crime processes, and the skills learned there should be used to that effect, which is why you should come to the ESG FinTech Forum that we're hosting next year. It's precisely for that reason. Second point, a number of people talked about the need for skilling, and some earlier said there is a need to upskill everyone. Well, that's why you should be signing up for the Professional RegTech Certificate, which I mentioned earlier. And finally, this is not a sales pitch, don't get stuck in unhealthy relationships. divorce and move on to buy to find a better vendor. Well, the better vendors are outside, and you've now got an hour to drink with them and complete your business divorce if that's necessary. But so finally, I'd like to thank you all, the speakers, sponsors, exhibitors, the team that's with the FinTech Global RegTech analysts who put this all together. And we hope to see you very soon. We have dozens of events initiatives coming up, so please join us at those. But before then, please do join us now for some networking drinks and a thank you. Thank you very much.